Morgan Stanley.
Gold's rallied to record highs above 3,000, grabbing all the attention, but it's another metal that's shining much brighter so far this year. Pippa Stevens joins us with the details. Pippa, you always have something to teach me. What do you got today?
Good morning, Courtney. Well, we are talking about copper gaining 23% compared to gold's 15% gain in 2025 as the White House sets its sight on boosting domestic production, with Interior Secretary Doug Burgum saying last week at the CERAWeek conference that the U.S. needs to, quote, mine, baby, mine. Now, the metal could also soon be subject to the same 25% tariffs as steel and aluminum, which has pulled forward some demand. You can clearly see that reflected in the price difference between U.S. COMEX copper and prices on the LME, with the former up almost double. But copper equities have not kept up with the commodities' rise, with Vale, Glencore, Teck, BHP, and Southern Copper all lagging copper itself. Deutsche Bank attributing the divergence to recession fears, acting as an overhang, saying it may limit the extent to which the equities can close the performance gap. Still, two names to watch are Freeport and Rio Tinto, given they're the largest domestic producers and their material could be priced at a premium should tariffs go through. Plus, copper is at the epicenter of the energy transition and instrumental for AI and data centers, meaning that, Courtney, many are forecasting a deficit by next decade.
Great stuff, Pippa. Thank you very much. All good points. We're going to stick with the alt asset trade here, and what's been a very rough ride for Ethereum since President Trump's election win back in November. Prices off more than 20% since then, and more than 50% from their 52-week high. Similar moves across the crypto space over the same time, despite, some short-lived pops. And investors' patience also getting shorter. According to Bloomberg, investors pulled a record $5.5 billion from the spot Bitcoin ETF market over the past 5 weeks. And now the streak may be turning sour too. Joining me now is noted Bitcoin bull Jeff Kendrick. He's head of crypto strategy and emerging market FX at Standard Chartered. Jeff, we call you a noted bull, but here you are making a move that is sort of anything but. What are you thinking about Ethereum?
Absolutely. So I think that investors now understand Bitcoin to a degree. Yeah. So I've come on the program a few times talking about Bitcoin. It's kind of like digital gold. Yeah. So relatively simple story. Ethereum, by contrast, is much more complicated. It's a form of technology. I like to explain it as if you think about in your iPhone, the iOS system in your iPhone, that's kind of what Ethereum's doing. And then other things, applications can be built on top of that. Now, in terms of Ethereum's tech stack, again, it's much more complex in the Web3 space than the iOS example. And to get to scale, Ethereum Foundation has had to come up with a few relatively novel solutions over the last few years. And the route they've gone down is to have a second layer, not surprisingly, called layer 2 solutions. So that there's a few second layer tech stacks on top, and they create scalability. Now, you can view that one of two ways. I have been viewing that constructively, thinking, well, over time, that means fees on Ethereum can remain low, so it remains competitive against its competitors like Solana, for example. Yeah? And so prices in terms of transacting on Ethereum have come a lot lower because of the layer 2 solutions in the last couple of years. So that's a good thing, inverted brackets. But the cost of that is that fees, which would have gone to the Ethereum mainnet, have been going to layer 2s. And specifically, since a large upgrade last March, a lot of the profits, if you like, are being taken by those layer 2 solutions. Now, that could be okay in the medium term because sustainability is, again, boosted on lower fees, etc.
Right.
But for now, and what looks like quite a long time, all those profits are being taken off-chain. And Base is the largest layer 2. They're owned by Coinbase, and 80% of all revenue that goes through Base now gets paid through to Coinbase specifically. So a complicated story where the value is being taken away, if you like, from the Ethereum blockchain.
It is very interesting and a bit complicated. And of course, we're talking here about the digital assets, the digital currency directly. How do some of these new ETFs play into your theory?
So the ETF story for Ethereum wasn't as constructive as it has been for Bitcoin. So in Bitcoin, we got to about $40 billion of inflows was the high. Ethereum's ETF started in the summer last year. A relatively unusual time for ETFs to be launched, and up until the Trump election victory, really there were almost no inflows at all. Since then, you did see some inflows into the ETFs post Trump's election victory. So that's a somewhat positive story,
Okay.
but they have significantly underperformed again those Bitcoin inflows. So for me, the key point here is that Ethereum, which has been underperforming Bitcoin for the past several months, is probably likely to continue to do so. I think in the next couple of years we go to all-time lows on that cross.
Wow. Yeah, and you're obviously taking a price target down pretty substantially from 10,000 to 4,000. Jeff Kendrick, interesting stuff. We'll watch it closely, especially with this administration in Washington. Jeff Kendrick, thanks for joining us. Be sure to read more of Jeff's take on Ether at cnbc.com/pro. Well, coming up, the energy play, that's our next guest's top stock pick and why she thinks it could retest recent highs. We'll be right back with that.
Now.
As we close in on the 6 a.m. hour, I check on a few stories that we're tracking this morning, including developments in the Middle East. Israel launching overnight strikes into Gaza, killing hundreds and threatening to compromise an already fragile truce with Hamas. President Trump expected to hold a phone call with Russian President Vladimir Putin today. The president confirming on Truth Social the call will focus on the war in Ukraine. President Trump nominating Federal Reserve Governor Michelle Bowman to serve as the central bank's next vice chair of supervision. Alphabet is reportedly in talks by cybersecurity firm Wiz for $33 billion after its original talks were called off last summer. The deal, expected to be announced as soon as today, would be Alphabet's largest to date. And Hong Kong listed shares of BYD surging to an all-time high after the EV maker unveiled a new lineup of cars it says can charge to 100% in the same amount of time it takes to fill up a traditional gas tank. The new cars go on sale in China next month. Check on BYD competitors, including NIO, Li Auto, and Tesla. Tesla shares under pressure. Others are higher, perhaps in sympathy. NIO up by almost 6%. Well, stocks coming off a two-session win streak. Investors turning their attention to the start of the Fed's policy meeting tomorrow. New data out from Bank of America this morning showing investors slashed their exposure to U.S. equities by the most on record this month. A key factor, according to B of A, concerns over stagflation, trade wars, and the end of U.S. exceptionalism, creating a, quote, bull crash in sentiment. For more on the trading day ahead, let's bring in Victoria Green, founding partner and chief investment officer at G Squared Private Wealth, also a CNBC contributor. Victoria, it's great to see you. I'm sorry to start out with such a dire note and talking about a bull crash in sentiment, but if you have a strong stomach, I understand there are opportunities to be had. Set us up for the day ahead. We know we're going to hear from NVIDIA, but also the Fed. What should we be expecting and watching as investors today?
Sure, I think housing's huge data today. Are we ever going to get out from this housing slump? Are we ever going to see housing prices come down? So I think that's going to be a big data drop. Obviously, all eyes tomorrow on the Fed. What's that dot plot going to look like? I think that's fascinating. You know, you kind of have Bauman up there as the hawk saying no cuts. You've got Goolsbee and Cook at the bottom saying, you know, maybe 100 basis points of cuts. So I think it's a really important, more so tomorrow, with what Powell's going to have to say. I think we're all be shocked if they don't stay status quo and keep rates steady, but we'll be very fascinated what he says. I kind of want my Fed bingo card, right? It's going to be data dependent. They're going to be patient, a wait and see mode. I doubt we're going to see too much, but I'm very curious where they see the risk, how they're weighing, you know, upside, downside risk, as well as where that dot plot looks like, because that's going to be a really, really interesting update.
Yeah, absolutely. I mean, as you're looking overall at the markets, the setup with the macroeconomic environment, word from the Fed, do you think this is a time potentially to get brave, put some money to work, or are you seeing some more chop ahead where maybe it's not quite time to jump in on equities?
Yeah, that's $1 million question, right? We call it buy the dip or beware the bear. Where are we right now? And we're a little bit in no man's land. We tend to think that the bull market's still intact. It definitely bent hard, but then you had two 90% up days. You had some nice kind of rally there to put some more supports in. So right now, I am a little bit of a dip buyer. I think it's going to be choppy. I think without a doubt, it's year 3 of a presidential cycle, which is historically choppy. And if you look out this year, I think your easy money was made in 23 and 24. Going to be a lot more prepared for volatility. You need to not knee jerk around and panic sell, but it's always typically a very good idea to be buying when everybody else is selling. And so when you talk about the B of A data drop saying, hey, we have all these retail sales, sometimes to me that's contrary and bullish. If everybody else is selling because they're panicking, some of that may say, okay, there's some good names getting discounted here for no reason other than we're just seeing a capitulation in sentiment.
It does seem to be a little bit of fear, though, in the market, obviously, with other action that investors are taking. Gold prices, for instance, moving up here a little bit, often looked at as a safety trade. What do you think about moving into sort of safety trades or keeping some money in cash or going to fixed income while we're still seeing rates relatively high?
Sure. We call it the dig trade, right? Dividends, international gold, hedge a little bit, lean into quality, lean into defense. Without a doubt, I think it's good to be a little bit lower beta right now. Have some good quality, boring blue chip names. Nothing wrong with your staples, your health utilities. You know, you're getting some good yield still. You can T-bill and chill. That's not dead. And obviously gold is still running hard, you know, because there is so much uncertainty. And we saw that with the uncertainty spike. You know, the VIX is still pretty subdued and we still didn't get a 90% washout day. So that's why I'm saying I don't think all of this is behind us, because if typically VIX over 30, 90% down days, those are capitulation signs. We didn't necessarily get it, so I could see some more chop. So no problem at all playing a little bit of defense and shoring up and kind of waiting out this ball with a little more safety.
As we're about to run out the clock here, Victoria, I'd love for you to set us up for the day. What is your pick of the day if you had to pick one?
It's Cheniere, man. It's the pure play LNG export. It's a fantastic place to be. They're looking to grow their EBITDA like 17 to 20%.
Yep.
And I think it's something you should hold in this environment.
All right, LNG, that's from Victoria Green, setting us up for the day ahead as we have a mixed look at futures. Squawk Box starts right now.
Good morning. The Fed goes to work today, weighing interest rates in the economy. The central bank will begin its latest policy meeting with a decision tomorrow. President Trump set to hold a high-stakes call on the war in Ukraine with Russian President Vladimir Putin. Trump looking to secure at least a 1-month ceasefire. And finally, 2 American astronauts are on their way home from the International Space Station after an unexpected 9-month stay. Splashdown is targeted for tonight, or at least early evening. It's Tuesday, March 18th, 2025, and Squawk Box begins.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan. Andrew is off today. Let's take a look at what's been happening with the U.S. equity futures. At this point, mixed picture. Dow futures are up slightly, S&P futures down slightly, the NASDAQ off by about 40 points, but it does come after all of the major averages. We're up for the second day in a row yesterday. We saw some gains and some positivity looking at things. I guess we're waiting to hear what happens with the Fed meeting. That's going to be the next real catalyst for things in the market. But the Treasury market right now, the 10-year is at 4.31. The 2-year is at 4.04%. And that Fed meeting starts today. We have the decision that comes tomorrow.
Yeah, I guess when it was all said and done, we liked the retail sales number, or somebody did. Pretty good.
There were some good base core numbers that were inside of it.
And the market didn't close on its highs by any stretch. It was up over 500 for a while. The Dow closed up 350, but the S&P managed to gain 36 points, so it was down 9% from the highs.
It was a gain of 0.6%.
So now 8.4%. We don't have to do it new every time. Yeah, we can. And the Nasdaq was weak throughout the session, but finally did manage to close positively. But it was off its best levels too. But I don't know.
Most pressure from the NASDAQ was with NVIDIA, the conference that they have too.
We're in the, we're in that netherworld of maybe we're in a correction that gets worse than a correction, or maybe it's already over. Just like the retail sales number, we'll know after we see what happens. News from Frontier Airlines CEO Barry Biffle announcing that the carrier will begin offering customers a free checked bag, free assigned seats, and free tickets. No, wait a minute, free ticket changes. This comes less than a week after Southwest said it would start charging for bags. Biffle says in his words, we want the Southwest customer to become our customers. The press release just out says Frontier Airlines is ready to be your new love. And you know that.
Got a ticker symbol?
Yeah, because it's in Dallas's Love Airport. Don't miss an exclusive interview with Barry Biffle at 8:20 a.m. Eastern Time this morning.
That stock down 15% for the 1 year. That's an interesting move to go after Southwest, who no one thought would ever actually raise or come in with baggage fees. That was not their brand. That's not what they did. Southwest decided that it was a lot of money that they couldn't leave on the table anymore. So we'll see.
They're the only ones that could do it. They reminded me of when MCI used to be able to do things no one else could do.
Yeah.
And the guy running the place went to jail. But I don't know why. I don't know whether Frontier necessarily. How do you do it if you need to stay competitive? If even Southwest
Get up in bulk, right?
Yeah, Southwest had to throw in the towel. Maybe they do it for a while.
Yeah.
Frontier.
In the meantime, President Trump tapping Republic Airways CEO Brian Bedford to lead the Federal Aviation Administration. In a post on his social network, the president said that Bedford will help strongly reform the FAA. Airlines praised that pick in public statements. Bedford is a pilot and more than a 30-year industry veteran. If confirmed, he will face challenges including a slate of recent fatal airline crashes and a decision on when to allow Boeing to expand production of the 737 MAX.
In the Fed's latest policy meeting set to kick off today, we'll get an interest rate decision from the Federal Open Market Committee tomorrow. Central bankers are widely expected to leave interest rates where they are. Focus recently has been on how many potential rate cuts the Fed can make this year. Earlier this month, Chairman Jay Powell said the Fed will likely keep its key interest rate unchanged in the coming months as it waits for some of the uncertainty to resolve. In a related news event, President Trump announcing on Truth Social that he's nominated Fed Governor Michelle Bowman to be the central bank's new vice chair for supervision, and that is the Fed's top regulatory job.
Israel's military launching a wave of airstrikes across the Gaza Strip early this morning, saying that it was aiming for dozens of Hamas targets. Gaza's health ministry says that the strikes have killed at least 326 people. The Israeli military also ordering people to evacuate eastern Gaza and move towards the center of the territory, which could indicate preparations for renewed ground operations. Israeli Prime Minister Benjamin Netanyahu said he ordered those strikes because of a lack of progress in talks to extend a ceasefire agreement with Hamas that went into effect in January. Israel's defense minister said that the fighting would continue until all hostages that were taken from Israel in Hamas's attack on October 7th, 2023, were released. 59 hostages are still being held by Hamas, though more than half of those are believed dead.
And President Trump, probably know this by now, is going to be speaking about the war in Ukraine today with Vladimir Putin, the Russian president. Trump making that announcement last night on his social network. The president is looking for Putin to accept a 90-day ceasefire in the 3-year-old war. Ukraine has already agreed to a pause in the fighting. In his social media message, President Trump said many details on an agreement have been reached, but more work remains. The Kremlin says that the call will take place between 9 and 11 Eastern time this morning. Hope they have a translator.
Yeah,
Otherwise, what's the point?
it's just so many questions about.
Well, we're going to talk about it actually
Yeah.
in soon.
Yeah, coming up in just a little.
Yeah.
In the meantime, NVIDIA is set to kick off a day 2 of its GPU tech conference in the Bay Area. That big event today is CEO Jensen Huang. He's going to be delivering a keynote address. Investors will be listening closely for updates on the company's pipeline of AI chips. Shares of NVIDIA are down 11% this year to date, but for the 1 year, you can see the stock is up by close to 35%. Big questions about what's happening there, and this will be the event that investors have been waiting for. Don't miss a live interview with Huang. That's coming tomorrow on Squawk on the Street at 10:15 Eastern Time. Then you can see more with Huang on Mad Money with Jim Cramer.
And Google might be ready to take Wiz. Not a Wiz, but to take Wiz. Google parent Alphabet is in advanced talks to buy cybersecurity firm Wiz. No, not the Wiz, if you're from this part of the world, because you know nobody beats the Wiz. But it's about $30 billion. That's according to the Wall Street Journal. I think those commercials, how old are they? Do you remember?
Very old and big.
Are they?
Yeah.
Completed a deal of that size would be Google's largest ever by far. Wiz provides cybersecurity software for cloud computing companies, including Google, which was looking at acquiring a company last summer. We were talking about it because I remember talking about the Wiz back then too, for $23 billion. But Wiz walked away, saying it would pursue an IPO. A deal could put the Trump administration's appetite for antitrust fights to the test. Google is already involved in 2 other high-profile cases, and CNBC has reached out to the company for comment. If you're interested, there's an interesting editorial today in the Wall Street Journal about cleaning up after Lena Khan and how much needs to be to reverse. I mean, one person can do a lot of stuff if you get in.
There are questions if Lena Khan, some of her prevailing thoughts will continue in this new administration.
There were some of them were kind of populist. That's this weird. I don't know what you call this brand of conservatism.
Well, the continuum where J.D. Vance agreed with Lena Khan on some of the areas.
Right.
So,
But I can't imagine that it's not going to change significantly.
well, Wiz walked away from the last deal with Google because apparently they were concerned about being able to get through antitrust considerations on this. So maybe they've looked at this and think that it's a better situation than it was in the past. That's certainly what this indicates.
Well, the first paragraph, will Andrew Ferguson, he's at a crossroads. He's at a fork in the road.
Will he take it?
Will he take it? Whether to continue his predecessor's misadventures, antitrust misadventures. So that's the way it's.
No, this is going to be
Right.
the big question. That was something that.
When we had him on, he said, I'm not just gonna tie things up just to tie things up.
No, but he also said that if you are a company that has made any political statements, he thinks that that is potentially an indication that you have a monopoly, because why else would you potentially alienate 50% of your customer base unless you felt you could do it without any fear of losing, your business.
They quote the CNBC interview here too. Mr. Ferguson won the FTC job by courting the anti-big tech wing of the GPO, and he's been loud in proclaiming that he's not like Reagan-Bush era leaders. But the ambitious chair was right when he told CNBC, if, in his words, I can't win in the court, the FTC needs to get out of the way and let business innovate
Right.
for all Americans.
And Lena Khan didn't have any problems with going to court and losing. She said as much.
That was her whole MO, though.
Right, we'll just
I don't
put a
just-
freeze on things,
Right.
even if we think we're going to
And
lose,
it takes
tie you up in court.
long enough to where that it doesn't
Yeah.
make sense anymore because the market's moved.
Right.
It's not the way to do things. Good riddance.
All right, when we come back, much more on the markets. The S&P 500 coming off of its first back-to-back positive sessions in a month. Also a programming note for you as we head to a break. Don't miss an exclusive interview right here on Squawk Box tomorrow with Bank of America CEO Brian Moynihan. I think Moynihan has been seeing some better consumer results than we've seen from some of the retailers and other places where they saw a slowdown. I don't think those are the numbers that Bank of America is seeing, but he'll tell us all about it tomorrow. It's tomorrow at 8 a.m. Eastern Time. Stay tuned. We will be right back. Welcome back, everybody. The Fed is set to kick off its two-day policy meeting today. It is widely expected to hold rates steady, although investors are going to be paying close attention to what the Fed Chair Jay Powell says at his news conference tomorrow. In the meantime, the futures are a little bit weaker this morning. Dow's off by about 75. S&P futures down by 11. The NASDAQ down by just over 60 points. Joining us right now is John Mowry. He is CIO and Senior Portfolio Manager at NFJ Investment Group. And John, Joe asked this in the last block, but do you think the sell-off at this point has stopped? Do you think there's more to come? Are we going to slide back into correction territory with the S&P 500? What are you thinking?
I mean, a couple things I would say. Near-term things do look oversold. However, I think things are ripe for further volatility. For one, you have tight financial conditions. You have a lot of discussion around tariffs. Some of them have been implemented, some have not. But I think the biggest thing that we are watching are very high valuations, particularly in large cap growth. If you look at where that index is trading, it's higher than it was in 2018 when we had a 25% drawdown peak to trough. It's also in line where it was before we had the sell-off of a 35% drawdown in 2022. So I think valuations with those two elements are something investors should be paying close attention to.
Okay, so maybe not signaling the all clear just yet on any of this. We've been so focused on tariffs and what's the moment-to-moment headline with those things, but you think it's really the technology and the semiconductor sell-off that is something that we should be paying more attention to?
It's been going on for longer than people think. If you look at the SOX index, the semiconductor index, that actually peaked in July, okay, of last year, and it's down on the 1 year. So the semiconductor index has really struggled, and the Nasdaq's down, more than most indexes, down 10%, 11% on the 1 month. If you look at other areas of the market that have been catching a bid, that have been real laggards, such as REITs, which you have names like Prologis, American Tower, 10 and 12% year to date. So I think there's some real interesting areas that are positioned quite well, which have very attractive valuations and should benefit should rates come down.
Why do you think the sell-off there has been so extreme? Is this going back to the considerations with what China came out with earlier this year in AI? Is there something else with questions on the valuation?
Well, I personally think, even though it was kind of pushed to the side, I think the DeepSeek news is a bigger deal that people discuss. And the reason for that, I think, is it lets in the concept that we actually may have a little bit of a crack in the armor, that there may be a tougher time given there's been so much spending with AI and we may not need to be spending as much. And if you pull back some of that spending, it starts to break down how all these models are put together for earnings, and that also is going to cause multiple contractions. So I think that that is something that investors are worried about. And I would argue that if you look at areas that are overseas, for example, particularly in China, that's a market that's done very well this year, not getting a lot of press. The euro now is 109. That continues to weaken or strengthen relative to the dollar. You have very low valuations overseas. I mean, Alibaba's up 75% year to date and is trading at 14 times earnings, and they're an AI play. So I think there's a lot of ways to get exposure to that theme at a much lower multiple. And one other thing I would say, Becky, a lot of people discuss around if Trump would be real hard on China, but I would remind investors the last time Trump was in office, the Chinese index was up 100%, beating the S&P 500 over his 4-year term.
Yeah, and in fact, President Trump has been hinting that there's going to be a meeting with President Xi coming maybe as soon as June or even earlier.
Yes, and I would argue that even though that Mexico and Canada are very important trade partners to the U.S., if you look at their contribution to global GDP, it's around 2%. China makes up around 1/5. The U.S. makes around 25%. Okay, so it is in the best interest for global prosperity for China and the U.S., the two largest economies in the world, to work together and find some agreement. And I think when you look at supply chain networks, that's going to be critical to keeping inflation down, which is something the Fed's focused on.
Outside of Alibaba, are there other names that you're watching pretty closely?
Yes, there are other names, such as JD. It's another technology name trading at just 10 times earnings. It is also up 35 or 40% year to date, but it's a logistics play, significant net cash position. You have all these names that got washed out. A lot of Chinese companies got completely villainized because of what was occurring with policies here in the U.S. I think that some of that was needed to some degree, but you had a total washout, Becky. So I think that when you look stock by stock, you've got real opportunities overseas.
When it comes to China, David Tepper was on the show. When was that, Joe? Maybe 6 months ago? Maybe
I hate to try.
talking about,
Yeah.
talking about yesterday.
It probably was 6.
Yeah.
Maybe less.
It was,
About 6.
yeah.
Yeah.
Yeah, but he came on though and said that this was the place to be. We've seen a huge surge in Chinese stocks since. Is it late to jump onto that wave?
No, no. So I would argue that the call that he made was very good. The rally actually started Halloween of 2022. If you look at the bottom of the Chinese stock market, which was on that date, Halloween of 2022, it's beating the S&P 500 by 20%. So I think the rally has a long way to go. The valuations are still below where they were when Trump entered office at the end of 16, when you got that 100% rally in Chinese equities.
When you're looking at semiconductors, NVIDIA, obviously the 800-pound gorilla in the room on all of this, they've got their second day of their developers meeting. Jensen Huang's going to be speaking today. What does he need to say? What does the market want to hear in order to kind of push higher?
You know, something that is concerning when I look at NVIDIA is it has exceptional earnings growth, but it continues to have multiple contraction. And that, I think, signals that investors are concerned about the future prospects of that earnings growth. So people are going to be paying very close attention to any signals he can give for future demand from the large hyperscalers. But as my kids would say, it's a little bit sus that we keep seeing multiple contraction in a name that has very good earnings growth. Generally, when that happens, the market's anticipating something coming out where the earnings may not be able to sustain that trajectory.
I like how you're sliding some of this slang in.
Yes.
Sus, for anybody who doesn't have kids at home, is suspect.
Yes.
That's what that means.
I gathered that, but I've seen it before and I wasn't
It's
sure.
Yes.
My kids are reminding me very continually of what is sus and bringing in other slang terms that are helpful
pants-
for me to keep me
Those
young.
pants are sus, Dad.
Yeah, yeah.
Yeah, look out.
Far out. That's about as current as I am.
John, thanks for coming in.
Thank you,
I
guys.
think your governor's. You know that?
Pardon me?
Your governor is going to be here.
Oh, I did not.
Want to hang out?
I
Is he?
didn't.
I think he's on set.
I did not
He
know
is,
that.
Yeah.
I'll
yeah.
have to go around and see if he's around the corner over there.
He's not on till 8 or so, but he is. Yeah. Coming up, Chinese EV giant announcing some new technology that could possibly overcome one of the biggest obstacles, one of the biggest complaints about why EV isn't ready for prime time, like electric vehicles. That story right after the break.
C.
Shares of Chinese EV company, BYD. Old habits die hard. I still think it's Boyd Gaming. Like this. When did Boyd Gaming move to China? It's not. BYD jumped in, and Boyd Gaming's still around. Jumped in Hong Kong trading overnight. The company announced a new technology claiming it can charge an electric vehicle almost as quickly as it takes to fill a gasoline car. It says its Super E platform is capable of peak charging speeds of 1,000 kilowatts, not gigawatts. How many did you need for that DeLorean?
I don't know.
I think that's something like it.
Doc?
1.21 gigawatts for Michael J. Fox to go that fast. Anyway, it allows cars to travel 250 miles with just 5 minutes of charging. By contrast, Tesla's latest superchargers offer a peak charging rate of about half that, and it allows for a similar range, the 250 miles, but it takes 15 minutes of charging.
I mean, that's the game changer. When you
It
can
is.
charging
That's
super fast.
the most, because it just compounds on, you see the lines. When
Right.
people go, I mean, if you're on an interstate and you see a line of, I won't stop, I won't stop.
I won't stop for gas.
At a gas,
If
that
it's-
gas
if
station.
everything's-
It's like,
I won't either. I'll
Right.
wait for the next
it's
one.
like, I can find a gas pump.
Right.
You know what I mean?
Right.
Easily.
All right, when we come back, one of President Trump's crypto projects announcing hundreds of millions of dollars in sales of tokens. We'll get details on that story right after a break. First, though, take a look at shares of the 5 major Japanese trading companies. Rising overnight in Tokyo, anywhere from 2.5% to 3.5% to 3.6%. The Nikkei was closed yesterday when Berkshire Hathaway disclosed to the SEC that it had raised its holdings in those stocks. Squawk Box, we'll be right back.
out and make it count.
Good morning, everybody. Welcome back to Squawk Box. We are live from the NASDAQ market site in Times Square. Let's take a look at the futures this morning. Yesterday was the second day in a row that all of the major averages were actually higher after the volatility that we had seen the week before. But you can see this morning there are some red arrows. Dow futures are off by about 90 points. S&P futures down by 70. S&P futures are down by 13. The NASDAQ down by 70. That would be a big deal if the S&P futures were down by 70. They're not. Take a look at the Treasury market right now. The 10 years at 4.3%, the 2 years at 4.03, and then oil prices had been a little bit higher. You are looking at WTI above $68 at $68.58. That's up by about 1.5%. Brent is up by 1.4% at just over $72 a barrel.
President Trump's World Liberty Financial token raising more cash in its second sale. Mackenzie Sagalis joins us now.
Hey, good morning, Joe. So one of Donald Trump's crypto projects has now raised $550 million after completing its second token sale. Investors, both from the U.S. and abroad, have poured cash into World Liberty Financial, but at this point, they can't resell their tokens yet, and there's no profit sharing. As for where all this cash is going, a Trump-affiliated entity is set to take home 75% of net revenue, including proceeds from this sale. Now, despite the project branding itself as a crypto bank where customers will be encouraged to borrow, lend, and invest in digital tokens, its exact purpose remains vague. Co-founder Zach Witkoff, son of billionaire U.S. envoy Steve Witkoff, is quoted in the release as saying that World Liberty is on track to supercharge DeFi. Now, what we do know is that the project has been purchasing millions of dollars in tokens, including Ether and Tron. World Liberty is also reportedly in talks with Binance, the world's largest crypto exchange. In fact, the Wall Street Journal is reporting that the Trump family has even explored taking a stake in the U.S. arm of Binance. I never heard back from the White House after requesting comment on that last week, and World Liberty put out a post calling the information politically motivated and designed to harm the crypto industry.
I'm just wondering what we're talking about. So it would revolutionize DeFi, decentralized finance. What's that look like exactly? What are we talking about here?
Well, what they've promised is that this would be some sort of bank that would offer its users the ability to lend, borrow, earn yield, invest in certain cryptocurrencies, but the project isn't live yet. So at this point, all we're looking at is $550 million that has been raised. And it also comes at a time where, the Trump family has other crypto projects, those meme tokens, for example.
Right. I'm just wondering whether, I know that critics would say it's like a sneaker, or like a gold-plated sneaker to raise more money for Trump Inc. But, I think there's some credibility with Witkoff's son being involved. If it wasn't the Trump family, would this be something that people said, yeah, that's a viable thing to try and do as a startup?
Well, some of the reporting from Bloomberg shows that there have been conversations between World Liberty Financial and the Trump White House to potentially launch a U.S. dollar peg stablecoin. And so much of the conversation right now about what's innovative in the crypto industry are these stablecoin payment rails. So that could be interesting. That's one component of what's potentially being discussed. The other thing to keep in mind here, Joe, the majority shareholder of Binance, CZ, Changpeng Zhao, just got out of, just finished his 4-month sentence, got out of the halfway house in September. He has a net worth of $37 billion. He's also reportedly been involved in some of these discussions, though he denies that.
I mean, those are the questions. Is it self-dealing? And you can go back to, should Congress people be trading stocks too, because they can influence some of these things? But those would be the questions. If you can set up the policy for this ahead of time, should you be allowed to have any stakes in some of these things?
And to that point, at the end of February, you had the SEC say that meme tokens are not securities, and that was a couple weeks after the meme token launches from the president and the first lady. 80% of proceeds go to the Trump organization and its affiliates, which, Joe, goes to your point about there being a lot of scrutiny around these projects, whether or not that's warranted. These are what some of the facts that people are pointing to about the arrangement.
So what is left of Binance?
Well, quite a lot. It's still the largest centralized exchange on the planet.
Even though with those issues in mind and I mean, it must have been fines. You went, what'd you say, a halfway house or something?
So yeah, so its former CEO went to prison for 4 months, got out of a halfway house in September. It's now being led by Richard Tang. I'm actually doing a fireside chat with him in a couple hours, and I plan to ask him about.
It's still the world's largest exchange.
It is. It wields a great deal of power, and you know what's very interesting here is that even though Binance settled with the U.S., the DOJ and other federal regulators to the tune of $4.3 billion, they did not resolve issues with the SEC. But under soon to be Paul Adkins, we've just seen this shift in where a lot of the litigation that was initially being pursued is being rolled back, and that might also be the case here. I haven't heard anything about what's going on with the SEC in its case against Binance.
Yeah. I'll do 4 months for $37 billion. Probably was pretty nice. Probably like Goodfellas here. Yeah, that's a good point. Not in the Kingstown, not in the prison I watched there, but they were cutting garlic like Paul. Remember that? Yeah. Making great meals. Mackenzie, thanks.
All right, when we come back, the Fed is set to begin its latest rate-setting meeting today. Steve Leisman will join us to break down expectations after a break. And a reminder for you, you can get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app, and you can listen anytime. Squawk Box, we'll be right back. The Fed beginning a two-day meeting. Our senior economics reporter, Steve Leisman, joins us right now with the results of the CNBC Fed survey. Good morning, Steve.
Morning, Becky. Respondents to the CNBC Fed survey boosted their outlook for recession this year, lowered their growth forecast, and grew more worried about inflation, changes that appear linked largely to administration policy and uncertainty. 100% of the 32 respondents see no change in the Fed funds rate at this meeting, but 77% see 2 cuts or more this year, while 19% see no cuts. That's part of the disagreement over how the Fed will react to tariffs. And the recession probability rose to 36%. That's from 23%, now at the highest level since September, but not at the elevated levels that prevailed after the pandemic for most of 22 and 23. The recession probability had hit a new multi-year low in January following the inauguration of the president. That suggested, like other surveys, the enthusiasm that greeted the president's election has turned more cautious for now. Barry Knapp of Ironside Macroeconomics writes in, "We've had an abundance of discussion with investors who are increasingly concerned the Trump agenda has gone off the rails due to trade policy. Consequently, the economic risks of something more insidious than a soft patch are growing." The markdown in GDP to 1.7% is the first decline in the outlook since September. The series had hit a high again in the wake of the election of the president. Growth is forecast to bounce back to 2.1% next year. There was also a decent jump in the inflation outlook. CPI now forecast to rise to 3% by year end before dropping back down to 2.7 in 2026. Now, despite lower growth and higher inflation, the outlook for the Fed shows 2 rate cuts built in this year with just a single 25 base point cut in 2026. The Fed will remain over the next 2 years above that 3.4% neutral long run or terminal rate, call it what you will. Now, part of the reason respondents think the Fed can still cut, 2/3 believe tariffs will pass through the economy as one-time price hikes rather than sparking broader inflation. Still, part of the disagreement in the survey, 38% worry that tariffs could spark a lasting bout of inflation. So, Becky, we've been at this plus 50% rate for the probability of recession in 23 and 24. It did not result in a recession, or it did not correctly predict one. Now we're at 36, which is elevated from the 23 that was the low in the wake of the election.
You know, we had Roger Ferguson on yesterday, the former vice chairman of the Fed, and Steve, what he said is that he thinks that rate cuts are further away and longer off than most other people think. I think he'd be in that 17 or 20%, whatever it was in your survey, of no cuts or maybe 1 cut, to be anticipating that. What was that, 23%, I guess, and 77% thought it would be 2 cuts or more?
19% see no cuts, yeah.
But maybe is it 23% that see 1 cut or no cuts? I'm just trying to do the math because 77 was 2 or more.
Right, 77 is 2 or more, 19% was none, and then there was, I guess there was a small percentage at 1. But I'm kind of in Roger's camp a little bit, not entirely. I think the market may be too aggressive in the Fed, in how it's timing of the Fed rate cuts, because I think that the Fed is going to need to see the impact of these tariffs on the CPI. It has to become comfortable that this notion that they're one-time price hikes is all there is. And then you're going to need, I think, pretty strong evidence that there's some kind of weakening in either the job market or in the growth trajectory to prompt those cuts. Remember, the Fed's default here, I think, remains to cut. It still thinks it's restrictive. So that means that there's a bias to come down from the forecast. But you need these tariffs to pass through, see what the process is, see what the impact is. And I've talked about this, Becky, this idea that I think what you do is you look at prices of goods that were tariffed, and then you look to see if it's spread out to non-tariff goods. Does this end up being a green light for businesses to raise prices because other prices are going up? Also interesting to see how U.S. domestic manufacturers respond to tariffs on foreigners. Do they raise the price to the tariff level and stop there?
Okay. Steve, thank you. We're going to talk a lot about this, and we'll see you later.
And coming up, homeward bound, those stranded NASA astronauts on the way back to Earth, courtesy of Elon Musk and his SpaceX Dragon capsule. Details on where things stand right now after a break. Squawk Box, going right back. Two Americans stuck in space since last year are on their way home. Astronauts Suni Williams and Butch Wilmore, along with two others, undocking from the International Space Station in a SpaceX capsule early this morning. Weather permitting, they're going to aim for a splashdown off the Florida coast by early this evening. Williams and Wilmore originally headed up on a Boeing Starliner spacecraft more than 9 months ago. They were supposed to spend about a week in space, but got stuck when the Boeing craft experienced problems. The U.S. then enlisted rocket company SpaceX to ferry the astronauts home. Next hour, we're going to talk all about this with former NASA astronaut Mike Massimino. I wouldn't say it's really an embarrassment for NASA, but it is for Boeing, because NASA kind of has given grants to both SpaceX and Boeing to try to get this.
It was NASA's decision to not go with it because of the faulty issues that had happened with the Boeing launch.
Right.
Talk to Mike.
They both got grants. I mean, SpaceX got grants, Boeing got grants to do the commercial, whatever, it's a CCP, not CCP, but it sounds like Communist Party, but for that program. But so I wouldn't say NASA, but it does, we're already, we have changed from a public space program to a private space program. So it's not like the first time that you would say it's been done by a private company, but it's certainly another thing for Boeing to talk, to try to fix.
And we'll talk to Mike Massimino, the former astronaut, about how he sees that transition from the government doing this to the private sector doing this, how he sees that transition going. Plus just what it's like to be up there. If you're planning on going for 8 days and you're stuck for 9 months.
And how you're going to feel when you get down here, like a big bowl of Jello, I would think.
Yeah, welcome back to gravity.
Yeah.
They do work out there. It's a requirement so you don't lose your muscle tone for some of these things. But you packed 8 days worth of underwear, and they had to share food. Part of the reason they're coming back so quickly is to take advantage of the good weather on the Gulf Coast in Florida right now, to make sure they don't get stuck up there, because they want to make sure that they conserve the food and the perishables and other things that are up there. So there are considerations. You can't pack heavy when you fly to space, and they always manage to get by and do with all of these things. But we'll talk to them about what the realities are of being up in space like that for an extended period of time. Anyway, when we come back, President Trump is set to speak with Russia's Vladimir Putin today, potentially on the line as a 1-month ceasefire in Ukraine. Ukraine has agreed, but both Trump and the Kremlin say that there are some outstanding issues. We'll get to those right after this break. Stay tuned. You're watching Squawk Box, and this is CNBC.
CNBC.
President Trump and Russian President Vladimir Putin are scheduled to hold a phone call this morning. It will be the first known conversation between the two leaders since Ukraine agreed to a month-long ceasefire in its war with Russia. Russia has not agreed, though President Trump is expected to make that case on today's call. Joining us now, Megan O'Sullivan, director of Harvard's Belfer Center for Science and International Affairs. She has served in both Democrat and Republican administrations, including as Deputy National Security Advisor in the George W. Bush administration. It's good to see you, Megan. I got a little bit, good morning. I got a little bit, I don't know, pessimistic with some of your comments because we know that Vladimir Putin, number one, is very shrewd and he's focused on something, and that, I guess that's the issue, and you can tell us what that is. It's going to be a chess match, and President Trump, his supporters would say he's a great negotiator and deal maker, and he certainly wants to get something done, but Putin has a lot of cards as well that might be in his favor. I think that's what your point is.
I think you're exactly right, Joe. We have to keep in mind as we look to this phone call this morning that we all believe will be consequential, that Putin and Trump do not have the same objectives in this phone call. Trump is very, very focused on ending the war, ending the violence, and doing so in very short order. And so he'll be kind of interested in the broad outcome of the call more than any details. Putin, on the other hand, has very different objectives. He's not interested in a quick end, and in fact, he's doing comparatively well on the battlefield. So a quick end and an immediate ceasefire isn't really in his interest. What he would like to see, the better outcome, is a reflection of the fact that for President Putin, this call is not just about Ukraine. It's about his larger agenda vis-a-vis the Europeans. And so if the outcome of a call is something that divides the transatlantic relationship, divides the US, Ukraine, and the Europeans, this is a win for President Putin. So what does that mean in terms of what could happen in this call? It's easy to imagine that President Trump could end up agreeing to some of the preconditions that Putin is likely to pose, and that Trump could go back to the Ukrainians and the Europeans and say, look, we have a deal. We have an unconditional ceasefire. There are these details that I've agreed to. And this would once again, after coming together in the last week, it would divide the Europeans, the Ukrainians, and the Americans. This is a win-win for Putin if it unfolds in this manner.
The more I've watched everything happen, I have, and many people have become convinced that we probably are not going to see an outright victory for Ukraine, and anything that we finally, any resolution to this, it is going to involve, obviously a lot of that land is not going back to Ukraine at this point. But I mean, in your view, you think it's possible that Putin could demand enough to where Ukraine says no, and then once again, there's another wedge. Ukraine already created a wedge somewhat with or at least a wedge was the end result of what happened with the Oval Office meeting between the United States and Europe.
You're exactly right, Joe. There's a big wedge coming out of the Oval Office meeting, but the Ukrainians did quite a good job patching that up in the last week or 10 days alongside the French and the British, that President Trump and his administration feels like they're back on the same page with the Ukrainians and the Europeans. And this is all good. And it's partially a reflection that Volodymyr Zelensky, he agreed to a ceasefire for 30 days without any preconditions. He said yes, and that is what President Trump was looking for. This shifted the attention to Putin and whether or not he'll say yes to an unconditional 30-day ceasefire. And Putin, as you suggested, is very clever, very well versed in manipulating situations, has been able to convince multiple presidents across multiple administrations that there's something more from having a good relationship with Russia. And again, I think his intention going into this is to try to keep Trump on his side, but to try to emerge not just with an agreement for an unconditional ceasefire, but having had the Americans make certain concessions up front that make it very difficult for Ukraine or the Europeans, or alternatively put him in a far superior position when these negotiations do happen. So I do feel that we can look forward to seeing some kind of negotiation in this calendar year. Whether or not it meets President Trump's desired timeline, which is today, now, immediately, I think is really open to question.
If it is perceived that Ukraine got the short end of the stick, or that Putin, was able to assert his will and get a lot of things. But it did result in an end to the war. Would that be a win at that point? Because you said it's a win-win for Putin. That sounds like a lose-lose for Ukraine and the West. Is it possible for this to have a favorable outcome at all if it ends the fighting?
When I said a win-win for Putin, what I meant is the outcome of today's call. Either there are a variety of outcomes. I mean, one possibility is that Putin is not forthcoming and that Trump leaves the call annoyed and threatening more economic and other kinds of pressure on Putin. That's certainly plausible. A win-win for Putin would be if President Trump decided, he'll make a few concessions here or there to get Putin to the table, and either Putin begins with those concessions at the negotiations, or he splits the Europeans, Ukrainians, and Americans again. In terms of the broader outcome of the war, it's certainly the case that ending this war is going to be in everybody's interest. And what really matters, and whether or not this ends up being a good thing for the Ukrainians, the Europeans, and the transatlantic relation versus simply a good thing for Russians, has to do with the specifics of the deal, particularly around three things that the Ukrainians care most about: territory, their ability at some point in the future to join organizations like the EU and NATO, and finally, whether or not the Ukrainians have any limitation on their ability to build their munitions, their military, and their army. Those three things the Ukrainians have said are red lines. They're clearly also the things that Putin is focused on and trying to erode Ukrainian advantage in any of those arenas. And those are the things that are going to be on the table. And those are the things that are going to determine whether whatever outcome of these peace talks reveals, whether or not this is going to be not just a short-term gain for those who no longer are fighting on the battlefield, but a medium and long-term advantage for not just Ukraine, but Europe as a whole.
I mean, we've heard for a while that the ball is now in Putin's court, how long ago? Almost a month, and we will see. This is very consequential today. And any outcome, nothing would surprise you, I don't think, or me at this point, Megan. But the rubber's meeting the road, and we'll see. What Putin's got. Thank you. What the president of Russia has. Thank you, Megan.
Thank you, Joe. Good to see you.
Well, 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Becky Quick. Andrew is off today. Among today's top stories, the Fed kicking off a 2-day meeting with a decision and a news conference from Chairman Jay Powell tomorrow afternoon. The central bank is widely expected to leave rates unchanged. Israel launched a wave of airstrikes across the Gaza Strip early this morning, aimed at dozens of Hamas targets. Gaza's health ministry said the strikes have killed at least 400 people. Israeli Prime Minister Benjamin Netanyahu said he ordered the strikes because of a lack of progress in the talks to extend to January ceasefire agreement. And Google parent Alphabet is in advanced talks to buy cybersecurity firm Becky. She's very interested in this story. We were going to have a reaction. We were surprised, shocked, contemplative. Now they won't show you, so fat finger it, but then they won't play along. Anyway, for about $30 billion, that's according to the Wall Street Journal. Wiz provides cybersecurity software for cloud computing companies. Google was looking to acquire the company last summer for $23 billion. She mostly looked contemplative about this and what it would
I'm
do.
scratching my eye.
Is that what she
All right, let's take a look at the futures this morning. You'll see right now that the Dow is off by about 60 points. S&P futures down by 10. The NASDAQ indicated down by 53. Let's get over to Courtney Reagan. She's got a look at this morning's pre-market movers. Court, what's on your radar screen this morning?
Hi, Becky. Good morning. Yeah, futures may not be moving too terribly much, but we do have some other individual names on the move, so let's take a look at them. Let's start with Ralph Lauren. That's higher this morning by the tune of about 2.8%. Goldman upgraded the stock to a buy rating, increased its price target. Analysts citing brand building momentum that could drive additional market share capture opportunities and margin expansion. Now, the firm also noted Ralph Lauren has more limited exposure to risks like tariffs and department store slowdowns. Shares, as we mentioned, up almost 3% here. PepsiCo shares down, though, around 1% after Barclays downgraded the stock to equal weight and lowered its price target to $156. That was from $168. Now, analysts said that the market sees PepsiCo as more of a U.S. food company rather than a multinational snacks and beverage company, and that PepsiCo's ability to re-rate does depend on the fate of the U.S. snacking business. And then we're going to end with a check on Block. Shares up more than 1% after KBW upgraded its rating to outperform. The firm sees it as an attractive risk-reward scenario around the stock following its recent sell-off, gaining a little bit here, about 1.75%. Becky, back over to you.
Okay, Courtney, thanks. When we come back, Corning Chairman and CEO Wendell Weeks has a new plan to try and spur growth. He's going to join us with his message to investors. He's talking to the street later today, but he'll be talking with us ahead of that. Also, sports gambling company DraftKings getting ready for a surge in betting. CEO Jason Robbins will tell us what he expects from March Madness this year. Squawk Box will be back in just a moment.
Asset.com.
Welcome back, everybody. Corning is hosting an investor event today at the New York Stock Exchange to talk about updates to the company's ambitious springboard plan to drive sales growth. Joining us right now is Wendell Weeks. Of course, he's chairman and CEO of Corning. Wendell, you were with us a year ago talking about the springboard, what you have planned for the company. You've been delivering on all those plans, and I think you have an update to share with us this morning. How are things going?
We're going great. You're right. Good memory. We introduced our springboard plan with you and Joe on this show about a year ago. Today we're doing two things with that plan. First, we're upgrading our quarter one guidance, and then we're raising our springboard plan targets to get to greater than $4 billion of incremental annualized sales run rate by the end of 26 and hit an operating margin target of 20%. So an upgrade all around.
So what happened? Why are you able to upgrade your expectations for this? What are you seeing?
Really strong performance from our innovations for Gen AI, solar, underpinned by strong performance in our display segment.
Let's dig through some of those, because when you were with us a year ago, you talked about how Gen AI really needed a lot of the developments that you were coming up with in fiber, and how you guys had been kind of inundated with the things you'd been working on for years, kind of fell into this space where there was so much that was going into Gen AI and so much development and CapEx. There have been questions about a potential slowdown there, but that's not what you're seeing at all.
No, to put it in perspective.
Just in generative AI spending overall, whether there'd be a slowdown in CapEx spending because of DeepSeek.
Yeah, to put it in perspective, Mark Zuckerberg posted this great image of what his Louisiana new data center campus, million GPU data center campus, would look like overlaid on the island of Manhattan. And what his point was is the scale of it. It goes from 2nd to 85th Street and from 2nd to 9th Avenue. Now we look at that and we say, yeah, that's big, but from our perspective, there's going to be 8 million miles of fiber in that campus. Now to put that in perspective, 8 million miles.
How many times does it circle the globe?
Well, what it would do is we could take that same amount of fiber fitting here on a piece of Manhattan, and we could use that to connect every home in the entire state of New York. 5 million single-family homes with fiber to the home. And we've got to fit what would cover the state right into that campus, and that's led us to reinvent everything, make smaller fiber optic products, denser fiber optic products, all while improving their performance. And it is those new set of innovations that is driving this increasing demand.
So is Zuckerberg working with you directly on the fiber for this campus?
I cannot comment on my customers. I keep all of their secrets. But there would be a reason that I seem so interesting.
And that you seem to be following so closely.
Yes.
So what else have you seen? I mean, that's the numbers that we've heard from Zuckerberg and from other big players. It did not sound, when we heard the quarterly results from these companies, like they were slowing down. All of them kind of said, yeah, we're still going full speed ahead on these things. You've been through situations in the past, though, because you've been at Corning for 40 years, is it?
40 years, yes.
Been in charge as the CEO for 20 years.
Yes.
And you've lived through these kind of boom times that disappeared in the past. Where you were a vice president in charge of the newly fiber optic plant, or division of the company, when we saw this euphoria. The company's market cap went to $100 billion and then collapsed because the spending wasn't there. Is this time different? What do you see?
Well, you're right, as Joe reminded me before we went on air. You remembered when both of us were young. We've been through a few cycles. I think it's made us wiser. I think the concern about Gen AI is well placed over the long term, because what you have to believe is that there will be business models that fundamentally revolutionize productivity for us all. In the near term, though, what comes first is infrastructure, before those models become powerful enough to change all of our lives. And so when I answer this question, I always ask, what time period are you concerned about? If you're looking at the next 2 years, all of my calls with customers are all about how much more they want. All right, so I think the next 2 years, which is what our plan is encompassing, I feel very positive about. Sort of after that, we have to start seeing these models make a compelling difference in people's lives.
And I pointed out just because NVIDIA is in a similar position. They have the chips that everybody wants. There's not enough to go around, the demand for that. But we've seen NVIDIA's fortunes rise and fall, not collapse, but super spike, and then maybe come back down from some of those super spikes. How do you avoid that sort of situation? I guess that's what the Springboard plan is about.
Well, first of all, I love being compared to NVIDIA. Jensen's going to do about next 6 days. He's doing his GTC event, and I expect to see some great things out of that, including the touch on fiber optics. So I think that right now, infrastructure is a safe bet from a demand standpoint. How Wall Street values that can go up or down, but everything we see continues to point to strong demand over this near term.
When did you join Corning?
Gosh, 42 years
What year?
ago?
Do you remember which year?
God, it had to be like 83.
83. So I knew about Corning way before you.
You knew me before me. You're not that much older than me.
I was using stuff in I think '79.
Yeah.
Right. And we talked about the orange cap.
Yes.
In your lab.
In my lab, it's still orange, right?
It's still orange.
How many of those do you think? And it's Glassworks, GLW, but everything's plastic. But I saw that was confused. But how many of those do you think you produce a year?
Well, I'll give you, gosh, I don't know off the
Orange
top
cap
of my
vials.
head.
Orange cap vials.
Those
Is
orange
it
caps
a
that you
billion?
used to use, it has to be close. Well, I'll give you an example out of COVID. When we participated in Operation Warp Speed, we made enough of the vaccine packaging to do 9 billion doses, all made here in the US.
So it's all in B's. You probably get close to T's in some of this stuff. Cumulative, no doubt.
Cumulative. Yeah, we've
No
been
doubt.
next year will be our 175th anniversary. So we got to get close to T's after that long a time
You
period.
do.
Wendell, let's talk about your solar plans in your solar division, because that's
Yes.
part of why you're seeing better growth than Wall Street had been expecting.
Yes.
I didn't realize the solar properties you picked up.
Yes.
When was it? What merger was this that you picked up these?
It's in 2020.
Okay.
And what we saw was that there would be a need for a US-based solar supply chain.
Because we rely on China for so much of it.
Yes, for the polysilicon version of solar, which is the most capable form of solar energy, at the fundamental materials level all the way up to the wafer level, that is 98% controlled by China. And the US is continuing to increase its reliance on solar. So we saw that opportunity in Trump 1.0 to encourage more US-based production. And we were able to gain strategic control of those assets. And we've been steadily and quietly in our own way, innovating in that space. And what we are announcing is that we're opening up this new solar map. We're going to take it from about $1 billion to $2.5 billion by 2028. And we are already sold out entirely for this year. And we have 80% of our capacity spoken for by our customers for the next 5 years.
And what you sell is the base material that goes into the solar.
The base material, and now we've turned it into a higher value added product, the wafers on which the cells are built. So we just announced the first US made, all US, from the base material to the wafer, to the cell, to the module product with one of our customers, Suniva.
Made in the United States definitely plays into what the Trump administration is looking for, but the solar tax benefits were part of the IRA under the Biden administration. Does that go away, and if so, does that hurt the plan?
So we started this because we believe one way or the other, the U.S. is going to have energy independence. And you can do that in a number of different ways. Different policy people think about energy in different ways. But as we look at it, we don't see that importing energy is going to become less expensive going forward. So it just raises the value of a domestic source. It could take different forms. What we seek to do is probabilistically adjust for those different potential changes in government policy and reflect that in our springboard guidance.
I should just point out, Corning shares this morning up 6.5%. You're telling us before your meeting with investors later today just about how you are raising your guidance for what you see in that springboard plan, and you're going to talk a lot more about it with the investors today at the New York Stock Exchange. But Wendell, thank you so much for joining us here ahead of time.
Always a pleasure.
Is there anything you didn't tell us you're gonna tell them? Just, can you
Of
think of
course
anything?
there is, Joe. You're
There
gonna have to have me
There better
back.
be, they're shareholders, yeah. All right.
Thank
But
you.
I used, coming up, after being stuck in space for the last 9 months, 2 astronauts are finally on their way home aboard a SpaceX capsule. Former NASA astronaut Mike Massimino joins us with more on this drama and the continuing privatization of space travel. Squawk Box coming right back.
Now,
Astronauts Sunny Williams and Butch Wilmore are returning to Earth following an unexpected 9-month stay aboard the International Space Station. They're now in a capsule provided by Elon Musk's SpaceX rocket company. Joining us right now is former NASA astronaut Mike Massimino. And Mike, this has been kind of crazy to watch for us, thinking that you're going up for 8 days, finding out that no, it's going to be more like 9 months before you come back. As a former astronaut, somebody who's been up there, what did you think about all of this?
Well, Becky, I thought it's a pretty good example of the resiliency of both NASA and its astronauts, of the plan changing. You never know the way things are going to work out. You have to be ready for the unexpected. In this case, they were ready. They were ready to stay there longer if needed. That was always part of the backup plan. But you don't necessarily expect that's going to happen. I think the likelihood going in was very low that this was going to happen. But it did happen, and they were ready for it.
Yeah, I guess I'm still kind of remembering and reflecting on the idea that the amazing situation of being able to be sent into space, the good news is you're coming back, not necessarily that you're coming back with a delay on some of these issues, but it has caused us to do some soul searching just about what this means for Boeing, what this means about the privatization of the space program and all the outsourcing that NASA has done with this. How do you feel about it?
Well, I think, as far as Boeing goes, we haven't heard much about the Starliner spacecraft. I'm still hopeful that they'll be able to become more comfortable with the issues they saw and fly it again. I think that's the hope. I don't think the story's closed on that yet. So hopefully they'll continue to look at it and reschedule another flight with people on board. We'll see if that happens or not. It's been a few months now that it's been on the ground, but hopefully we'll get that flying again. As far as privatization goes, and this is really what NASA has turned its attention to, really going back to the space shuttle program. Well before I was an astronaut, the hope was that commercialization would start back then at the beginning of the space shuttle program, the early 1980s. They were hoping to build commercial space stations. They were hoping that the space shuttle would be a commercial vehicle. Didn't turn out that way. They had a couple accidents. It was never made it to where they wanted it to be for commercial purposes. But when the space shuttle retired, NASA took the opportunity to try to stimulate a commercial space business, both in flying cargo to space for the space station and also flying astronauts. And now we're seeing commercial missions to the moon. And NASA partakes in those. They help fund those, and they also put experiments on board. So I don't think this is going to end. It's been a very good relationship, and good both for the economy, for a new space business, and also for NASA for its goals.
I'm grateful that there was a second option, that SpaceX was able to step in and step up to the plate.
Yeah, absolutely. It's good if you never know, and it could be issues with a SpaceX vehicle someday. The Soyuz, the Russian spacecraft, which has been a very reliable spacecraft, a couple of years ago, Frank Rubio, another astronaut, was on board a Soyuz going to the space station. There was a leak in that Soyuz once they got there. They returned that Soyuz empty, sent up another Soyuz for Frank and his crew. They went from 6 months to over a year. So as long the thing is, the crew is never really in any danger, and their ride changed, but they always had a way to get home. They're coming back on the SpaceX vehicle that's been up there with them since the fall. So the safety has never been compromised. And I think it's a credit to NASA and to the team that they've been able to do that.
Yeah. Easy for you to say. Never really in danger. We got lights here that could drop any time on me. I'm permanently scared. What was your longest time up there, Mike?
Yeah, nothing like these guys, Joe. I was up there for my longest was 14 days. It was supposed to be 12, and we got extended for 2 days, but that was really gravy.
I'm just trying to think when you get back, and I'm never in any danger. This is like a walk in the cake, sure. But when you got back, I'm just trying to think about was it fresh air? Was it the sky? Was it, what was it that was the pizza? A toilet? Oh, I would hug my toilet. It got gravity again. I don't even want to know the details of how you're doing that stuff up there. But what was the greatest thing about coming back, would you say? Your loved ones? Or?
Oh yeah, certainly seeing your family, Joe. Even though I was gone just for a couple of weeks, and with these guys, they've been up there a lot longer, of course. But seeing your family and seeing your friends, that is number one. And then the things you do miss on Earth, I miss things like the weather and crowds, and it sounds crazy, but a lot of things we complain about, you don't have it up there, and you miss that. And you mentioned pizza. Yeah, on my first flight, I missed pizza so badly. I ordered pizza at the Cape, at the Kennedy Space Center.
Oh, I thought you were going to say at the space station. Pizza place. Domino's delivered up there.
30 minutes.
No, they don't deliver. I was coming home. I made sure the order was put in correctly.
Oh my God.
Hey, Mike, let me ask you, You're not allowed to bring a lot of things with you. When you go, you gotta pack light, because every ounce matters when you're trying to get lift off. If you packed for 8 days with your underwear, your toilet paper, your toothpaste, what do you do when you're stuck up there for 9 months? Is there enough up there?
Oh, there's plenty up there, Becky, and there are supply ships that go up there a few times a year. You know, you're constantly getting resupplied. But they think about that, all that stuff as well. There's plenty of food on board. There's extra underwear, and everything else you need is up there. So, and you actually don't even pack your own bag. You know, we have professionals do that, and they pack stuff really tightly and make sure you have everything you need. So that was never an issue. You can't eat all the food that's up there. There's plenty of water. There's plenty of supplies.
Well, although they were taking advantage of bringing them home more quickly than maybe having a few days of overlap with this new crew that went up, because they wanted to make sure they got them back and conserved the perishables and other things that were up there. How long do you wear your underwear up there? Because I was reading an article the other day that said like 4 or 5 days.
So just
Yeah, something like that. Yeah,
like-
that's about right.
Here on Earth.
That's about right.
Yeah.
Mike,
Yeah,
I gotta
depending.
ask, you know, now that Becky's taking us down to this, I mean, what if
No.
you have a digestive problem? I mean, I don't even know how you do it if you don't
Right.
have a digestive problem, but what if you do have a bad case of
Diarrhea?
yeah, how does that work? Is it everywhere? Is it you got a vacuum
Oh,
cleaner
okay.
to stick up?
It's the slingshot, right?
Well,
I
as
don't
far-
know, I wanna know
as
how
far
you
as-
do it. Is it like,
Yeah,
I
well,
guess
as far
it's
as the-
pee, you can do it, yeah, go ahead.
No, I was going to say, as far as the diarrhea goes, any kind of illness, you try to prevent that. You go by going into quarantine
Yeah, so do
ahead
I.
of time for a week. But I know, but so that it's very rare that there's going to be any sort of illness in space. But as far as dealing with, handling number 2 up there, you've got to be really careful. You don't want any of that stuff getting loose. Even if you're on a good day in the bathroom, you don't want any of that stuff. Even if your gut's working well, you don't
Right.
want any of that stuff floating
Gotta be
around.
careful down here.
You got to be careful down here, but it's floating
Everywhere.
out there, so you got to be really
Right.
careful. You don't want that stuff. So one of the important training exercises you have on your schedule will show up as potty training, and you get refreshers on that. They have a toilet that you train on in Houston. And it's one of the last things you review before going to the Cape for launch, because you want that fresh in your mind. And no one, especially when you're a rookie, you certainly don't want to mess up the
Yeah.
Oh my
toilet
gosh.
operation.
You don't wanna
Yeah.
be,
You don't want to be
Gotta
the
be careful.
doo-doo guy.
yeah, you don't
Oh,
want
no.
to, you don't wanna see something go by and look over at your
did
your
what?
friend.
No.
Like, what was that?
You,
We
you
share
got,
so
to
many
get a
things.
nickname out of that one. Yeah, you don't want that.
Bet. Did anybody do that on any of your?
So to speak, do you do that?
No.
They're begging us.
No,
They're
we're
begging us
very
to.
careful. Yeah.
Mike,
Okay.
thank you for sharing so much with
You
us.
bet.
Yes.
These
My
are the things
pleasure.
inquiring minds want to know.
Yeah.
It's great to see you, and we will talk to you again soon.
Likewise.
Just waiting
Our
to have.
favorite
I hope so.
astronaut.
Thank you.
Thanks, Mike.
Pizza and poop.
insurance.
The Fed kicking off a two-day meeting. Join us now, Greg Fleming, Rockefeller Capital Management President and CEO. We had the Fed survey that Leisman brought us earlier, Greg, and there are definitely some ratcheting down of GDP expectations, I think goes along with your thinking as well for I guess, a variety of reasons. You make an interesting point that the real inflation could come when we do onshore everything, and the labor and everything else that be careful what you wish for. Although Scott Bessent said, look, the American dream isn't a cheap widescreen TV. So maybe we pay more for that. But everyone's got a job to buy one, hopefully. Is there something to that?
Well, one thing that Bessent also said that I'm hoping he's still very focused on is 3, 3, and 3. 3% real growth, 3% inflation, and 3% federal deficit by 2028. Let's hope they're still on track for that. But you know, one of the things about the Fed now, Joe, if we're talking about the Fed, and that's partly the inflation topic, it's interesting that they are on hold, and they're going to need to be on hold now until they see what happens from the events that have been put in motion. So where will the tariffs end, and how much inflation does that cause? How much weakness do we have in the economy from the uncertainty, which you all are seeing every day, both business and consumer now? Some of the more recent polls on the consumer side show the consumers may be starting to pull back, or that's in the early stages. So if you're the Fed now, you are truly data dependent with no ability really to move ahead of it, because you don't know what the it is, because it's a completely unique time.
Meaning that there aren't going to be cuts that come anytime soon because they're waiting to see what happens?
I'd be surprised if there were, right? Because they've got to worry about, inflation has been on the right trajectory coming down, but there's still more work to be done there. If tariffs end up in a more robust spot and there's inflationary pressure there, you've got that on one side, and then how much does the economy weaken? You know, how much flack, in the labor market, slack in the labor market, thank you, that do we have? So they're going to be balancing those two things, but they've got to watch the data on both sides before I think they can move. So I would expect them to be on hold for some time here.
To get to 3, 3, and 3 seems like would cause a lot of near-term issues that if you want to get there, maybe you're okay with some of this. You also pointed out we had 2 big years. This is not unexpected, a 10% correction probably. If it was caused by some of these, whatever you want to call them, tough love that we're getting, whether it's from Doge or whatever you want to look at, are you in support of some of this stuff, even if it causes some near-term turmoil, tariffs even?
Well, let me give one answer on the history, then I'll come back to what I'm in support of. In 98 and 99, and we were here, you had the 2 best back-to-back years in history until 23, 24. And they were roughly similar in terms of the magnitude. The market was up about 50%, a little more than over the 2 years. And that's what we had in 23, 24. So coming out of 2 years like that, you're going to see more volatility. This time, unlike that time, 2000 was the election year. Here you had the administration change. And whatever new administration comes in, there's going to be new policies. So you would expect to see more volatility in 2025 coming in, just because of what happened the last couple of years and the new administration. So again, that's something for people to keep in mind here. The other thing that people need to keep in mind is that the market in the last 2 years, if you take out the 7 stocks that we spent so much time talking about, the market's up each of those 2 years about 9 or 10%. And if you take those stocks out now, the market, S&P is roughly flat. So, there's been a lot of talk in the last few weeks about the major correction in the market and angst about the market, but there really isn't, when you look at the numbers, as much going on yet as people, I think, are talking about. So it's important to keep it in context. On the policy side, we've talked about this at length here. The federal budget deficit has got to be cut. And the statistic I've been talking about recently, if you go back to 1945, receipts as a percentage of GDP have averaged 17% a year. Spending over that entire time frame has averaged 19% a year. And we obviously had some years even with the surplus. Bill Clinton left office with the surplus. In the 5-year period, 2019 to 2024, receipts were 17% of GDP on average, and spending was 27% of GDP.
COVID.
Completely unsustainable. We have a wealthy country. I still, firmly believe greatest economy in the world and will be for a very long time. But we can't afford that level of deficit year in and year out. So they have got to go after that. Whatever party's in power, they've got to go after that. So I'm hoping that they get there with some material reduction in the level of deficit spending that we have in this country.
Right. I mean, I looked at it again, and Trump was under $1 trillion for the first 3 years, and then it was almost $4 trillion in the COVID year. So all in, it came at like 7. Then I think Biden did almost 3 or just under that.
Up front, right, when he came in.
Right.
Yeah.
But then he kept, then it came down below 2, but then the last 2 or 3 years, we went right back up for no reason, other than everything the Democrats wanted. And think if it wasn't for Sinema and Manchin, it would have been 10 times worse. But all that stuff that happened got us back to $2 trillion in deficits. We were under $1 trillion.
You cannot run on a sustainable basis, even if the United States, a deficit, particularly when employment's close to full, as it has been, of 6 to 7% of GDP. You know, one of the transitions I think they're also trying to make now is all of that spending on the federal side, it's got to come down, and they're hoping to transition to faster growth on the private side. And that would be a great pivot if we can pull that off in the economy, a great pivot for us to have now.
No question that spending has outpaced where it should be. But when you hear talk about cutting and coming up with savings from some of that spending and then turning around and giving it back in tax cuts, what do you think of it?
Well, you know, the tax cuts, I mean, the pro-tax cut crowd.
I'm not talking the 2017 return, I'm talking about additional tax cuts on top of that, not paying for tips, not paying for overtime. A lot of things that have some pretty big price tickets on them to the tune of billions of dollars.
Becky, you're right, they've got to balance both sides. You in the final analysis, when you put it all together, that deficit, and Besant said it up front, 3% of GDP by 2028, they have got to figure out the balance that's going to get there. So I completely agree with you. If there's less on the spending side and you layer on additional tax cuts, even though tax cuts tend to be pro-growth and that's the argument for them, that's a problem because we have got to take this 6-7%, bring it, and it should be 3% by 2028, and it could come down further from there because you're now already servicing. And Joe and Becky, we've talked about this. The interest on the debt today exceeds military spending. And when you look in the world around us and the people you're talking to every day, military is quite important today given what's going on in the world. So we have to invest in the military, reinvent the military. We need the money for that. Spending more on interest on debt than military is, again, another national challenge.
And we're not talking about crazy interest rates at this point, below 5%.
We're not. We're talking about more normalized interest rates. If we get enough weakness, maybe they come down. But they'll probably come down more like they have historically as opposed to what we saw, 4 or 5 years ago. So the interest costs on this enormous federal debt are going to stay very high.
Greg, thank you. These are intractable problems, but you're optimistic?
I remain optimistic. I mean, it's
what else have we got?
It's also still the greatest economy in the world. The Economist had that cover story with American exceptionalism, the envy of the world, 5-6 months ago.
Yeah.
You have that cover story jinxed in Sports Illustrated. So, they put that out there, but there might be a little pushback on that. But in the final analysis, this is a great economy, a great society.
That's never changing. You might change the, terrible, the longest bull market in bonds. That's the top, but it's never going to be the top of American exception. I don't know.
You and I are on the exact same page on that, Joe. Becky, too. Great to see you both.
Thank you.
Thank you.
When we come back, Google making another run at cybersecurity firm Wiz in what could be the first major antitrust test for the new Trump administration. Squawk Box will be right back.
T.
Coming up, DraftKings CEO Jason Robbins tells us how the sports gambling company that he runs is getting ready for the upcoming March Madness surge. Squawk Box starts tonight, actually.
Go with Timber Tech.
The 2025 NCAA men's basketball tournament begins with two of the first four playing games tipping off tonight. Then the real madness begins around 12:15 p.m. on Thursday. Creighton taking on Louisville. I think they're both 8s. And of course, you can bet on all the games. Join us now to break it all down. DraftKings CEO Jason Robbins. Looking good. I like it. You is that the Blue Jay? What am I looking at up there? I can't tell.
That's the Duke Blue Devils.
Oh, it's the Blue Devils. I couldn't see. Yeah, and he'll be back, right? For the first game. Do you know Cooper Flagg?
I'm hoping, yeah, it looks like it. We'll see what happens, but I like their chances. They have a great team this year.
They do. How much of a bump do you see, Jay? I mean, you always get. I might bet a little more during March Madness, but I bet all the time. On a percentage basis, what do you expect to see, just in terms of activity?
Well, I mean, March Madness, it's not quite the Super Bowl, but it's similar. Like, if you're into betting, if you're into, this sort of thing, brackets, if you're a sports fan who likes action on the game, you're probably betting on March Madness. So it's a really important time for us. It's a great time for fans. There's so much going on. It used to be a tradition. I don't do it anymore, but when I was younger, I used to go to Vegas for the opening weekend every single year, and it was just awesome. I would sit down at the books, and there were just screens with games on everywhere, and you just have action on everything. It was the best. I loved it.
What is is there different things than just, straight up money line, or, take the points, or guess you do some parlays and under and over, but what else do you put in for March Madness that's unique to this week or the next 2 weeks?
Well, a lot of people are parlaying in the first round because there's so many games. So it's really popular for people to take the big favorites on the money line and then parlay them with some spreads that they like. So generally you see the number 1 seed money lines getting just paired up with any other games or any other bets that people like because they sort of feel like it's a great way to juice the odds because the 1 seeds almost never lose. And then obviously a lot of futures bets, people betting on who's going to win the tournament. Not surprisingly, Duke is getting the most bets and most handle, but lots of other teams, UConn was surprisingly, up there, I thought, even though obviously, Duke's the favorite this year. UConn has really had a great showing the last several years, so people are betting heavy on them. And I think there's a lot of teams that are going to surprise people. So, there's always some interesting stories. So a lot of times Cinderella bets become a big thing once there's a team that gets past the first round or two that people didn't expect, a lower seed. Typically people pile in on them. It's actually quite different. In most sports, people bet the favorites, but when there's a Cinderella story, people always bet on it in March Madness.
Florida's been surging too. And remember a couple years ago, Florida won, all of a sudden they won it all, right?
Yeah, exactly. Who do you like this year? Who do you got?
I bet on Auburn a few times. Every time I bet on Auburn, they lost. So I don't know. What they lose, 5 out of 6 or something, or maybe 5 out of 7 recently. I mentioned Florida. Duke covered the spread almost every time I bet on them, Jason. So, and then I didn't know whether to bet on them or not without Cooper Flag. But then they kept doing it, even with. I would have thought UConn until the other night. I don't know. They got beat pretty.
Yeah.
What about St. John's? Patino is a phenom.
There's a lot of good teams this year. St. John's is another one that kind of came out of nowhere. Obviously, great coach. So definitely a lot of good teams this year. And one of the things I love too is DraftKings. We have some free-to-play brackets. So if you're filling out a bracket, you might as well come and do it. We have ones for up to $50,000 that are free to play. We have men's and women's. We have second chance brackets. So come check those out. They're in the pools section of our sportsbook app.
Hey, Jason, NIL, the name, image, and likeness money has changed things so much. You hear some well-known coaches kind of complain about how it's impossible to keep a team around, that half of their players, including what UConn's coach Hurley said, that you got half of your players at any point have already gone into, are going to go into the portal, and they've already had conversations with other teams. Does that make it tougher to try and figure out the betting line on some of these teams too? Because you don't have the same amount of time to kind of see who's gelling, be able to understand a team. It feels like there's a lot more in play at any point in time.
Well, there's no doubt that the game is changing in college sports and NIL and all the other things going on. So, it's hard, but I do feel like the tournament, everybody gets up for it. This is, it's one of those special moments in sports where you're on the national stage, and even if you have aspirations of going to the NBA, this is a time where you can really make a name for yourself and go up in the draft. So I feel like everybody's coming to play the same as they ever did. And, obviously the game is changing, but this is one of those moments that's still great about college sports.
It's still competitive. Our margin's still getting squeezed, and I wouldn't say I'm really cheating on you, but Michael Rubin, I did sign up for Fanatics, and I like it, and I use it quite a bit. I don't know if you can bring me back into the fold. I don't know what you really have to do, but it's really hard to keep and get new customers, isn't it?
Michael finally got you, huh? I've seen him come on the program and try. Well,
He
listen,
bullied me.
whatever we need to do, Joe, for you, we're willing to do. So you tell me what you need, and we obviously love having you as a
With a
customer.
wide range, Jason. The wide.
Careful what you want.
Exactly. I'm gonna keep on. Maybe I'll get 5 or 6 accounts. FanDuel's next. Jason, thanks. Love DraftKings, but I love Fanatics. Squawk Box coming right back.
off your first order.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan. Andrew is off today. Among our top stories this morning, the Fed's latest policy meeting is set to kick off today. We'll get an interest rate decision from the Federal Open Market Committee tomorrow. Central bankers widely are expected to leave interest rates right where they are. News from Frontier Airlines as well. That carrier is going to begin offering customers a free checked bag, free assigned seats, and free ticket changes. That's in direct competition to the changes we've heard from Southwest, which is going to start charging for bags for the first time ever. We'll have an exclusive interview with the CEO, Barry Biffle, that's later this hour. And NVIDIA is set to kick off day 2 of its GPU Tech Conference in the Bay Area. The big event today is CEO Jensen Huang delivering a keynote address. Shares of NVIDIA are down 11% this year. This morning, they're off just fractionally by about 25 cents.
NASDAQ going to open a regional headquarters in Dallas, Texas. It will formally announce the move at an event this morning. Earlier this year, the startup Texas Stock Exchange filed paperwork for initial regulatory approval to start trading and listing companies next year. And the New York Stock Exchange said in February it's going to launch an electronic exchange in that state. Texas Governor Greg Abbott is going to join us later this hour. Talk about all this.
Google parent Alphabet reportedly in advanced talks to buy cybersecurity firm Wiz for about $30 billion. A deal could put the Trump administration's appetite for antitrust fights to the test. Google is already involved in 2 other high-profile cases. Eamon Javers joins us this morning on this. This is going to be a big test, and we'll see.
You know,
how it
Becky, this
shakes
is
out.
fascinating. It's a $30 billion deal. It'll be the biggest deal ever for Google. Credit to the Wall Street Journal for breaking this story yesterday. This is going to be a test of the Trump antitrust approach, right? Because a lot of folks had assumed that there's going to be a low bar for M&A. We'd have this M&A boom this year that just hasn't materialized. In fact, it's been the lowest first 2 months of the year in 20 years for M&A. So where is M&A going? This is going to be a huge test because everything I know about Donald Trump and his approach to antitrust and the conservative populists around him would suggest that there is no way a deal like that could get approved by this administration.
You know, they walked away potentially from that deal. $23 billion the last time Google was looking at it because they were worried about antitrust.
In the previous administration.
Are they getting hints, you think? Are they getting...
Well, so the question is, does Google know something here?
Yeah.
What do they know that I don't know? Because I look at this deal and I say, you know, we talked to Andrew Ferguson, the new FTC chairman, on your show last week, and he said one of the big focuses for them is going to be big tech. Google already has 2 antitrust cases against it. The administration is already preparing to force them to potentially break up. So if you're Google in that climate, why would you possibly go forward with your biggest deal ever unless you had a theory of the case that said we're going to be able to get this deal through? I don't know what that theory of the case is. It would seem the opposite of everything that the signals have been. In terms of where this administration is going to go. But Joe, I mean, you heard Andrew Ferguson last week say, you know, this is going to be our focus, big tech and healthcare. Now here's one of the biggest big tech deals from one of the biggest tech companies in the world. Where's that going to land?
He said some good things, though, too, that were allaying some of the concerns that it would be Lenacom 2.0. And it's actually quoted in the journal today, some of the things that were more, I don't know, conciliatory towards the idea that maybe one company might want to merge with another, and it's not all about screwing, the public.
Yeah, I mean, he said if the deal is legal, we're going to push it through quickly. We're not going to do this thing that he said the Biden FTC did, which is sort of bury it in slow review, right? We don't think we can block it, but we're just going to drag it out to the point where it becomes uneconomical and the parties walk away.
We saw that movie, Eamon. We saw mergers that, remember what, AT&T, whatever it was, that by the time they did it, it almost doomed it at that point. That is one method. It's kind of underhanded, isn't it, to tie it up for years in the courts so that by the time you finally are able to do it, it no longer makes economic sense. Yeah.
But what Ferguson is saying is they're not going to do that. The question is, this deal, does this deal, maybe because it's cybersecurity and with a cybersecurity firm, you could say, well, that's not monopoly abuse because you're getting into this different industry, but it's a huge deal. It's a huge deal. And Ferguson has said that size is something they're going to consider. They're going to look at size. It's not determinative, but it is something they're going to look at, and this is a very, very big deal.
You just have to think every M&A firm watching this so closely.
Absolutely.
Every company that's considering doing any deals in
It's
this.
a ginormous test case.
How long does it take for something like this to go through?
I mean, it can take, months and months and months. It
For them
depends
to
on
review
the-
and even sign off? And
Yeah, it depends on the review and the sign off. Now, what Ferguson has said is they're going to try to go faster this time around because they don't want that sort of regulatory abuse going on.
Yeah,
They want to be able to let people go and do the deal if it's a legitimate deal.
What are you doing?
Fascinating interview.
What are you doing up
I'm co-anchoring Power Lunch this afternoon, 2 o'clock, with the great Kelly Evans.
here? Amazing.
Yeah,
Fantastic.
so I'll be reading teleprompter this afternoon.
Well, thank you for stopping in here.
Just because there's a teleprompter.
And it was a great.
Doesn't mean you have to read it.
right.
It does not.
That's, see, Joe, that's good advice. That's why I came here. It's
Very good advice.
Get the good stuff.
It was a great interview with Ferguson last week, too.
Yeah,
Thank you. for
so
bringing it.
interesting, right?
Yeah.
Yeah, we'll do it again.
Okay.
Coming up, I'll read this, I guess. From the Fed to the President's economic agenda, we're going to speak to the founder and editor of Grant's Interest Rate Observer, Jim Grant, about implications for the market and also the stock market. Squawk Box.
Insurance.
Welcome back to Squawk Box. Let's check out the futures this morning. You can see that they've gotten about where they've been, but surprising, almost like came out of nowhere, that bonus yesterday after Friday, and another 350 points or so on the Dow yesterday. You're back 65 this morning. NASDAQ down 84 or so. There's the Treasuries. We might touch on this right now with our next guest, 4.32%.
The Fed is expected to maintain rates this week as the economy continues to send mixed signals. Joining us right now with the Fed preview is Jim Grant. He's the founder and editor of Grant's Interest Rate Observer. And Jim, there's a lot for the FOMC to be considering this time around. It looks like the consumer may be slowing down. It looks like some concerns around consumer confidence. We're not entirely sure about what's happening there. And we got some decent inflation numbers this past week, but I think there are still concerns about where that is headed. What do you think the Fed's going to be grappling with and what they'll be considering?
As to inflation, as they said on your report card, that there's room for improvement. And I think the Fed is aware of that. And I think what is most notable about the Fed this time is how little it has in its direct control of things that matter most. And I'm thinking, for example, of this immense outlay of capital investment in data centers for artificial intelligence. And we happen to think that supply is way outrunning demand. And there'll be a comeuppance sometime. You know,
Sometime in the near future, or are you talking a couple of years down the road?
No, sooner.
Yeah.
I'm reminded of the race between supply and demand with a fiber optic cable.
We talked about that this morning with Wendell Weeks from Corning, who lived through it.
And it turns out that was the information age, but nobody had the information.
He, by the way, thinks this time is different. We literally had him on set this morning talking about that, and he was the vice president in charge of that division when it went through that rapid growth into the collapse.
Did he say this time is different?
He did. Yeah. He said this time is different, and because he can see out at least for the next couple of years, he says. So well, maybe not for forever, but for the next couple of years.
It's always a little bit different.
Yeah.
But we think that the wild card is not the supply, which is out there in public, but rather the demand, which is conjectural. And anyway, so that's one thing the Fed cannot control, of course. Nor can it control the geopolitical situation. It can't make the Navy readier than it ought to be in case of untoward events with respect to Taiwan. And that would be an immense event, of course, for humanity, for the world's economy, and I'm talking about
China potential
invasion.
Yeah.
And so that's one example of how things don't. We tend to think of the Fed as in control of events. At least unconsciously, we impute great powers to it. And the very volatility of the President of the United States, the avatar of volatility, sits in the Oval Office. And tariffs are up or down, so we have, besides yo-yo tariffs, we have the great scythe of Doge. And remember the play, The 6 Degrees of Separation? John Guar. Anyway, the phrase is certainly familiar. And if you consider that every person has room in his head for like 150 acquaintances, and do the overlapping of acquaintances, everyone knows someone who has been doged. And I think that altogether, with the up-tempo, prestissimo pace of events in Washington, and with the uncertainty and the apprehension that comes with selective and not so selective firings within the federal government and its myriad contractors, that there is an undertow, unmeasured but still substantial undertow of apprehension among consumers that is part of things today. So
Greg Fleming was in your seat about half an hour, 45 minutes ago, and he said that trying to get the spending under control was key to getting back in line with the spending versus the tax receipts that we take in. You sound like you're more concerned about the short-term economic impact from what that's going to look like.
Yes, in the short term, the beneficiaries of a perhaps minor change in their tax bill are much less affected than the people who have lost their positions and fear for others who may lose theirs. So I think that's undercutting consumer confidence, as is the stock market, which is wobbling or worse. And you see it also in there's a story about margin calls going out to people who invested in art that is not so precious as it had seemed before. So this is it's only
about Hunter Biden now? Where did you?
Now, that's never gonna go down.
You already can't sell it. Apparently, there was some reason to buy it when his father was president that it is no longer.
Well, credit was more forthcoming.
That's what I was.
Yeah. So,
But what does the Fed do though? If it sees an economic slowdown, but it's still
Yes,
worried about the
yeah, right.
inflation, where does that leave it? Because we had a survey that Steve was with us, Steve Leisman, earlier this morning, talking about how 77% of the economists that were surveyed are looking for 2 or more cuts this year. Are you in that camp?
no.
Yeah.
I think that interest rate rises are as likely as cuts. Although, believe me, I have people say, "What's your high conviction trade?" That's not it.
Yeah.
But we'll come to a point in which the Fed is invited to make a choice between standing up for the stock market, which is the engine of, I think, confidence and indeed of the marginal dollar of consumption among that portion of the population that is sustaining consumption, which is the upper portion of the population. So the stock market is a vital connector to retail sales and especially to services. So say the stock market takes a rest, a 25% rest to the downside. What does the Fed do? If inflation is not printing as the Fed would have it be printed, that will be a terrific test of the Fed's determination as to whether the quality of the money is meant to.
So you're not even looking at the Fed's 2 mandates, the economy versus inflation. You're looking at the stock market versus inflation because you think the stock market's going to be a precursor that tells you where the economy is headed?
Well, the stock market manifests one kind of inflation, it seems to me. That is, for all of the strum and drang about inflation or no inflation or transitory inflation over the past 5 years, say, the Chicago Fed's index of financial conditions has never registered anything except a common native. So the Fed has really never gotten really tight. And so if the Fed chooses, they could cook up all sorts of reasons. Any good analyst can on either side of a different trade. But if the Fed comes out and says, we see a clear path to 2%. In the meantime, we're worried about employment, et cetera, et cetera. I think that could be trouble for the dollar, and it could be trouble for the bond market. But all this is guesswork. I mean, the more birthday candles I blow out, the less comfortable I am venturing off past next Tuesday. And even Monday is kind of fussy, you know.
We hear you on that.
Yeah.
Jim, thank you for
Yeah,
coming
you're
in.
welcome.
It's great to see you. Jim Grant.
All right, still to come, the new frontier, and we're not talking about space, we're talking about an airline. We begin offering customers a free checked bag, free assigned seats, and free ticket changes. CEO Barry Biffle will join us next. And then breaking news on the housing front, February housing starts coming out. We'll have the numbers and the market reaction. Squawk Box. Frontier Airlines rolling out a new strategy to take on Southwest and other rival air carriers. And Phil LeBeau joins us now with a special alliterative guest. Phil?
He is, Barry Biffle. Let's bring him in, Joe. Barry Biffle joining us from Frontier's headquarters in Denver. Barry, the Southwest move here, I think it seems obvious to people. Free check bag, free assigned seats, free ticket change if you need to change your tickets. Why not make this a permanent move? Why is this only promotional through August?
Well, look, the bottom line is this a game changer for us. We're going to offer you more for less. But if we don't get the volume, then we're going to come back to just being level playing field. But either way, this is a checkmate situation for Frontier. Southwest has made their products very similar to ours. And so everyone can now see, millions of people can see that we're a better total price. But we're looking, because we've seen what's happened and all of the outcry for free bags, we're giving people an opportunity to put their money where their mouth is and come make Frontier the new airline. But either way, we're going to win in this new environment. And I think it's good for Southwest. They're going to compete. They're going to compete with the big guys more effectively. But if we just get a few points of share off them, this is huge for us.
There have been a number of people complaining, especially online, about the Southwest move. But you're also making this move at a time when a number of people are saying, wait a second, is the consumer pulling back right now? Is this just a promotional play in order to offset some weakness that we're seeing in the market?
Well, it could be a promotional play that lasts for 5 years, but look, I mean, yes, there's softness in consumer demand. That's become very clear. For us, we're small, right? So we don't see the big picture. It wasn't really until last week when we saw the big airlines commenting that we understood kind of the depth of the situation. But if you look historically, the low-cost carriers always win in any type of recessionary or consumer pullback environment. But now we're going to turbocharge that by giving more for less in this case. So any kind of slowdown in the consumer will be dwarfed by what we believe this strategy can deliver for us.
And just to put a finer point on this, where are you seeing the slowdown in demand? Is it people booking trips for this spring in the next couple of months? Where is the slowdown?
I think it's going to take time to actually completely understand, Phil, because at first we thought this was more of a dramatic shift because of Easter moving into April. Clearly, it's been a little softer, so it's hard to say at this moment yet how much was just a shift and how much is a slowdown. But there is clearly, we're now seeing a softer patch. But like I said, for Frontier, I mean, look, we're small, so we only need a couple of points in share of those leisure customers to come to Frontier, and we'll more than power through it.
Hey, Barry, I totally get the strategy of, zigging when the other guy's zagging and trying to step in and steal some market share from Southwest because nobody really thought Southwest was ever going to do this. But I'm also reminded of Gordon Bethune's old saying on the airlines industry where, you're only as smart as your dumbest competitor. I would guess that Southwest has more to lose in this battle than you do. Is that you're thinking with this? What's the upside scenario versus the downside potential risk in terms of bringing these people in and not getting access to the baggage fees or anything along those lines?
Well, I'm a marketing strategist at heart. So you always want to be different, better, or special, right? And we've always been special in that we've been the lowest cost. But it hasn't been as transparent for people. And look, I'll take full blame that maybe we made it too complicated for the consumer. We've always been the best total price, but because we got too complicated, you couldn't see that. And so the changes that Southwest made last week, all right, they actually more lined up with where we are now. So now millions of consumers can see that we're a better total price. But we also looked at the hate that we're seeing out there. And all these people are claiming that they want free check bags as well, in addition to free carry-on, free changes, free seat assignments. And so we thought, put your money where your mouth is, because we were going to win in either case. We're going to win because now everyone can see that we're the lowest total price, or we're going to win because we give even more for less. Either way, we win. But we think the Southwest wins too. I mean, Southwest changes are making them much more competitive with the big three. I mean, they can steal all my share. They can steal all my share. It won't matter, right?
I love the idea of a marketer at heart. Are you an operator at heart as well?
Oh, of course, of course. We've actually been running a pretty good airline lately too. We've consistently been in the top 5 in completion.
Hey, Barry, thank you for coming on today. A big day for Frontier as you announce this shift in strategy, at least through August. We'll see if you decide to stick with it after that. Barry Biffle, CEO of Frontier Airlines, joining us today from Denver. Joe and Becky, I'll send it back to you.
Phil, thanks a lot. When we come back, housing starts data, Squawk Box.
Welcome back to Squawk Box. Rick Santelli here live at CME HQ with the breaking news of the morning. We start out with housing starts for the month of February, looking for 1,385,000 seasonally adjusted annualized units. Comes in much stronger, 1,501,000. That's a good number. That would be the best number going all the way back to, let's see, well, the end of last year, actually, we were 1,515,000, but it still was a nice jump. That's, what, over an 11% jump? And if we look at permits, well, a little bit better. We're looking for 1.4 million-ish, and we end up with 1,456,000. That's actually down sequentially from last month, still unrevised 1,473,000. And if we consider right now that we have import prices, export price coming out for February in front of Fed meetings, these could be important. If we look at import prices month over month, comes in at 0.4, up 0.4. We're looking for an unchanged number. That would be the biggest month-over-month import price rate of change since April of last year. If we take out petroleum, it still remains at up 0.4, double expectations, and the loftiest month-over-month also since April of last year. Now, let's look at import prices ex petroleum month-over-month. And that, I'm sorry, we just did that. Let's look at year over year. Comes in at 2%. 2% is a little higher than expectations, and that would be the highest level month over month since December last year, so just only a couple of months. Finally, let's switch gears to export prices. Month over month, up 0.1. We're looking for down 0.1. And export prices year over year up 2.1%. This one's noteworthy because last month's up 2.7 was the highest since Dece of 22. So to be moving down a bit is a good thing. And when you consider what the dollar had been doing, although it has been slowing and moving a bit lower of late, 5-month low close yesterday, that may have affected export prices, especially when you consider all the issues on pre-tariffs and some of the activity that was going on in the trade markets. Becky, back to you.
All right, Rick, thank you very much. While Rick was speaking, we do have confirmation of that story we've been talking about earlier today. This was first broken by the Wall Street Journal yesterday, but Google is announcing that it's signed a definitive agreement to acquire Wiz. That's a leading cloud security platform that's headquartered right here in New York. They're going to be buying the company for $32 billion, subject to closing adjustments. They say it's an all-cash transaction. And once that deal has closed, they plan to have Wiz join Google Cloud. Now, again, we've talked an awful lot about this new antitrust administration with the Trump administration, and we'll see if this is allowed, if this is something that's been very closely followed by all watchers to see what happens with this. Google says that the acquisition represents an investment by Google Cloud to accelerate two large and growing trends in the AI era. They're talking about improved cloud security and the ability to use multiple clouds. But again, biggest deal that Google's ever done, and the Justice Department.
Unless you just assume big is bad. I mean, you got to look at the details.
Eamon said that the FTC, the new chief, is going to be looking at size as something. As something to be looking at.
Just because they don't like that. This should, years ago, this would have been no problem.
And this new FTC chief said that he is not your Reagan era FTC enforcer. So we'll see. We'll see what happens with this. It's a big test. There has been a little bit of a chill to the animal spirits that were taking place before, just on the Trump election, and seeing what happens with this. This will be a huge signal to M&A and to any big companies that are looking to potentially do deals, because there was a complete freeze under Lena Khan.
It's big, but compared to Google, it's not that big.
True.
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 Things happen. Companies merge. They merge.
Sometimes.
Yeah,
anyway, it is
we haven't
official.
for a while.
It is official, and we will see what happens next. In the meantime, we want to get back to the housing numbers. Steve Leisman and Diana Olick join us right now with more on this. Diana, why don't you tell us what you've seen from these numbers too? Rick was talking, we were reading some of the agreements that we're going through here, but what does this mean?
Well, it's a huge surprise to the upside, especially given that we saw mortgage rates in February well over 7%, and they didn't start to come back into the 6% range where they are now until the end of February. We also saw homebuilder sentiment really tank in February. So again, it's a surprise. I will say I usually separate these out, single families to multifamily, and say, well, most of it was on the multifamily side, but I'm not going to say that. It was actually pretty equally split. You had an 11% month-to-month jump in single family and 12% in multifamily. They both, however, are down year over year. Now, part of this may have been there was a lot of noise in the January numbers about bad weather, exceptionally cold winter. And so you're seeing the biggest jumps in the Northeast and the South, which were hit hardest by that cold weather. And that's where you may have been taking some of those January starts and moving them into February. But again, it's interesting to see that the builders really are expecting more demand. Part of that is because there's still very lean supply on the existing side, and that existing side is very expensive. In fact, the spread between new home prices and existing home prices is shrinking dramatically, which means there's not that much of a premium for new, and the builders may be paying into that, especially because they can buy down mortgage rates. So it's a nice surprise to the upside as we get into the all-important spring market. Becky?
Steve, what does that mean for the broader economy? Some of the things that the Fed might be watching as well?
Housing is good. We need a lot of housing in this country. It's a very important part of really the concern people have had about the economy and their outlook is that it's been difficult for new home buyers to find homes. It's been difficult for people to move. If we can shake up and get this housing market going, it would mean a lot for the broader economy in terms of just even things like worker mobility, things like being able to move up and to get into a bigger house when you have a family. Just basic American dream stuff has, for many people, been forestalled because of really what's a housing crisis with a question as to whether or not there's a role for local, state, or even the federal government in trying to figure all this out. I like what Diana said about the weather part of this thing, which makes me a little nervous that there's a sustainability to this level. But there's also this question as to where is the mortgage rate, where people say, okay, I'm gonna be all right with this. 7 is not the number, 6 is closer, and 5 is a lot better. But Becky, I want to ask you a trivia question. When was the last time I ever talked about import prices? Becky?
Yeah, never.
Never. But now we gotta watch it, okay? It came in up 0.4, higher than expectations. This is not a number we have often or almost ever talked about. It's not a big deal in terms of the setting of consumer prices here in this country. But now that we have this tariff issue, we have to watch it. I don't know that this number here, this outside surprise, is part of the tariff issue. It did come from non-fuel imports, look to be mostly the source of it. But now this is one conduit. It doesn't mean that that passes directly into consumer prices, because as we've talked about, there are all these stops along the way. The exporter can eat some tariff, the importer can eat it, the retailer can eat it in margins, and then it gets passed on to the consumer. But this is something worth watching. It's something that's going to be part of the inflation debate. And so we have to start to think about learning about and talking about import prices, and to the extent to which that is an issue for consumer prices.
Yeah, and I guess it would show up in the PPI, the producer prices, before it would show up in the CPI.
Right.
Both those numbers look pretty good last week when we got the monthly readings on those. But you're right, watching anything along the pipeline is a new sport for all of us, shall we say.
Right.
Steve, Diana, thank you both.
All right, coming up next, Texas Governor Greg Abbott on the Texas economy, border security, and much more. Squawk. Coming right back. Our next guest wins re-election in 2026. He'd be poised to be the longest running governor in Texas. Already was the longest serving attorney general in Texas history. Also was a justice on the state Supreme Court. You got all those things, Governor Abbott, which puts you in a pretty unique position to comment on some of this latest stuff with the deportations. There's so many different angles to talk about it, but I don't know if there's anyone in a better position that had a better front row seat of what's going on that border in the last administration and in this administration. You're probably the best person to comment on it. What differences have you seen there?
We've never seen a change as much as we saw 4 years ago, and now this year, with regard to what's happening on the border. What began happening 4 years ago, of course, was a complete failure to enforce the immigration laws of the United States of America, and as a result, we saw an all-time record number of people crossing the border illegally, more than 11 million people, including people who are known murderers, rapists, and gang members and cartel members. And as a result, the crime across the country skyrocketed. Now, in the immediate aftermath of the Trump election and Trump taking office, it's gone from 11 million people crossing the border illegally to just a trickle, as in just a handful of people. I was with some officials from El Paso last night, and they said that where there had been 3,000 people crossing the border sometimes a day just in El Paso, there were now nine people a day. And the people who do make it across the border now, they are immediately arrested and then deported, and as a result discouraging people from entering the border again. And so quite literally in February was an all-time recorded low of the number of people crossing the border illegally, and we are seeing that now in the state of Texas with a massive reduction in illegal entries into our state.
Well, I'll tell you where I was going with that, why I mentioned your service on the state Supreme Court as well. There's a piece in the Journal today talking about Trump, deportations, and the law. And you'd think this was, the reason I like this, the Journal does take issue with maybe going against what the courts are saying, but at least they bring it back to the president was elected to do the opposite of what the Biden administration did in terms of using the justice system. He was, you can see at the end there, Governor, Mr. Trump was elected to stop that, not imitate it. And I'm just wondering what you think of the judge's decision with these, I don't know, has it been litigated that they're all gang members? They're bad people, it seems like, that we were on that plane to El Salvador. A judge, once again, one single judge, wants that plane to turn around, and after a deal's already been made with El Salvador. The Journal's arguing that, I don't know, I think the Journal's saying the plane should have turned around and come back to abide by the court's decision. What's the right move on this?
So to get into the way the law works, Joe, and that is, first, as you point out, it used to be a Supreme Court justice and then the Attorney General of Texas. I've litigated these issues quite frequently. And a lot of people in the business world, they forget the way the Constitution was constructed, and that is there's the separation of powers. The executive branch has authority that can operate independently of the legislative and the judicial branches, and you got to look into the bowels of the details of it to see whether or not that is a pure separation here. But what the Trump administration is saying is that they have the independent authority that cannot be overridden by the judicial branch or by the legislative branch to execute these laws. Remember what Trump is doing. He's just not saying, oh, well, we're going to do this because we want to do it. Trump is enforcing laws that are already on the book, and that's exactly what the Constitution requires the executive branch to do.
But isn't there an interpretation of the law that the courts are responsible for?
So, Becky, you are correct. There are interpretations of the law all the time. However, I can equally tell you that there are many times when the interpretation of the law is erroneous or is overextensive or over-inclusive. And, you know, we have some trial court judges in the United States of America that erroneously apply the law and tie the hands of the executive branch. And what the Trump administration believes, and I'm just going on guesswork here, they're more than happy to step up and test the limits of what the courts will rule are the powers of the executive branch here. Point one or point two, Let me just
I mean, I get that, but
Well,
isn't it, I guess the question is, can a stay be enforced by the courts while you wait for this to play out, maybe play up to the Supreme Court to see how they come down on these things? What happens in the meantime? Who has the upper hand?
So
Who has the right?
In the short term, there can be a stay that can be immediately appealed up to the United States Supreme Court. That's different in a way from a flight that's in the air all the way to dropping off in whatever country they're going to be dropping off these people who are very dangerous gang members. I don't believe there's going to be a court order that requires the Trump administration to go back to whatever country they drop these people off in and pick them back up and bring them back to the United States.
It's amazing that we're talking about possibilities like that. You probably want to talk about Texas. Great. I guess you would argue it's the best state for business, obviously, is the governor. But what's going on? You got something with Delaware. I know there's been some op-eds that you wrote. Also, the Texas Stock Exchange. Where does that stand right now?
Well, let's just look at the objective data. Texas is the economic engine of the United States. The report breakdown for the states just came out, and for the past month and the past year, Texas ranks #1 for the most new jobs added, and we've been #1 for the most new jobs for years now. Early this month, we're recognized as the #1 state for business relocations and expansions. The key here is that we've been #1 for 13 years in a row. Texas has the best business climate in America, and now we've created the best business courts in the United States. And as a result, as much as we've seen a massive inflow of businesses from other states coming to the state of Texas, that inflow is now even accelerating even more because the business courts make it even more business friendly in our state.
How about as far as Delaware goes? We had the governor of Delaware on. He didn't see any benefit to going to Texas at all. He also didn't know. We mentioned someone named Elon, and he didn't know who that was. He had no idea. So he said it was bizarre. He said Elon who?
Well, I can tell you two big differences for those who are corporate counsel out there to know the difference between the Texas business courts and the Delaware business courts, and that is what happened in Delaware. The reason why companies are leaving there and incorporating in the state of Texas is because in Texas we are going to strictly apply the business judgment rule. We're codifying it around now, but also we're limiting to some extent those who can bring derivative actions. That's what was brought against Elon Musk by a guy who owned, I think it was 6 or 9 shares of Tesla stock. So get this, a guy who had the value less than a Tesla vehicle was able to try to upend the entire corporate practices of the Tesla company. That's just wrong. And so what we are trying to codify in Texas is ownership of at least 3% of a business before a derivative action can be brought against a company.
When will what are we calling it? The Texas Stock Exchange? When's it launched? So if everything goes smoothly.
Structurally, they're up and running for both listings as well as trading. That's expected about this time next year. They're making very rapid progress. Here in the course of the next few months, they need to get approval by the SEC, and then they're off and running.
NASDAQ as well, right?
Well, NASDAQ and New York Stock Exchange, now they've realized, Texas is the #1 state for New York Stock Exchange listings. And now the New York Stock Exchange has moved their Chicago headquarters to Dallas. And now the NASDAQ is opening up a facility in Dallas. And so now what stock exchanges, capital markets are realizing, the place to be is the state of Texas. And we have competition. And one thing Texas is up for is competition. So with the Texas Stock Exchange will be battling against New York and Stock Exchange and NASDAQ. There's one big difference there, Joe, and that is the brand. Right now, the brand of Texas is a stronger brand than New York. And to be labeled the Texas Stock Exchange in the coming years, I think will be a strong magnet for the expansion of that stock exchange right here in the great state of Texas.
All right, Governor. You say hi to that great First Lady, Cecilia. We were hanging out with her at the Telluride Film Festival. My whole family was with her, and you weren't there. She didn't even bring you. I don't even know if she thought about it. Huh?
I was working, but yeah, she told me she had a good time with you, Joe.
Yeah, that's a great, it's the greatest, Terry Ryder. She was, what a great lady. Anyway, and then tomorrow night, I'm hoping Xavier, I don't know, I'm not feeling confident, Xavier versus Texas, but we'll be watching that on that playing game.
Texas will pull that out.
Yeah. Texas, or Xavier in the second half, I've been disappointed more than a few times. Governor Abbott, it's good to have you on today. And what about your political future? You think it's not a lock on J.D. Vance in 28, is it?
You take one step at a time. My next step is to run for re-election.
Okay. All right. See you later. Thanks, Governor.
Thank you, Joe.
Up next, we'll get reaction to this morning's Google deal to buy cybersecurity company Wiz for $32 billion. And it is NVIDIA's biggest event of the year. The company's GTC conference is in full swing. CEO Jensen Huang will give a keynote address. We'll speak to an analyst about what investors can expect. That stock this morning off by about half a percentage point. By the way, don't miss a live interview with Jensen Huang. That is tomorrow on Squawk on the Street at 10:15 Eastern Time. You can then see more with Huang on Mad Money with Jim Cramer. Squawk Box will be right back.
Insurance.
All right, welcome back, everybody. Google announcing this morning that it will acquire cybersecurity firm Wiz for $32 billion. That is Google's largest acquisition ever. Joining us right now for more on that deal and NVIDIA's conference that's taking place in San Jose today is Ray Wang. He's Constellation Research founder and chairman. Hi, Ray. Let's talk about what you think first about this deal with Google buying Wiz. It was something that they had gone after before. Wiz kind of stepped away and said that it was going to go for an IPO. A lot of questions about whether this can clear antitrust regulations in the Trump administration. What do you think?
That is the number one question, whether they can clear antitrust, and that's going to be the challenge. because even the fact that Lena Khan is gone, the new head of the FTC doesn't seem like he's pro mergers, and we'll have to find out what's going on. But this is an important deal to Google because the future of the cloud is a secure cloud, and they've been pushing after this pretty hard, especially given what they have with the Mandiant deal that they had in the past. And of course, there's a lot to grow on the security side, much more than just Google Cloud. It's additive to the rest of the Google Cloud business. And so they need that as a way to compete with AWS and Azure in the space.
So if you're an investor and you look at this, you think, great, we want to see this, happen, or do you look at it and say, it's hard to be the first one to foray into the new FTC and see what happens?
Someone's got to go first, and if there's going to be some muscle in the game, it's going to be Google. So I think it's actually a smart move for them to try to go after this, because there's nothing in this business that would say it's a monopoly or it's antitrust here, and it's a good test to see where the antitrust law is going to sit.
Ray, let's talk NVIDIA. What do you want to hear from Jensen Huang today?
Well, the hot topics are going to be Rubin, which is the next chip. This comes out, and this is really part of Jensen's roadmap to be able to deliver new chips every 2 years, which sounds insane if you're a chip person, and they're going to be doing that. And they're going to talk about Blackwell as well. But the other piece that's going to be big here is really conversations about quantum. There's a quantum day. After Jensen kind of poo-pooed quantum not showing up for another decade or so, he's got panels with D-Wave, Rigetti, a whole bunch of other folks, and then, of course, robots and physical AI. So humanoid robots are going to be a big piece here. And of course, there's going to be a lot of talk about what they're doing in the software layer in CUDA, which is really how you access all the power behind the NVIDIA GPUs.
He felt bad about what he said about quantum. Didn't realize it was that a lot of those companies, I think, were public, that they saw that big drop. So maybe he's trying to make amends with what he sees there. I mean, that when Jensen Huang speaks, there's always the ability to see other stocks move pretty substantially. You're a buyer of NVIDIA right now, or not? It's up 9% for the week.
I'm definitely a buyer on this, and part of the reason is because there's a lot more to go here. The spook out on the DeepSeek piece isn't really a big deal. We are moving from training to inference. You're going to see more and hear more about that at the conference, and that uses definitely a different set of capabilities. And of course, I'm looking forward to hearing what's going on with how customers like Delta and Disney and Waymo are using NVIDIA, especially given their businesses, as we're starting to see businesses take advantage of AI as opposed to just hyperscalers.
Ray, thank you for your time today. We'll talk to you again soon. That does it for us today. We'll see you right back here tomorrow. By the way, we have an exclusive interview tomorrow with Bank of America CEO Brian Moynihan. Make sure you tune in for that. Squawk on the Street begins right now.
Good Tuesday morning and welcome to Squawk on the Street. I'm David Faber, post 9 of the New York Stock Exchange. Jim Cramer, he is in San Jose, California for NVIDIA's GTC event. Carl is off this morning. Let's give you a look at futures before we get started with trading. 1.5 hour from now, we are looking for, as you can see on the screen, a lower open. Let's get to our roadmap. It does start with NVIDIA's AI message. CEO Jensen Huang getting set to deliver his keynote. That'll be later today. Plus, it is Alphabet's largest acquisition ever. In fact, by far, it agrees to buy cloud security startup Wiz. The price tag, $32 billion in cash. And it is day one of the FOMC meeting with Chair Powell set to make a decision, of course, on rates. That'll be tomorrow. All right, let's get right to NVIDIA, of course, ahead of Jensen Huang's big address. That's later today, as you've already known by now, I guess, but we're going to remind you again for the next 24 hours. He will also join our show live at 10 a.m. Eastern. More with Mad Money later tomorrow as well. All of that, of course, taking place with the man I'm about to talk to for the next hour. Jim, what are your expectations from this keynote?
Well, I think that there's going to be, let's say, a re-anchor. But what we're going to find out is that the reason why the stock lost $600 billion in valuation from DeepSeek is, frankly, this is the Chinese hedge fund, basically, that came up with a way to be able to make something AI that's much cheaper, is because, well, look, this is terrific. It gets more people involved. You've got to have more people involved. It's an on-ramp now, and the focus will be what happens when you get to the NVIDIA platform. And they're going to stress platform because platform is a little less assailable. when you have a platform, obviously you have software, you have many different areas that you can emphasize. I think there'll be a health vertical that we'll see. I think we'll be able to see an autonomous vehicle, and that's really important vertical, and a video vertical. So I think that it's actually going to be, David, the selling proposition. Remember, it's a trade show. People seem to forget that. I know it's Woodstock. I know that there's 500,000 people here and 100,000 people trying to get in. It's not Country Joe and the Fish, David. It's a trade show.
Right, and there's going to be a lot of different things I would assume to see. You've been talking about robotics, humanoids, so to speak, being an important potential new area for business. Is that going to come up? Are there going to be robots that you're going to be able to show us later? I don't know.
Oh, what a great question. Last year there were robots, but they were, in the end, they were like Star Wars robots and stuff, and they were really kind of not workable. They were for show. This year, I think they're not going to be for show. David, what we're looking for are use cases that use a tremendous amount of compute. I think people at home say compute. Well, that just means, like you need all this stuff in order to make it work. And why that's so important is that no one else has that. Let's say the Chinese have something that enables you to be on board. Well, once you're on board, then you need Jensen, you need NVIDIA. So I think what you're going to see are the things that really need a lot of, let's call it power. And that's autonomous vehicles, and it's the humanoid, the robot. Interesting, David, these are Dogeman. These are things that come from Musk. I think they matter. Musk, by the way, uses a huge amount of NVIDIA to do Grok, which people are talking about. Maybe Grok has a kind of a new place in the firmament. And meanwhile, the stock had a big run last week, and everyone's looking at the stock and saying it's not that great this year. That's me being a complete ham. Notice the Eagles headset there. But anyway, David, are we making too much of it? No. Why? Because if you talk to Michael Dell, whom I have on tonight, Michael Dell had no revenues in this in fiscal year 24, and now they're going to have 10 billion, and next year they're going to have 15 billion. It's happening so fast, David, that if we don't take note of it, then we are ostriches. You and I are not ostriches. We may be dinosaurs, but we're not ostriches.
We are dinosaurs, but not ostriches. I think that's a good definition.
There you go.
And in fact, we talk about it every day, of course, and it continues apace. The enormous building taking place of data centers, which essentially are becoming giant supercomputers, for lack of a better way to describe them, because all the GPUs from NVIDIA, typically, of course, they're all connected. You've talked a lot about that. A lot of other companies in there in terms of providing their services and their hardware for those connections as well that make powers Grok, for example, essentially giant supercomputers, right, with somewhat 200,000 H200s or whatever it might be in that case. And that's what we're talking about, Jim, and that is what is going to power not just, obviously, the training models that continue to get built as they get closer and closer to AGI, but inference as well, which becomes so important, and this next generation of potentially robotics and autonomous cars and a lot of other things I'm sure we haven't come up with yet.
Here's something anomalous that we should be focused on. Vertiv, where you've got the probably market share that others would just love to have when it comes to data center. The inside of the data center, they are the guts. David, the stock is going from 155 on January 24, interesting date, right? That's DeepSeek, down to 89. This is just a catastrophic decline. It touched as low as 62, but that was last year. But if you look at that chart, what that says is skepticism about everything that you and I just talked about.
Yeah, so what are your thoughts? Obviously, we've mentioned this many times. Dave Cote continues to be the chairman of Vertiv, one of the more successful SPACs of all time, we should mention, quite some time ago. It came before the big run-up, of course, and whatever that was, 21, 22. But as you point out, down as so many other companies related to all the fervor around AI, stocks are also down. Jim, even power suppliers, which obviously we've talked so often about, also were huge beneficiaries as we headed, into the new year.
If we can put up the chart of Marvell Technology. Now, this is Matt Murphy. Everyone knows him as a statesman of the industry. If you look at this one, again, January 23. I keep referring to that date because that's DeepSeek. From January 23, peak to trough, 127 down to 53, now it's 70. This has been catastrophic for the shareholders, and it's all because people don't believe that there really is a rainbow.
So is that going to change today at all? I mean, is that narrative going to be able to change now? We should also point out the multiples got incredibly high in so many of these companies, in part reflecting the fact that spending would never end. But does Jensen Huang sort of somehow managed to change the conversation today with his keynote?
Yes.
Think so?
Yes, because the short-sighted nature of what happened here is extraordinary. I actually was doing some calculations. Thank you, Brock, for helping me. Brock actually was very sympathetic and called itself something today. But January 23rd is when this news came out about the hedge fund that actually was able to make it so that you could have the first part and get on board here for really, I'd say, a quarter of the price of using NVIDIA to be able to get that board on. So January 23rd. Now, what really happened here, what people don't understand, is that Jensen Huang did not address the issue. He didn't address it till Feb 20, which is where you start seeing a little bit of bounce. So you had 25 days that he did not address this issue. And because of that, and the people here said it was the quiet period, because of that, you had this tremendous vacuum of information. Then there was an interview done, a pre-record that was done on Feb 20, which explained it with Jensen, still within the quiet period. So there's some questions that need to be answered here. Why did they wait so long? Because they waited so long, you had 600 billion lost. Now maybe you could say, listen, they waited so long because that was some sort of legal requirement, but that was the vacuum that caused this decline.
Well, we're looking forward to that vacuum being
Untalked
filled
about.
in part by him and then in part by you as well in terms of conversation that you're going to be having with him. Jim, I want to get to a big deal this morning. We haven't seen many deals at all this year, and certainly not ones of size, but Google's parent Alphabet has agreed to buy cybersecurity. It's really a startup still, called Wiz. The price tag's $32 billion. It's all cash. Of course, Wiz is a private company. They had talked about a deal last year, somewhere in the range of $23 billion. Valuation continues to move up. Now, I think, from what I've at least been able to ascertain, sort of the run rate is maybe $1 billion in revenues. So paying 32 times, 32 years worth of current run rate revenues.
Oh, man.
It's a big multiple. Sundar Pichai, CEO of Alphabet, they just started a call at 9 o'clock. And he said, listen, the pace and impact of breaches are accelerating. AI brings new risks, but also new opportunities. And at the same time, multi-cloud and hybrid are becoming the norm. So against this backdrop, organizations looking for security solutions that improve cloud security and span multiple clouds. That's what we're talking about here. We're talking about cybersecurity in the cloud, Jim. It's a large deal. Now, of course, it's only about 1.5% when you talk about a $2 trillion market cap for Alphabet. So even though it is by far the largest deal Alphabet has ever done, it's still in no way, shape, or form anything close to a bet the company kind of deal, where oftentimes when you're doing a $30 billion acquisition for a normal company, that certainly ranks as something very significant. Nonetheless, it's big for a company, again, Jim, that hasn't been around that long, New York-based as well. And, they decide, hey, take the money now, I guess. 32 times current revenue is probably not bad.
Well, look, a lot of people are buzzing. Two observations very quick here. CrowdStrike would be valued at least above its 52-week all-time high of 455. Because this is an astounding number, and CrowdStrike is cloud native. And second, this group has been dramatically really out of favor, David. There had been a belief that suddenly there was some cyclicality to it. CrowdStrike from 455 down to 330. Palo Alto gets shelled 200 down to 150. This may make people feel a little bit better about the group. Maybe remind people why it has to be it should be bought. Those stocks are actually looking down. That's stupid. That's okay. People have every right to make mistakes. And then, David, how about this? Tell us. I mean, I heard this deal was discussed, but people were worried about regulators, and now they're less worried about regulators? Doesn't that presume that this... tell me about this.
Well, I don't have a great deal of insight for you in terms of what the regulatory scrutiny is going to be like, although, again, we've all been trying to judge exactly where things are going to come out on certain deals in this current administration versus the last one. In the end, you always come into this question of, well, who's in favor, who's out of favor. Jim, it shouldn't necessarily raise enormous red flags, but again, obviously it's going to get a close look. It was thought of previously when it was discussed as certainly getting significant scrutiny. You know, on the face of it, I don't know. What's the market here? What are you really looking at in terms of an antitrust threat? I'm not quite sure, Jim. Microsoft and Amazon, obviously, this is Google coming after them in part, trying to enhance its own cloud offering for its customers. You don't believe that there is a threat, right, from an antitrust perspective?
But that doesn't matter. That doesn't matter. The previous antitrust department under Jonathan Cantor at Justice was very predisposed to dislike Google and view it as a monopolist. And then a judge viewed them as a monopolist. This is probably the firm that is most under fire, or was most under fire in the previous administration, for being a monopolist. That's a very tough term for a judge to say. And you know, David, that would mean anything they do would be considered monopolistic. So I think that they are going to face scrutiny, even if they shouldn't, because they they were not regarded as a good actor, not regarded as a good actor at all.
You raised the salient points here. I mean, they are still dealing with two different cases, right? One on the advertising side and one on the overall is the company being deemed, as you just said, a monopoly, and what they're going to actually do in terms of a remedy there, which is yet to be adjudicated, Jim. So yeah, it's under that that they are going to be reviewed here, but still a significant deal. And again, does it mean somehow that we're going to start to see an avalanche of deals in a year that has been defined so far by the dearth of M&A activity? I don't think so. As I said yesterday, and I continue to hear, you've got a lot of CEOs, and hence what I hear from a lot of bankers and lawyers who do these deals, who are simply saying, I've got to wait, see what the tariff situation looks like, so what my costs are going to look like, what my, all those things that come into play make it difficult to price an acquisition, let alone have the confidence to either use a lot of cash or your own stock in pursuing one.
Well, this is the worst way to start. If there's a parade, might as well just get it out there. This is the company that the Justice Department feels is probably the worst when it comes to trying to consolidate the industry, trying to be able to take advantage of the government and the government's largesse. So I wish they weren't starting it, because this is the one that whatever they do is going to be more heavily scrutinized than anybody else, because they're a monopolist.
They are. I would point out in the deal overview, got the slides here. Alphabet says its capital allocation priorities remain unchanged, starting with organically investing in the business, M&A and investments, obviously, and return of capital as well through dividends and share repurchases. As our viewers well know, they do generate an enormous amount of cash at that company, and it will be, as you might expect, after it closes. By the way, they're expecting, let me see here, 2026. They're not giving us a sense as to what part of the year 2026, but that's obviously gives you a sense that it's going to be a fairly long road, since we're still pretty early in 2025 here in terms of getting this thing done, Jim.
But David, I mean, I don't want anyone to think that I think that this should be blocked. It's ridiculous. It's perfect. You need that. Google Cloud has to be competitive. You want Google Cloud competitive in order to be able to keep the Amazon Web Services from charging too much, and Microsoft Azure from charging too much. So if there were common sense, if common sense prevails, this is a terrific acquisition. But I also know that we keep hearing that there's more similarities to Justice and the FTC than there are differences, and that's quite this is a great test case.
Yeah. All right. Google Cloud getting a lot bigger if and when they close the Wiz deal. Let's get to some breaking economic data. Rick Santelli has that for us. Rick.
Yes, David. Industrial production capacity utilization. These are February reads. We're expecting a number up 0.2 on production. Triple estimates up 0.7%. That's the best number since Dece of last year. But remember, last year we had 7 to 12 months were negative. So this is a nice positive number, a subtle negative revision in the rearview mirror from up 0.5% to only up 0.3%. Now let's look at capacity utilization, shall we? expecting 77.8. Comes in better, 78.2. That's the best utilization rate since mid-24. And there's a subtle revision from 77.8 to 77.7 in terms of January. We see that interest rates on a 2-year are unchanged. On a 10-year, they're up 1. We have 13 billion reopened 20s to be auctioned at 1 Eastern. And the equity market's open in about 13 minutes. So stay tuned. Squawk on the Street will return after a short break.
I'm here, Jake Paul. I heard you like to fight people that are in retirement. Jake Paul, I'm here. I'm 64 and I'm in my prime, Jake. I'm older than Tyson. I'm here. Good morning, retail traders. How have you been? I'm just fine. I'm gonna get my coffee warmed up. Good morning, retail traders.
And make it count.
All right, we are looking down on the futures as we get ready to start trading 10 minutes from now. You can see there some of the laggards as we head into the opening of trading. Tesla, top of the board, of course, extending what would be a significant slide since the beginning of the year, down some more than 40%. Squawking the Streets right back.
Okay, I'm here. It's me. Not hot enough. Okay. Well, Becky's in green. She's the prettiest thing I've ever seen. We have a support level at the yin yang today at 562.71. What's a yin yang? That's when a resistance breaks and it pulls back and hits and becomes a support. As resistance, support. Yin yang. Some would call it a pivot point. $562.71. Now, from where I work around here, a yin yang is a wee wee. Oh, I didn't know that. Yoko, did you hear me? Better pay attention.
Welcome back. It trades at about 28 times earnings.
Whoa! We don't need to hear about your fundamentals. Do you understand me?
Oh.
Carlox, your mic's on. It was on yesterday too. Don't make me have to mute you. Oh man, I'm feeling spicy. La 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 la. La 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 la. So they're calling this Google thing a test to our government. See if they're going to block the deal. In the video today, you got Mr. whatever his name is speaking. So I bet you there's going to be a trade on NVIDIA today. CNBC was pumping it this morning. And of course, they can't stop but bash Tesla. Screw you, CNBC. And the horse you rode in on. How dare you? Well, it did pull back to my support, a little bit below it. And how many more minutes we have here? I got 4 minutes. I'm going to walk into the kitchen, add some hot water to my coffee. I haven't looked at AMD in a while. AMD's at 103. And the pot stocks and China. I'm feeling pretty. We got Pow Pow today, or starts today, the conference. And then he speaks tomorrow, I think. I'm feeling real good. I'm feeling real active. Ooh. You can tell the liberals at the IRS, they're really upset they have to go back to work. Two of the same ones complain every single day. And these are big time liberals. We had it made so much. So today I brought him some cookies and some chocolate milk. Okay, I'm taking off my shoes. Smell good. I'm trying to decide what kind of tennis shoe I want. I'm upgrading my, well, I'm not upgrading. I'm going to get I want to get a white pair. I don't have a white, mine are all dark. And I'm thinking about the Nike Venero 18s. So if anybody has a good suggestion in a shoe under 170, $200, let me know. The best tennis shoe. And we're off to the races. Here comes Pride. Well, I'm down pretty good. I'll be watching the SPX rated open, please. No, I don't have my platforms up yet. Damn. Oh, I hate it when my password doesn't work the first time. It takes like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 seconds. Today's March 18th. Now see these dim contrast. Oh, that's a SPY. They were cheap. I was going, what the heck? Okay, we're looking at this 5700s ready to open here. $420 come up, but I didn't get it. I'm not thinking about it right now. It's time to make a business decision. We got a hammer. Jimmy got $440 for his first trade of the day. Might just hold these all frickin' day today. March, what is today? The 18th. $5,700 at 4.40. I'm dreaming of a white Christmas, ones that I've always wanted to know. I think we beach trade. So I got 2 contracts at $4.40, and we're at $4.90, $5. I can make a business decision. There's low volume. So in the SPY, I got a $3 resistance at 467.30. Come on, you filthy bears. We're at 380 now. They're not being very nice. We've got a head and shoulders. Could go either way right here. We've got actually 2-headed. Well, no, it could drop a little bit more. So got a couple support levels. That'd be a double bottom for the day. Yeah, this thing could drop a little bit more. We're at a double bottom here shortly, so I think I'll add 2 more. I'm going to add 2 more here, I think. God, there it is. That's where we're going to hold right here, 320. Come on, Bobo. $3. My average is $3.70 or $3. Well, where's my platform? What the? Well, there it is. Not looking good. Not looking good yet. Apple's up. Tesla at 223.19. Stock dives further. Wall Street is worried about more than Musk. Boy, they flashed that many a times. Okay, Jimmy. Quantum computers are down. What do you got here? $15-minute signal and toss as of yesterday. Let me see where my SPY support is. We're at the pivot point. We're at the pivot point. You think we're going to bounce here? Okay, that's some encouragement. I had 56, 30, 49. We got to break the 9. I might add some more here. Oh, look at Johnny. Look at Johnny's chart. Ooh. Break it. Bullish trend on the SPX alert. Oh God. There's a drop. Always Clean Retail Traders, may I help you?
Hello?
Yeah, what's up? This is retail, this is being a recorded line, may I help you? That works every time, man. Just got to tell them it's a recorded line. Well, looks to me like I'm starting off real bad. Okay, Jimmy, you're going all out. $2. I'm at 285 now, average. Come on, baby. $245. Break the 9, please. You coward. So low support had 559.55 on the SPY. NVIDIA held 115. It should be going up today. Come on, break out. Break at 9. Come on, bitch. Well, I don't know. Might have to take a loss on this one. I hate to say it, though. Definitely the Bears are on fire.
There's going to be some cooperation on some levels.
What to do? It's definitely below my support that I needed to hold. La 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 la. Come on, you beast. Amazon down $5. Man, this thing's just knifing. I'm still, I don't know. I hate to sell it. I hate to say it. Bears are definitely on fire. You see more selling? Let's see. I'll double down if I have to. Right now I got 2,200 in it. I hate to take my blood pressure right now. Maybe a nice orange could help me. How many times? 150 times 8 is $1,200. That put me at 34. Let me right back. You gotta walk away for a second. Can't look at it no more. break it. Take me back to the 50 SMA, baby. And that's at 56.38. And I'm debating, I didn't. 150 would have not got me where I wanted to be if I bought them at 150. But not looking good. I was at 2 something there for a second. $5 times 8. Then been down 680. We need you to break, for heaven's sakes. AMD's at 115.48. Apple's back at resistance. Meta's at 582.50. I'm surprised Wall Street ain't picking on the Zuck. Okay. Bob is at 142.76. I hate to be a loser. The video's back at 115. I have 111.91 on here for some reason. Well, you see why. Right now, I like where it is. Right off the 200. Let me look at the options on that. Move this over here. Hate to really load up on the SPX. NVIDIA, the 118 strike at 220. Okay, here we go. We're going down more. Got the snake breakout, pullback, high or low. Well, I'm going for it. I'm going for it. $125. Yeah, let's do that instead. If I pull this one out, I'll be one happy camper. $125. Damn. What'd you get yourself into? It'd be nice to have a little nice breakout Bobo. Break it. Amen. Amen. Shit. I might have to stop out. I hate to say it. Break it. I need 205. Then I want $3. Jim, would you please go into the stove and cook your soup? Oh. You know, if I sell this sucker, this thing's going to fly. I'm going to put in a fake sell. That always works in a situation like this. We got snake breakout, high or low, and I need a boom to 56.31.92. Just a big old fat candle. Come on, baby. Come on. Now I'm starting to breathe hard. Flashback from the past. You could see 56.95 or 56.74 or 56.38. I'll take any of them three. Now we're above the 21. And we're squeezing between that and the 50 SMA, which I don't come across very often. I'll be right back. I'm going to the kitchen. I could have a hot chocolate. That'd really turn me on. So we got a symmetrical flag. I think we broke out of it. Snake with a symmetrical flag. Amen. I've got the perfect song today if this breaks out. It's not I'm lucky, it's something else. Let's see here. Yep. You can do it. Oh no. Come on, well-wishers. I switched my breakfast with smoothies here lately. Might have to go back to eggs and bacon.
Course of the year, it's really kind of that the non-U.S. markets have outperformed the U.S. markets, and it's not a question of all of a sudden Nvidia's a bad stock. It's a question of people saying, "Hey, you know what? I made a lot of money on some of these names.
Yeah, I did.
It's time to take some chips off the table and reallocate to things that are more attractively valued."
Well, you're
The
a
question
little
I'm
late.
asking is this a fad? Is it a
I wouldn't do that
moment,
now, idiot.
Or is it real kind of trend? I kind of think about an analogous market situation, which was the value over growth trade, and folks looking for that for so long, and it just fits and starts, but never really locked in. Does this shift have the potential to lock in? Is Germany that great?
That's a leading question. I think again it goes whether or not this is a fad or a trend. I think depends on a lot of things. One is the general sense of the economy. If in fact we are cooling, and I'm of the camp that we're not heading toward a recession anytime soon. There are some.
Then why would you sell them?
But I'm not in that camp. I think the economy is cooling. I think inflation has proven to be a little stickier than the Fed would like. The employment labor market also appears.
We got an ascending triangle.
There's definite signs of things slowing down, and that will all have an
Now we have
impact
an ascending.
on more highly valued stocks. That being said,
I'm a little more encouraged right now. We have an ascending, what was a symmetrical, now turned into an ascending triangle. I don't think the market cares about that. It's just too slow. People are waiting. Waiting for that next move.
is permanent or if that's beginning to transition as well.
Exactly. Are there cracks in that thesis? Market trying to probe that.
The Nvidia's
Talk
up
about bonds
80
and,
cents since I called
on the
it.
credit side real quick, because I know you look beyond
Damn it.
stocks and you're thinking about how to put together portfolios for clients, etc. We've got a Fed that seems like they should be tilting a little bit more dovish.
Didn't wanna
this
see
week as the
that.
market's pricing in cuts for them in June, now at like 70% plus, but maybe that's stock market dependent. How much do you think that has the potential to firm up the market if the Fed does go a little bit soft?
Well, I'm also of the opinion that they will not do anything this week. I think that's the general market consensus as well. Although that has flip-flopped. Like at the beginning of the year, the consensus
Lower
was
interest
that,
rates?
they would cut in March. Then that probability dropped to almost zero as the
We'll
different
do that and the
economic
market will
data came.
pop.
And now I don't think it's quite zero, but I think the probability, at least the market's pricing in, is still a very low probability of a rate cut in March. But as you just mentioned, a much higher probability of a rate cut in June. So the Fed is data dependent, and it's a cliche, but they really are.
They are
And
not.
So they'll be examining the data between now and then and seeing what the economy is doing.
They wait
even
for
though
the
their
data.
mandate is labor and
This guy's backwards.
and inflation, they do pay attention to the overall economic conditions. I think they're less driven by stock markets, although they'll get pressure. Well, we know for a fact Trump's already on the record that he wants lower rates. So they'll get at least some jaw boning from the administration to lower rates, and hopefully they'll maintain their independence and make an independent decision on that. But I do think that they probably will cut in June. So I don't think the market would necessarily react overly positive if they cut in June. Versus
Break
they
the
would
ascending
react quite
triangle.
negatively if they don't cut in June.
Fair enough. Okay, so sort of an asymmetric. We just kind of need it to maybe keep the status quo for now. Good thoughts, like the macro mind. Appreciate it, Scott.
Of course, my pleasure.
Good contribution to our discussion this morning. Certuity, Chief Investment Officer Scott Welch. All right, S&P's down 1%, still down 62 points. Pretty
Don't
close
trust
to the
him.
lows. We'll come back and talk some charts for chip companies ahead of the big keynote speech. NVIDIA right now is not enthused. Hard to get kind of amped up on this group when we're starting the session down 3% in NVIDIA, but we got some charts coming up next.
TSM.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device.
I love you.
Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support.
Google did not like that
Connect with the
news.
Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone,
Well,
email, and
I hate to
in-platform
say I'm
chat.
going to lose $1,000.
Trade brilliantly.
My first trade.
With Schwab.
Trading the trending names
Let it
every
break.
day. It's fast market. Ready for you, ready to go.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
We kind of went up a
Believe
little
me,
bit.
When it comes to investing, you'll love Carl's Way.
Carl's Way.
Take a left here, please.
But there's a
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me.
Damn,
too.
Carl.
Let's move on, shall we?
no can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Boom, boom,
Whether
boom.
you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Well, this trade will make me go into retirement if you don't break. You need to break. I'm threatening you.
Let's talk some chip charts ahead of NVIDIA's keynote speech by Jensen Huang tonight. I'm finding it hard to get amped up about this, Jenny, because NVIDIA's down $3.50.
Whoa, 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 the optimism has faded since I've been on this show 90 minutes
Hey,
ago.
price is king, you know, like chip.
I know, I know. This is exactly what we see historically. I mean, GTC is not this market-moving event. It's not this AI-driven focus. I feel like it's a lot more on like the hardware, the new tech side of things. And that doesn't mean there's not a place for like momentum to shift. Obviously, as we know, NVIDIA can shift on the session. But I'm with you here. I don't necessarily see. I think the keynote. I said this earlier. I think the keynote's huge. I think that Jensen Huang's narrative around the future of this company and the handling of supply chain, the handling of the recent. Right now, I'd say costs related to this, to their build, are huge. I also think an update on Rubin and some of the Blackwell's promises of the next couple of years is huge.
I just want to hear him say that DeepSeek models still need our chips, even if they need fewer than the other models. He said that, and I think NVIDIA rallies.
Yes, I guess he needs to talk about that exact type of thing. The ways in which NVIDIA, the reason that we rallied in the first place. I mean, like years ago, we saw this name as a leader in GTCs, and there's a reason why. I think that the more he can tout
And
on
it still
the
is.
advancements they've made and why so many companies shell out, premiums for their chips. I think you need to talk about that. You need to talk about the way
Well,
this competitive.
the 63 keeps lowering, so we have to break it for me to get even.
I will say that the company will, I think, be focused on much of the
Oh, shut up. Can't you see I'm in a red trade?
which is their next generation processor architecture. I also do think that
I like
right
that.
now their earnings, which were published, of course, late in February, showed a company that is doing absolutely fine as far as top and bottom line expansion. So I don't think from like a financial standpoint that there's anything to be concerned about, but it's efficiencies that he needs to.
Today she's dressed up as a church girl, but she's showing a little bit too much cleavage. She needs to button up a couple buttons.
I said this earlier, you got to get on Reddit because there's the best threads about GTC on Reddit. I can't stop reading them, frankly.
That's confirming it's a giant nerd fest.
Exactly.
Mr. Ducat, chart, hit me.
It seems like it's a stock that's in need of a catalyst, a push or something, because we've been trending sideways for quite a while here. We do have some gains over the past 52 weeks.
I'm still in this piece of...
We had this earnings event where we spiked up here, and really not that much progress from that point.
We finally broke out of the ascending triangle.
The breakdown has been more toward the downside. You can see we have this longer term.
But I just don't like that damn 63 being so close.
Here, we broke down through it recently after a bit of triangular consolidation.
We do have a little bit of independence now.
Shape, narrowing of volatility, and you're looking for a breakout in either direction. In this case, it did play out to the downside. One notable aspect of this downside move for the bulls is that we had this gap level back here. That was a low point at our light green line near about 101.50, save for the anomalous date of August 5th. We mostly held on to that area, and we did not even test it during our recent decline.
Now we're breaking through our downward sloping trend line. We retested our old boundary, and it looks like we're holding support at our purple 252-day exponential moving average. So kind of an interesting setup here that we had the downside breakout, but we seem to have recovered, and we're hanging on to these longer-term
God, it ain't
sources of
moving. The price ain't moving.
If we were to quickly look at our volume profile study, you can see the volume is right around where we are now, 120, lining up with that yellow 21-day EMA. So a key area for us to work through, either to the upside or the downside.
All right, so this is a big spot here for sure, and I think that's totally in line with the way I've looked at the chart. It's always 120 and 140 in my mind, those big volume nodes, and so it seems to have continued to kind of self-fulfill that prophecy of that level being important because it just keeps coming back to it.
Come on.
So we're above it, we're feeling good, we're below it, we're feeling not good. I do think it's kind of that binary for NVIDIA. If it breaks down, Rick, I mean, we've got still a decent amount of support because the low for NVIDIA was closer to what, like 103, 104?
So that's a question that I could answer.
I wish they did better on their camera.
For one, this area
Or
right
charting.
here in general, that's our light green line. That's our old longer-term supportive line near 101.
Well, what is
Above
it?
that a little bit, we have another volume node, and we have our orange 63-day, our -2 standard deviation channel here, and that comes
it's
in
a
just
deviation
above that
channel.
level
Okay, I
here,
got
like
you.
105 or so. So there is volume. There is a indicator telling us it's a relatively extreme point, and we do have our extreme price lows. That doesn't mean it will hold, though. You know what I mean? Like, it just means this is a very important area. If it were to break downward, the point of control is right here, near about
Do I have
90
one of
or
them
so.
here?
If NVIDIA goes sub 100, you've got a big event in the market. If NVIDIA
Where's my
gets to that
standard
next big
deviation
volume
channel?
node at $90, then we are in
don't have
a new
any.
territory here because that would mean lower lows
How
on a
come?
long-term basis stretching back to the summer. And that's obviously not where we're at right now. We still are in a, I mean, not an uptrend necessarily. I mean, would you describe it that way? I mean, obviously it depends on where you put your timeline, but if you stretch it back far enough, you know, it still is a chart of higher lows for the most part.
For sure, and here's our 5-year chart. We have, and I guess you could say, you know, here, this would be the prevailing trend line that I would see that we have broken down through. We still haven't made lower lows, though.
Right.
So, I mean, the trend is still up. We did bounce off of our 5-year linear regression line as well, that idea of fair value here. So, I mean, we haven't had the breakdown. It's more like the trend is shifting from uptrend to sideways, I guess I would say, is what it looks like now.
The problem, last point, if we go back to the other chart, zoom in again, last point that's the problem is that it looks like that 120 is that big volume area. I guess it's not quite resistance the way you've got it drawn. It's more just a lot of chop. So, all right, that's encouraging. Thanks. I like that. We don't want to see sub $100 in NVIDIA. TSM, Jenny, and we're going to look at AMD as well. But TSM obviously more connected to NVIDIA in this whole thing.
It is. I mean, definitely. I think it's also connected to every piece of news we get in AI because of its global reach. Right now, I was reading a report that suggests it has about 67% now of the global market share as far as its foundry production business. Yes, that's huge. And in the first 2 months of this year, they reported this 40% increase in revenue, highlighting the robust demand we've already seen for its products. And I think that this has been definitely emphasized by their presence in the U.S. They did announce a $100 billion investment plan to meet the rising demand from these U.S. customers. Additionally, Meta has partnered with TSMC to produce its first in-house AI chip, aiming to reduce its dependency on suppliers like NVIDIA. And it does underscore the importance of TSMC in the growing AI chip market. I also think that with Broadcom, we've seen speculation about a potential joint venture for Intel or some of its parts, its foundry business. Plus, Donald Trump was saying over the weekend that he does see a place for value as this company is so rapidly expanding the AI push in Arizona. So I think that they have made a good, right now, I mean, like seemingly brilliant decision to stay here in the U.S. in a time of tariffs. I mean, they've been a step ahead of this.
For sure. Good point. They're kind of sliding in before. Rick, this one's a lot more calm and it seems clearer than NVIDIA.
Yes, this is a lot more straightforward, I would say. First, you have a pretty well-defined upward sloping trend line, starting with our 52-week lows. Once again, we have our odd August 5th price action here. Nevertheless, it did hold the line at our purple 252-day EMA, then almost immediately returned, and we followed the trend line once again with a pretty consistent bounce every time we hit it. Same save until recently here in early February. We broke down through it. Now we are fighting to stay above the purple 252-day EMA once again. For now, though, we're below it. I would say that we have a key line right here, 171. That's around where we had our lows after a small gap up. That's around where we're hanging on right now. But the trend has shifted from uptrend to this falling wedge type of shape here. Typically regarded as actually a little bit more of a bullish pattern, kind of counterintuitive to the name here, but it can go either way, and what you're really looking for would be a breakout beyond either of those two trend lines. We've got our moving averages just above 182 and 191.
Yeah, I think I'm going to have to write this one off. We don't hold this support line.
Downtrend has been broken, but price is more important. Price is
Regroup.
still trending downward.
I haven't had a day like this in a long time.
If we were to add our standard deviation channel study, we can see that we are at an even more.
So if we don't hold this trend line, I'm going to get out and take the big loss. I don't want to, but I have to. And they could easily come down bottom, double bottom, and have a good run. But it didn't want to break that. I hated hitting that 63. You heard me. Could have sold them right there and been down only 800. But still, yeah, that was big for me. Who knows, this thing might run up at the end of the day, or I don't know. I think I'm buck. So I just hate to sell because every time I do, I regret it almost. But this might be that one time where or it just ain't going to happen.
%45% of the Japanese gaming GPU market. NVIDIA does lead the high-end gaming GPUs, but has been facing some supply constraints. So, I mean, if you want to read it as like optimistic as you can get, you could say AMD may be looking to hopefully help clean up like what NVIDIA has done wrong. I don't think that they've been able to see that same benefit though in their pricing. Well, more affordable, generally speaking, than NVIDIA. I mean, there's also a reason for that. So I know that this name many view is hey, it's on sale, but relatively speaking, I mean, its valuation at 22 times its forward earnings is cheap. But then you look at Taiwan semi, and Taiwan's cheaper on a forward basis.
But Taiwan is not the one, though.
AMD's like nearing valuation of NVIDIA levels. I know we pulled back in everything, but we pulled back in AMD.
Yeah. It's pretty rough. All right, so chart-wise, Rick, you know, it's like a different
Come on,
world.
Jenny.
Yeah, very different here. I would say we are potentially near some kind of possible breakout. We are very close to our trend line here, our longer-term downward sloping trend line, our yellow 21-day EMA, and our old low point here that we struggled to retake from yesterday. So around
I got so many
106
reasons to
would
stay
be
in this
a
trade.
area, from which to move
I'm
beyond.
about ready to add
Notice that we did break through
and just
our
go all out in this
trend line
sucker.
Here. We stopped short at the 50 midline though, so the breakout is really a question mark at this point though. It's
Take
still
that huge
trending.
risk.
So if we were to move higher, we can see that we've got our volume node right here near about 115. That also lines up with our 63 EMA and our linear regression line. So that looks like an important area. Downside -2 channel 6943. That would be hurtful. that would be an unhappy move. But that's it's going to happen. Just that's where the math comes in right now.
16
I mean, the thing, every time it gets to this moving average, it gets rejected. So the fact that it's kind of borderlining on it, it's held there for 2 days, 3, maybe like 4,
Well, how about-
so it can hang out here a little bit. Yeah. A pretty quick rejection on that one. So it doesn't stay above that short-term average for long. So if it does, something to look at. Maybe we'll come back to AMD then. Thanks, Rick. Thanks, Jenny. Market's under pressure. Coming back for a little meetup chat, taking a deeper look at what's moving,
I have
what's not,
4,400.
what's working, and what's not.
In this trade if I buy it now. Hey, change of beat. Feel like I'm in Jamaica. I like this. I like it. So what would that give me an average of what? Ooh, 140. I might do it. If I buy 16 contracts at 75 bucks. That soup is delicious. I'm having a bad day. Boom.
Welcome back to Morning Trade Live. Stocks are at their lows. Dan Grant joins me here in
We
studio.
want a
Senior
reversal.
Specialist Retail Trading. Caroline Woods, our senior markets correspondent, is back with us from New York. Dan, we're getting hit, and the stocks are heavy.
Puts are the way to go.
Bond's not really doing much.
But I'm not saying it now.
Tiny little bid there. What stands out to you this morning?
Well, we got some supply today. We got a 20-year bond auction, not heavily participated.
Caroline, help me out here, baby.
Very likely they're not going to do a thing. I'd love for them to cut rates, right?
Ain't gonna happen.
Not going to happen, exactly.
Not tomorrow, maybe June.
Yeah, maybe June. Microsoft is lowest since January of 2024.
Not going to happen.
Interesting.
No can do.
In August, we had a big downdraft in the market, and we.
Okay, here's
did reach
75
those
cents.
lows. We're kind of extending those lows.
Let's see what the fuck goes on now. I'm
Google
going
down
big
a
time.
ton, making an acquisition, and they're down a ton today.
Yeah, we were talking about that earlier. The Wiz,
This is my
Caroline
risk.
Woods, we learned played a yellow brick in that. Was it middle school or high school play? I hope like middle school, Caroline, right? They don't do bricks in high school, right? Okay. Yeah, I mean, Alphabet's still down. The whole market's getting killed. It just doesn't look like anybody wants to.
Caroline, I have a shirt just like that.
Yeah, the worst performers in the S&P 500 for sure. Comm services, consumer discretionary, and tech. So mostly tech related there. The Mag 7 all lower. Apple actually did flip lower as well, but it is back in positive territory. So that's sort of a one to watch. We do have a few winners in tech though. Intel up again today, up almost 2%. We know that today is Lip-Bu
It was down earlier.
CEO's first day. The job, and investors certainly seem optimistic about that. I did see that
Oh, boy.
is higher today, and so is Corning, actually. They upped their first quarter guidance and gave some positive longer-term targets. So a few names bucking the overall downtrend.
Well, shit.
Up 2% again today.
Yeah, and as I had said, Lip-Bu, his first day on the job here, but it was below $20 a share before that announcement. So it's really had this impressive run higher since then, trading above $26 a share right now. But if you take a look, some big AI names, Palantir, Supermicro, Adobe, all getting hit today. Travel stocks are also getting hit pretty hard today too. Royal Caribbean, one of the worst performers on the S&P 500, followed by Norwegian.
They were
Carnival,
pumping that
United
yesterday.
Airlines. Even Frontier Airlines also taking a hit today, not getting any love for its new Your New Love economy bundle.
I'll give you some
taking
love.
aim at Southwest, and now offering basically free carry-on bag, free seat selection, and free flight changes for a set period of time. So not getting any new love for that promotion.
I guess they were trying to
Okay,
sweeten the
I
deal.
went in.
They took away the bags fly free thing. That was them, right?
Right, and I think that so Southwest just took away those perks, or will be taking away those perks. So Frontier obviously taking aim at them, but not necessarily helping the stock price today. I mean, in terms of some of the strength also that I'm seeing outside of gold, Berkshire, the kind of the flights to safety that we've been seeing. A little bit of strength in FedEx, General Mills, which we'll be reporting later this week. Nothing too notable, but when there's some green on the screen, you notice it amidst the sea of red.
Yeah, and with the earnings in a couple days, FedEx at one-year lows. Dan, talk bonds to me, sir. Are we
I'm going to get
some,
140.
Narrative support here from the Fed tomorrow. I'll come back to that point. I mean,
Are they going
bonds
to try to uninvert the curve is what you're asking me?
10-year hasn't gone anywhere since late February. Hasn't gone anywhere.
No, but the rest of
Magnificent.
the bond market has gone down in yields.
I want to be if I can get out of this even.
Yeah, 10s too, basically. I mean, we did hit 4-1, but I'm saying like
'Cause I got a lot of
take out
contracts
basically
now.
the first week of March, and yields haven't gone anywhere since February.
I agree with that, and we're just stuck, right? We have this yield curve compression. The market's stuck within about 20 basis points, the entire curve. You're probably smart to add to duration here, because are rates going to go higher?
Well, I don't know, but that's the problem. Is that last time the Fed started cutting, that's when rates started going up. Yields.
Yeah, because they thought that there was actually a reason for them to be aggressive going up.
Brilliant.
And then the long end of the
So the
curve.
question is, if they cut this time, is it for, I mean, last time they did have a reason, too tight.
Yeah, inflation.
Not this time, still too tight.
Yeah, it's tight, but I think that there's
Tight.
actually some movement on the spending side. They're actually talking about cutting spending.
That's true.
So
yeah,
that's
true.
That's going to be that should affect long-term rates.
Yeah. Let me go philosophical on real quick. Dan Grant, you got 30 seconds. Is this a validation of the modern monetary framework, basically? As soon as we cut, and everybody else expands, all the money goes overseas.
Yeah, you would think that would be the case. I don't think that's going to be the case this time.
Yeah, I mean, that's what's the last 3 weeks. It's like as soon as Germany says we're ready to get,
Debt.
Yeah, exactly. And then we're doing Doge here, and all the money goes over there. So it seems like it's pretty clear cut. All right, appreciate you guys. Thanks, Dan Grant, Caroline Woods. That's it for Morning Trade Live. Thanks for tuning in. Trading 360 with Nicole Petalides is up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account.
Nvidia
is
stock
available
ain't
in
moving.
seconds. That
It's
means
up
You can stop waiting
a
start
buck and ain't
investing
moved in
stocks,
price.
bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Well, hell. I doubt if I make this back today. Well, I might. Have to be luck.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Morning
Congratulations.
Movers. Be the first to find out what's shaping
Family
early
wealth.
market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab.
Okay. Who's bashing me in here now? Oh, this morning? Yeah.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our
I'm under 100
webcast
contracts.
series breaks down different
I got
charts
32.
like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and
Well.
start learning today.
Well, I'm done. We're going to get down to my low support on the SPY, I bet. We have number 4.
Good Tuesday morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Penelides. We're live on the floor of the New York Stock Exchange. Happy you're with us. What happened to those back-to-back gains? Well, we're back in the red. It was 4 weeks of selling, but we did get 2 back-to-back days of gains.
Man, I was
Now,
on such a good
red
roll.
Once again, we'll go through a lot of details for you coming up on today's show. Our 360.
I'm actually going to get cooked here. We now hit my low support on the SPY. Rob, we got to see if we hold 559.55. This is the biggest loss I don't think I've ever had, and probably, shit, I can't remember. I keep going back to PHOT. That was when I first started trading. That wasn't a loss, but it was a loss of a huge gain. I mean, a huge gain. I don't even know if that's PHOT still on the market. I don't think so. About JAMN, Jammin' Coffee. Yeah, that's another one. That was another big loss. That was called Marley Coffee at one time. Whoa. Oh, well. This looks like the biggest buy ever. It's the biggest loss ever, Daniel. The call is still ongoing. Well, Jim, how are you going to whip your ass out of this one? Just stay in the trade. I'm going to have to give Putin some land for him to be satisfied. And he's going to have to help rebuild Ukraine. I think they'd have to agree on that, because Putin's more or less fighting with his own people. There's a lot of Russians in Ukraine. I heard that Gaza's getting bombed again. And ceasefire's over in Well, I hate to lick my wounds. Yes, this is poor loser Washboard Jim. Yeah. Can I still have my security clearance at the Wall Street Journal, please? I know it. Can I still keep my job? Yeah. But I can't. I don't get no more lollipops. Shit. After a day like today, I just want to take the day off. How stupid. Yep. I agree. If 551 some Jim, I really had a lot of faith in you.
Nothing for you.
You were my mentor for many years. And you just... You watch. Wait and see.
They call them dumps. Big, massive dumps.
They ain't over yet until the fat lady sings.
It's all fake news. It's phony stuff. It didn't happen.
I'll be right back.
One of us has made a gross error.
Right now I have, but we'll see. I'm sticking it out.
That does not compute.
I put scents in the stall, but I could tell this morning that I could still smell that smell. And the way I understand it, they have to pull the toilet out to look at the gasket and get really a clean understanding what's wrong with it. I have a feeling this is a good company for them to do that with. I feel real good about this company. That bathroom toilet and that leak in the back is the only two things I can think of. And that outside light. Make sure he calls me before he gets to town so I can be ready. Okay. Can we have a reverse? Oh, yeah. Now, this is the low support that I counted on this morning at 4 a.m. I have proof. Well, I've had a sweet potato and my soup. I'm at 55. I'm at 60. La 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 la. Well. What's she got to say?
Right now, we are seeing a sideways range here. We can see that RSI is exhibiting a triangular type shape here with the indicator bouncing around that 50 midline. So be on the lookout for a push in either direction that would accompany a notable price breakout. And it's looking like right about here could be where that area comes into play. So if we were to break out around 153 or so, that would mean pushing beyond our trend line. Then we've got our double top resistance near about 155, 156. So that would be the likely area that probably a lot of the bulls would have their eye on for further gains. For support, we have another convenient area to watch. Double top here, gap, a pre-gap high here, and then double bottom. So the old resistance became new support. Seems like a pretty important point to watch out to the downside if things do start to falter. So if we were to look at our volume profile and standard deviation channel studies, volume, heavy area right here near about 150 that we've moved above here, but we are coming right in line with our
Tesla's back to resistance.
line, our line of best fit based on closing prices, our fair value line near about 154. So another couple of technical points to consider, Nicole.
All right, thank you for that. Any final thoughts on this one, Dan?
Yeah, I think Rick pointed out a couple of key levels there in that 155, 156 level. If we were to break there, that's why I'm looking at the trade example today, still buying the stock and then writing a May call, the May 165 call. So that gives you about 59 days till expiration, 2 months out, and again, some upside capture. And you can collect about 2% versus the stock by writing that 165 call. So technically lowers your break even down around 150 with the opportunity, to capture further upside before you think about getting called away. And that would be the break above that 155 level to 165.
All right. Dan, you have Philip Morris International. I saw a buy rating from Goldman Sachs recently, and they
What's
have a
that pink
price target
line?
now of 175 up from 165, and a lot of credit going to Zyn, right?
That's the
chewable,
51.
tobacco, and a lot of folks are using that. Tell me about this name that has had a pretty great 1 year, up about 65%.
Yeah, it's had a move, and it really went sideways. Again, it's very similar to 3M. Sideways price action for the better part of 2024, where it was a laggard, and but again, the defensive in nature. Historically, it pays a nice dividend, and that's another feature for this stock. And again, today's trade example is a buy right on Philip Morris. Again, these are two defensive names. I think that
Okay, I'm at 60.
could serve as far as defending against some price fluctuations we're experiencing in other sectors of the market, but also still capture the potential upside trend that they're currently in. And also in Philip Morris' case, there's a nice dividend yield there with the possibility to capture further upside.
Right, and there's been also a lot of talk about international stocks or stocks with international exposure, and that would be Philip Morris as the U.S. dollar has been falling, and that's beneficial to a name like this company. Rick, let's take a look at the charts, please.
So, yeah, I would agree with Dan. Another kind of similar type of price action here, the stair-step type price action, starting with these lows near 87, sideways grind, jump to the upside, more sideways consolidation, albeit for a longer time, and, kind of matches up with the last chart, that middle 6 months of the year or so, and then another big jump up, powered by earnings. So we can see that we had heavy volume during that earnings event there. So a big push to the upside on very heavy volume speaks to high conviction on the part of the bulls in this case. Once again, we have a double top type pattern here, giving us a convenient resistance point to keep an eye on near about 159 or so. But this chart actually seems like the momentum is slowing a little bit more. You can see that we had our steeper blue trend line that has given way to our more modestly sloping white trend line here. Either way, though, it kind of looks like an ascending triangle type of shape, which is more bullish anyway here, where we have a upward sloping trend line coupled with horizontal or resistance that we are quite close to breaking through once again. RSI has not played along just yet, though. We have not managed to break above our downward sloping red trend line there. So that would be another coincident sign that the bulls could watch out for if price does start to make a move. To the upside, if we were to move beyond 159, our +1 standard deviation channel comes in just above 163. We've got a volume
PM, I never heard of
with
it.
our recent lows and our trend line and our 21-day exponential moving average all around like 150 to 151 to the downside.
All right, so you're covering all the sides, seeing that RSI, not quite ready to take off, but Dan, final thoughts there, and then we'll get to Stryker.
Yeah. I mean, again, Rick has pointed out, it is losing a little bit momentum relative to 3M, but at the same time,
Golly.
they've had a longer base over the last couple of years. And
For some reason, I got it charted.
That we've watched over the last several years, and once it kind of was able to crack 100, maintain the upward momentum, and then the big move higher that we did see, I believe, in January.
Oh, Philip Morris.
To me, it looks like it's still got some further upside here, and it's a very similar type of structure to 3M, where the buy right is looking out to May in this trade example. So buying the stock and then writing a May 165 call in this trade example as well. Again, you're collecting 2% versus the stock on the call right. You get to own the stock. That generates a nice almost 4% dividend on a yearly basis. And I do think that, from a defensive standpoint,
Well.
price appreciation standpoint, this.
I think this is the worst day I've had in probably 5 years, 6. My worst day, one trade. I have to admit, can't always win, but I don't think I could always be this bad. My record is now not 1,000 anymore.
Couple months that Stryker will be able to capture the.
I'm gonna go make a hot chocolate, try to cheer me up.
A few months ago.
I'll be right back.
This is a great setup. Defined risk structure on this one. This is what they call broken wing call fly, where you're buying one option at the money, selling 2 out of the money options, and buying another option that's even further out of the money. You capture a range to the upside should Stryker get back towards that 390 to 400 level.
Okay. And what do you think, Rick, when you take a look at the technicals?
Sure, so this maybe is the most range-bound of the 3, but to kind of piggyback off of what I was saying earlier, just because it's range-bound or the momentum is slowing doesn't necessarily mean it's bearish or bad. It just means that perhaps the stock is regrouping or consolidating here. In this case, what you would want to see would be
never
push
traded that
beyond
one.
either of these boundaries here. We've got a rather persistent ceiling here, around 399 or so, and then our floor, you could think of it that way here, at this double bottom, our green line near about 352. But you could also look at it a slightly different way. From another perspective, you could say it's more of this symmetrical triangle type shape here developing, where we have 2 trend lines converging toward each other, suggesting an increasingly narrowing price range here. So we also have a confluence right here. Our 2 moving averages, yellow 21-day and orange 63-day exponential moving averages, come together right on top of each other near about 379. So that could be another upside area for which price needs to break through. So momentum, not above our 50 midline. We are trending lower here, but we had a nice bounce during the past few days. Let's see if it follows through above the confluence of those 2 areas for the RSI. Now we can also see the area where we bounced is important. It was the volume profile point of control, our heavy trading area. If we were to break through our moving averages, we've got our yearly linear regression line, our line of best fit, lining up with another heavy volume area, beginning at near 387 or so, Nicole.
All right, I'll give you the final thought here, Dan Deming. Great stuff on the charts there, Rick Ducat, as always, excellent chart. Final thought, Dan.
Yeah, I think Rick pointed out that his consolidation level, and if we do see some further upside, that I think they could capture that top end of the range. And, you know, today's trade example is, as I mentioned, is what they would consider a broken wing call fly. So capturing, again, this particular example, really, it doesn't cost much to put this on. So you define your risk with this trade example, capture a zone, you know, between basically 370 up to almost 415 before it becomes a problem, and even at that level, you're just going to break even. So it gives you a big range to the upside to capture and a low cost structure, and then it also has defined risk in this broken call fly.
All right, thank you so much. What a great big three. We have 3M, Philip Morris, and Stryker today.
My day's not over yet, and I'm not giving up. I've had bad trades and then come around and end up being real green by the end of the day. I'm not saying that can happen today because we got quad witching and pow-pow tomorrow. But there just still might be an opportunity persist where I can still come out of this okay. Maybe. We got a nice little head and shoulders here. Let me copy this down and rechart this. I still might not lose the trade yet. I'm not going to give up. Because we're at the bottom of this head and shoulders, I think. Now we might have already went down below it too, and that's not going to look good. Yeah, we went below it. So that's not looking too good. We'd go back and hit it by the end of the day. That'll be decent. 56.50. They come out green that way.
Price can go up. Oh my goodness.
Oh my goodness.
Cannot do everything.
Can't do everything.
Instead of taking cues, set the cues.
Now you tell me.
No more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
Well, the Fed just can't correct everything. Oh my God.
Trading 360. I'm Nicole Pedalides, live on the floor of the New York Stock.
Oh, you sure fucked this up.
Spotlight travel stocks. Paul Golding is here, senior U.S. lifestyle
CCL.
Macquarie U.S. Equity Research. Thank you so much for being here. Before we get to specific names, you know, there's a lot of concern about the consumer and what they make. Sometimes they're saying they're worried, and yet they're still spending. I mean, we're getting different kinds of reports. Some of your thoughts.
Well, Nicole, first off, thanks for having us here.
Nicole, we pulled back to the
We're
first
hosting
support,
Macquarie
1999.
Over the next 2 days, and so we're really thinking about the state of the consumer right now, and in our leisure coverage, we're looking at some names that are trading down today. We have outperforms on our cruise names, and those cruise lines have great visibility, forward visibility to bookings and consumer strength. And we have Carnival reporting at the end of this week, and we also had Royal and Norwegian print earlier last month, and so their booking trends look strong. They continue to look strong. Of course, it can take some time for some of these macro impacts on the economy to trickle through, but alongside cruise for the middle-end consumer and at the high end with companies like Vail that reported a couple weeks ago, back half of the ski season looks strong with destination guest bookings. And so for the moment, it seems that travel that's been booked continues to hang in.
Right, and one of the big stories that really has now not been decided just yet is how cruise lines would fit into the tariff story, right? Because they're all over the world, and are they, going to have to pay tariffs or not? I mean, do you have any insight on that at all yet?
We don't. One of the things to
I didn't expect that you would, but I just wanted to bring that up.
Yeah, one of the things to keep an eye on is a lot of the cruise lines, the cruise line holding companies are incorporated in other countries.
Right.
And because of the Jones Act, there are tax implications regarding ports of call in the U.S. versus international ports of call. And so seeing how that whole tax structure plays out or continues to play out will be something to watch.
So at this point, it's just noise, right, for you, because you said you have outperforms on this group overall. And, it's my understanding from what I've read that they have a higher end consumer, and that higher end income consumer doesn't seem to be as worried and is making those bookings on the cruise lines.
Well, more broadly, we can talk about cruise having a 20 to 25% discount in price relative to value as compared to land-based alternatives. So you're already starting from a point of them having an advantage, just given the way that they can vertically integrate their operations on the ship and their own destinations like private islands. So they're able to deliver a comparable experience, arguably, for a substantial discount. So that gives them a leg up on land-based regions.
So I'm going to go through my watch list.
What's interesting, too, is we've heard from
RCL. What was RCL? That one looks like it's just up too much. Royal Caribbean Group. That's the one that had the huge run from 31 all the way up to 277%. I mean, $77. Them people that take cruise lines, it takes a special person. I'd rather go to a resort than a cruise if I was wanting to have relaxation, because you don't relax on a cruise ship. There's not, I mean, you're like ants in an ant farm. There's no privacy. There's, you have to wait in line. And I don't like to wait. Took my sister out to dinner the other night, and I told her I'll take you somewhere, but I ain't gonna wait. So she calls this place up, and they said they wouldn't reserve us a table unless we had 6. And there's usually a line. I said, well, I'll take you. Let's go at 11 o'clock, right when they open up. I don't want to sit in their wooden chairs. I want to sit in a bench. It has a little bit of cushion. So we got there. She showed up on time for once in her life. What do I got in there? Oh, I got my hot chocolate. She ordered a ribeye. She wanted to put her new shoes. I got her a pair of sneakers, and she wanted to put them on in the restaurant. And I said, "Are you nuts? Are you some kind of hillbilly?"
I don't know where Vail falls in there, but ski lift lines. And
Vail
I've seen
Resorts,
videos, too, can be very
MTN.
long. So if you're
That's
paying
one. Here's a bargain. Vail Resorts. I don't think I've ever heard of them. MTN. Oh, Mountain Group, South Africa. Oh, no, mine ain't nothing. This is down Branson, Hidden Valley, Missouri. Huh. Hidden Valley. Temporarily closed. Oh, that's here in Springfield. I think they closed down. That hot chocolate, I can drink that down fast. Well, let's get back on the game here. AVGO's at 189. And what was that? Mister took out an offering today to buy what? More Bitcoin? $500 million. God, how can they get away with this? This sounds like this is the scammiest country, scummiest to boot. Google still down $5. Well, it has improved a little bit. And what else? Nike. Now Nike, I've been looking at Nike videos on their shoes. This is what I'm looking at right now. Let me see if I can. Nike Venero 18. This is the shoe I'm thinking about getting. It's not as breathable as I'd like, but engineered upper mesh, dual density midsole, pods around the outsole, flesh padding, which I really like. What's new? Newly stacked foam midsole with premium Zoom X on the top. React X foam applies cushion comfort. But that's the one I'm looking at that I might buy myself here. They're about $150. And I like that blue. I like that one. I like this one here too. But I don't like that one. A little bit too bright, so I have to go with the white or the red one. But they've got some good, they got the Pegasus, and then that one, they're kind of coming out, changing their style to match up with all those other ones. Okay, darling, what are you talking about? Make it good.
Tesla is the largest provider of chargers, but essentially now this creates it narrows the competitive landscape with regard to BYD and Tesla and the charging stations themselves.
Yeah, I wonder how quickly these will actually be available. I mean,
it's unclear.
Yeah.
But there will be 4,000 is what they're saying, so it's unclear exactly how fast they'll roll out this new network.
Right, and I saw that, look, I mean, Li Auto has a system that you can do it in 12 minutes.
Yeah.
But 5 minutes is better than 12 minutes when everybody is fighting for time and convenience,
This
right?
is true.
And this, as you noted, takes away the worries of those who love to just fill up at the gas tank and be done. Now they can do that. All right, thank you, Diane King Hall. Great to see you. And we did talk about that yesterday, but today the stock's hitting a high, so that's more of the breaking news here. And we
not
now
really,
switch over
honey.
to the disruptors. George Sillis is here, senior markets correspondent, to talk about Block. And what's interesting, when you take a look at it, I'll tell you, as I just finished talking to Paul Golding over at Macquarie, and he covers the payment space,
I'm gonna go
George,
get my
and
water.
I asked him, you know, he has actually a buy rating on Visa, MasterCard, Block, it's now XYZ, and PayPal. So he has a buy rating on all 4 of those, which I thought was interesting. We just had a great conversation. Some of your thoughts on the latest call from Keith Bryant and Woods?
Yeah, I'll add to that. If you just consider what's going on with Block, yeah, you're right. You're seeing some adjustments in price, and of course, if you look at Keith Bryant's call, they've got now an $80 target from 87, and also KeyBank moved their target down to $85. But both of these firms maintain an outperform rating on Block, and if you just consider what's going on with the Cash App business and their traditional Square Merchant business. That business is actually growing. They actually have about 57 monthly active users on the Cash App. They're also growing their payment processing business, but also their small business payroll services as well. If you consider what happened during last earnings, the challenge was, and the stock is down about 30% year to date, there was a significant decline in late February on earnings, and it wasn't necessarily based upon the actual recorded earnings and sales for the quarter, it was actually a slight adjustment to the downside for the first half of 2025 in terms of sales and earnings growth. And that was mostly based upon a sales and marketing expense, which they expected to be a little bit higher. But they do see the manifestation of that coming in the back half of the year. So with that said, I can see why
there's coin.
Bullish on Block, considering, of course, the valuation. If you look at the EBITDA growth estimates for 2025 at 36%, and also sales growth at close to 10%. Right now, on a 2025's forward multiple basis, the stock is only trading around 13 times, and even next year, 2026, at effectively 11 times, and that's a significant valuation discount. So I think what's happened here is there's a manifestation of a decline in the stock because of the slight adjustment in guidance, but again, that came because of higher expenses, not necessarily because of end user contraction. Bitcoin, I think, is also a part of this as well, considering that Block has over 8,200 Bitcoins on their balance sheet, so that is a slight adjustment to the downside. But now the valuation is becoming more compelling after that 30% decline, and that multiple, as I mentioned, has contracted quite a bit.
Yeah, understood. I mean, Dan Dolev, also a friend of our network who sits right here sometimes from Mizuho, he also likes XYZ. He's been a fan of this name for a long time. So tell me about your example trade now, because we did, as you noted, Keefe Bruyette & Woods does have the outperform rating, lowers the price target a bit to about $80 now. And your thoughts at $59, what would you do with an example trade, George?
Yeah, so what we're going to do, and we've been doing this when volatility has been rising, Nicole, and I think right now, just the way Block has been trading over the past few days,
found
you
the
can
bottom
see that
here.
it's up higher today, irrespective of the mark.
Block XYZ. They changed their name to XYZ.
From a directional standpoint,
That's
or
kinda
the
stupid.
magnitude in the trade, if it's going to go higher. So I'm going to take advantage of these high implied volatilities in the options because the volatility index is over 20. And looking at the $55 area, that looks like an area of support, which corresponds to a previous area about 6 months ago. So with that said, I'm going to sell the $55 put, and I'm going to use the April expiration. So we have 30 days to expiration. You can actually harvest about $1.75 a contract, $1.75 per share, or $175 a contract. And that's about a 3.2%, roughly speaking, yield to strike price. And essentially, the objective is the $55 level to hold. And if it doesn't, you got to consider your break even, which is $53.25. So structuring this trade, you want to see it hold at least 55 or higher by expiration, but you have to be willing and able to take ownership at $55 if you're assigned the shares, but your cost basis is $53.25.
Okay, George Silas, great to see you. Thank you. Good luck there at XYZ today. That's our disruptor every day with George Silas. Coming up, it's time for our 360 round. We're back to the housing market. Look, we've seen mortgage rates coming down. I think they were down 6 times in a row, but now we're going to see an uptick. And what's happening with the housing market? In fact, we saw an uptick there with housing starts. Our panel is ready.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Welcome back to Trading 360. It's time for our 360 round. We're looking at the U.S. housing market, and there's so many pieces in this puzzle. we bring in our panel.
What are
Alex
they?
Ryan, President and founder, Housing Research Center, and Greg Halter, Director of Research, Carnegie Investment Council. Thank you both for being with us. So the housing starts that came in February were stronger than expected. And there was actually good news in single-family homes and multi-family homes. And mortgage rates had come down for a time, though rates are creeping higher. And I just wanted to get your big picture thought, Alex.
Yeah, right now it's been an interesting time because, as you said, interest rates have been coming down for the past couple of months. Yet consumers have been a bit on the sidelines trying to figure out what's going to happen economically. We saw that last month consumer confidence came down, and so a lot of people think, it's still interesting what's going on with tariffs and all the noise and economic headlines that people see. And so even though a lot of people want to buy a home, they're trying to figure out if now's the right time or if we should wait a little longer. In our channel checks, we saw that in February, there was a bit of a pause, but yet in March, it seems like people are back to buying homes again. So, it's been a bit erratic, as some of the builders put it, from week to week, but we believe that there's still ongoing demand for housing.
Man, that thing's
Rates
cheap.
creep back higher. There's no doubt that
It's
the
an
cost
ETF.
of building
U.S.
can be quite
Homes
expensive, particularly with tariffs looming.
Construct
How much will all the
ETF.
elements to build a home actually be? And there's uncertainty there, Greg. Some of your thoughts in the big picture.
Toll Brothers.
Sure, and thank you for having me again. We're looking at this maybe in the 3 L's, if you will: lumber, labor,
My
and
favorite
laws. I think
Toll
lumber
Brothers
prices
cheap.
have come down from spiked highs a few years ago, but there's concern that could see an increase with the proposed tariffs and all this rhetoric back and forth. If you look at labor, obviously labor
Seems
is
like they
very
didn't start
important in
picking
terms
up
of building a home. It's also
this
very
time of the
important
year.
in terms of the buyers of homes. If they don't have a job, or if they have a job or they're not comfortable relative to confidence in the future outlook, that could present a problem. And then on the law side, I've combined laws and permitting. I mean, we probably need 7 million homes to fill the need that's out there. That's a lot, considering we're at a 1.5 million rate now. Where are these homes going to be built, and what is the permitting like? It's as Alex says, very interesting times.
Yeah, and I saw within your notes you had a lot about specific names of companies. Do you think any of the particular home builders are better positioned than others? I mean, some are able to offer buy downs, for example, have exposure to maybe a luxury consumer that won't be hurt as quickly. Some of your thoughts on that, because I saw you did have some names. I'd like to know which ones you think are best positioned now, Greg.
Sure, I don't know if any one or another is better positioned. I will say that the industry has undergone a change to operate more along the lines of NVR, which is an asset light builder. We've seen that Lennar
Yes, we do.
disposed or spun off its asset piece, the Millrose Properties, within the last year. D.R. Horton's doing similar. I mean, these stocks are trading at 9-10 times earnings or less on out results. Probably building 90,000 homes for each one of them. That comes nowhere near the 7 million that we need. So over the long term, and we're long-term investors, we think the housing market is very intriguing. It obviously is very volatile, and you have to pick your spots. Technically, the stocks don't look very attractive right now, but I think over the long term, with these changes these companies have made to be more along the lines of asset light players showing very high or increasing ROEs, we think these are interesting companies for the long term.
Okay. And look, I know it depends on regions and geography here, Alex, but New York, for example, the rents in New York City have gone now, they've moved to record prices once again. I saw this morning for Nassau and Suffolk County, which would be Long Island, which would be the Hamptons, the Vineyards, those homes, the affordability there, the prices are at highs again. Alex, you're concerned about affordability, in fact, saying prices are unaffordable, and don't forget insurance.
Well, and that's why, over the past 5 years, we've seen a mass migration out of some states like New York into Florida, or out of states like California into Texas and Arizona and Colorado. People are looking for ways to make homes affordable, and yet, you know, that's the best way to do it, is basically by changing states or changing locations. Within cities, what we see is typically people move further out where land is cheaper and where home prices are cheaper. So, you know, people are always looking for ways to make homes more affordable for themselves. But the trick is, if you have equity, it's a lot easier to do that. If you're a first-time buyer, then you're out of luck unless you have parents or somebody who can help you out, or you make a lot of income.
Wonderful to see you both. Thank you so much, Alex Barron and Greg Halter. Good look there at the housing market overall. And now is the spring selling season, folks. We'll be getting in a lot of data in the next few months. Thank you all for joining me here on Trading 360. I'm Nicole Petalidis. Download our free Schwab Network app. It's available on the Apple App Store.
Nicole Titolini.
SchwabNetwork.com.
Oh,
I'll
oops.
see you at 2 o'clock for the watch list. Do join me then. The Dow's down 377. Dow's down 377. Market is really taken off here to the downside. Fast market next.
We don't want that to do that.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative, Gamma On. It's a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now. Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets.
Triple bottom,
All with 24
triple
hour
bottom,
support from trading
triple
specialists
bottom,
who understand the ins and outs.
inverse head and
24 hour
shoulders.
trading. No matter the hour, you can trade brilliantly with Schwab.
Let's have a reversal. As I studied Colossians, chapter 1 to 15 this morning, chapter 1, verse 15, I come across some hot chocolate. Now I'm looking for a reversal here. Till we get it. It is now 12 o'clock Eastern Time, 11:01 here in Missouri. I survived 100 tornadoes this weekend. There's no way in hell I'm going to take this loss today. That's right.
Count to 3 and trade with me, but count to 4 to make much more.
Exactly. The crowd's going wild here at the sports arena. You're about ready to witness a miracle. You hear me, Magnificent?
Affirmative.
Yes. And we've got 1, 2, 3, 1, 2, 3, 4. We're in the sweet spot.
You're pushing your luck, little man.
Has Trump been on the phone this whole time? Let's ask him. Well, Jim, he's a very handsome man, he is. I wish I was as handsome as that Jim, but I'm telling you, for a fella, he can really call him trades out. But Jim, today, I don't know, he's still a handsome man, that Jim Howard is. I'm trying to work on my Trump voice.
Mark, you have to be real careful with the news you're taking in.
No, shut up.
The real news, not the opinion that we're all getting. It's hard, Tom. You listen to
It's
it.
hard.
They paint a bleak
It sure is right now.
for everything that's going on here, right up until they don't, as you know, Tom.
Been a long time.
We're in a real dicey period for the market right here, Tom.
Yeah, I'll push aside the mainstream media theories about what's going on. There's just a lot of uncertainty out there, and I think that's what has investors on edge, because we just don't know what type of impact the tariffs are going to have. President Trump right now is still on a call. I think he's been on it for 2 hours.
He's still on it.
Vladimir Putin out of Russia. So, yeah, maybe something positive will come out of there, maybe a potential ceasefire, but then we've also seen some geopolitical risks perk back up in the Middle East also overnight. But let's expand this conversation, bring in our next guest. That's Kevin Green, Senior Markets Correspondent here on the network. KG, I've been saying this since we started sliding. It's the uncertainty factor that a lot of investors don't know about yet. We've got the initial jump after Trump was elected based on less regulation, better policies moving forward that are going to drive business and drive the economy. But right now, we've got that overhang until April 2nd when we'll get some more clarity. But that overhang of tariffs and growth concerns driving markets lower here. But I just don't feel like we've had that flush where everybody can kind of sit back and go, okay, now we got to get back into the market.
And I think everybody, I take a little bit of a different approach here. I mean, the last 2 days, all I've heard is everybody calling that last week was the bottom.
Yeah.
So at the end of the day, I don't know. I think right now, if you look at it from a technical standpoint, a 3% move to the upside from the lows here, you're seeing a little bit of a retracement that does make sense. The S&P 500 was approaching a key gap area as well as getting fairly close to that 200-day moving average, a potential short zone for the market. So a pullback does make a little bit of sense here. But I will say, though, you can say what you want about the market narratives, but the numbers don't lie. Retail sales actually did come in lighter than the street's
I just got a phone with Putin.
Import export prices are hotter than the street's expectations. administrations coming out and saying that they're trying to tie export controls to these trade deals. No one wants to hear that. They complained about DeepSeek and potentially the impact for semiconductors as a whole. There's a lot here today that says, yeah, you might see a little bit of a pullback. I mean, no one wants to hear export control staying in place. Not even just the threat of them, but staying in a place moving forward here. That could actually impact business and GDP here in the United States.
Yeah, connect me to him, please. I'm here. Hello, Mr. Putin. I understand that you're wanting to put a stop to this war. How can we make this work out, Mr. Putin? You want to go out with my girlfriend? How about my mother? Is she good enough for you? You thought about it, huh? Well, I can get her on the phone if you like. 867-5309. That's 417-867-5309. Yeah. 867-5309. Why'd you hang up? Oh, he's called back. Always clean. Retail traders, may I help you? Yes. You decide to go for it. 867-5309. She's waiting for your phone call right now. Yep. You want part of my property? I only got 9 acres. And I gave 3 of it to my sisters. Huh? You want the house too? Oh my. Well, as long as you can stop the killing, we'll go for it. Yes. Okay. Bye-bye. So I gave away some of my property to Putin for him to stop the war. It's a sacrifice I have to make. It's working, the spice is moving up. Well, we got to break this resistance and go to the VWAP. It has to break here. This is number 4. This is the sweet spot of the trade. We got a higher low down here, which is lower low, but in the channel it's a higher low. Get ready, Randy. Randy, we're breaking it. I'm not going to tell you how many contracts I have because it wouldn't be a very nice thing to say out loud. I did have, let's say I had 32 at one time. And you know how I trade. Come on, Jimmy. You can do it. let's say if I can get to 90 cents, I'm going to be a very happy guy. But blanking it. Let's get to 90. I really appreciate it if you did it. Spy finally broke. We're at 55 cents. Let's keep going. Yabba dabba do. With bulk resistance. Don't pull back now, please. Show some balls at least. I think we can do it. VICTORY, that is Washboard Jim's battle cry. Break it. Dow Jones down 296. The NASDAQ 100 304. Russell 2000 1956, which would be the IWM. And the S&P down 58. Ford is at under $10. PLTR. PLTR. Nvidia's up a couple bucks from my call at 115. Tesla up. But PLTR. This is what I want to go long in. And I'm surprised Nvidia ain't doing better. Come on, man. I don't think I'm ever going to get out of this trade. Oh, God. Do not pull back. Just can't do it. See, we got a double thing right there. We got the 200 SMA and the VWAP on the SPY. Oh well. Hey, June.
Capacity, significantly higher performance than the earlier Blackwell offerings. Timing around, that Blackwell Ultra, I think, will be key given some of the delays that we saw initially around Blackwell. Rubin, of course, is NVIDIA's next generation GPU platform. That's not expected until 2026, so we'll see what Jensen Huang says about what comes after that. On the CPU side, Vera is a successor to its Grace line, and then Vera Rubin is the combined super chip. So expect to hear about all of those and more, potentially some networking product updates as well. I was taking a look at some of the featured panels. The rise of humanoids, so robotics, so-called physical AI, AI agents shaping the face of cybersecurity. And then there's a panel on quantum computing, where we are and where we're headed. And of course, Jensen Huang sent quantum computing stocks plunging lower earlier this year, back in January, when he made comments about quantum computers still being about 15 to 30 years away. So we'll see what they have to say on that front. But speaking of selling off, NVIDIA shares, really under pressure. So right now down about 2%. So already off the worst levels of the day, but definitely some negative sentiment heading into this keynote. That being said, if you take a look at the Mag 7, Apple was the only Mag 7 name higher today and is now lower. So, I mean, there's certainly this unwind in tech that we continue to see. It's not NVIDIA specific, but we'll have to see if Jensen Huang can kind of turn that negative sentiment around with some of his commentary.
Jimmy's Wong can, baby. Guarantee it. Or would you like to go out to a resort?
The valuation of NVIDIA now. Here's the stats on NVIDIA going forward. 52 to 53% earnings per share growth. Right now, trading 26 times forward earnings. Tom, get Joe Mazzola on the phone. That's a 0.5 PEG ratio that we have. And you talk about surprises, Caroline and Tom. He's not going to have a leprechaun, I'll bet you, with him, is he?
Nope.
You had all those surprises yesterday with the leprechaun. But I think that, you know, I will say that there was a Bank of America analyst who reiterated an overweight rating of $200 price target heading into this and said just what you said in terms of the recent declines have created a compelling valuation for what he calls a high-quality growth stock heading into the conference. He says while market volatility and China headlines could pressure the stock near term, we still believe fundamentals will eventually prevail. And you obviously mentioned the impressive growth that they've continued to see. I will say other analysts going into this, you know, investors might be, you know, downbeat on NVIDIA so far this year, but analysts have remained bullish. I mean, if you take a look,
yes, they have
a buy rating. Morgan Stanley reiterated as overweight with a 162 price target, saying that NVIDIA roadmap is well understood, but we still see GTC as a positive. I mentioned Bank of America. Mizuho reiterated as an outperform, did lower its price target, as you guys were talking about just a bit ago about analysts scaling back the price target to 168 from 175 due to slowing growth concerns. And they do point out a lot
I'm
of
going to go clean my glasses and I'll be right back.
Right now. Weakening macro, tariff uncertainties, China restrictions that could take down NVIDIA's revenue, weaker gross margins near term, pace of the new product ramp giving supply chain challenges. But then the analyst says, personally, I still like NVIDIA, but I see the stock as range bound until maybe the May earnings results. Wedbush's Dan Ives, of course, maintained his bullishness out with another new note saying basically that the GTC will be a wake-up moment for the tech bulls as investors start to focus back on the AI revolution. And then Deutsche Bank taking the more cautious approach. Only 8% of analysts are in the hold camp for NVIDIA still at this point. Deutsche Bank maintained the hold rating with 145 price target, saying, we acknowledge the market-wide pullback offers an intriguing entry point for this well-loved stock, yet we prefer to remain on the sidelines until macro volatility resolves and more confidence in sustainable growth in the out years for NVIDIA is found. So, I mean, there is still a little bit of caution from a Deutsche Bank analyst, but overall, the commentary heading into this largely bullish from Wall Street analysts.
Yeah, you wonder how much commentary we're going to have around DeepSeek, you know, the cost, whether we're going to have these big tech firms continuing with their CapEx spend on the infrastructure build-out as far as AI goes. I'm expecting him to be a little positive during his commentary, I'm sure. All right.
I don't think that there'll be anything other than positivity from Jensen Huang, but you make a good point. At some point, all of these companies that have been spending so much money on AI, it's going to have to reach a digestion period, but I don't think we'll hear about that today.
Yeah, I don't think so either. All right, great stuff. Thanks to Caroline Wood, Senior Markets Correspondent here, helping us break that down. And NVIDIA ahead of the GTC keynote here in about a half hour. Let's bring KG back in here. KG, when you look at it, the stock's below a bunch of technical levels. It looks like the 50-day simple moving average is about to move below that 200-day moving average for a potential death cross, but we've bounced off of recent lows. I mean, the stock was below $105 last week. What are your thoughts here on NVIDIA?
Yeah, actually, if you look at the broader semiconductor and the stocks, I believe we saw that death cross last week too. So, yeah, you are seeing some damage here, but if you kind of look at a longer-term time frame, 3-year weekly chart, it is in a bull flag right now. And actually, that dip and that buying of the dip at 105 was a key technical level that you wanted to see actually hold up, and now we are seeing a bounce to the upside. Now, you can make the case that if this flag is going to continue to be intact, or this channel, if you will, the upside 135 could be in the cards. That doesn't mean tomorrow, doesn't mean next week, but that's just something that this trend really does kind of signify. But I do get a little bit concerned that we may see more of a breakdown when it comes to NVIDIA and just the broader market in general here. I mean, Caroline brought up a really good point. We're going to hear about a lot of new products, not only on the GPU side, but the CPU side. But at some point in time, is the refresh cycle a little bit too aggressive for a lot of these cap names to be able to keep up with? I mean, at this point,
I need this to break the 200.
1 year refresh rate,
and I need it to do it
now.
now.
Trying to depreciate if you're one of those accounting nerds here. So
I want to get over this.
I'm not sure.
I'm sorry, folks. I'm not the best
laying out the new product offering is really going to be bullish
commentator today.
Like a Google or a Microsoft, but it might be
I think it's like a wait and see day. If you want to get in anything. So I'm just waiting, seeing this thing to break the 200. And we could hit the 200, and I could sell and then take my smaller than bigger loss. But I'm going to see if we can break it today. We got, this is called a cup. It's forming like a cup and handle. It could stop at the double top, pull back a little bit and create a little handle and then break out. That's called a cup and handle. This is called an inverse head and shoulders. Now I can draw this trend. Let me see here. So it pulled back to the 21. Or even just hold the 9. If it hold the 9, that'd be really good. I got quite a few contracts, so we'll see. It scared me a couple times. And I'm way too far out of the money for... You know, that one day I sat here and watched it go to 5 cents, 10 cents, and it ran It ran up to $1,000. But this is... We don't have such a big event to listen to that.
Well, the Fed can't do everything.
The market sure acts like it can. So I'm going to go into the kitchen and grab my coffee now. And hopefully on the way, I'll knock on Pia Zadora's door and see if she'll let me in. Open up. This is the FBI. Oh! Magnificent. I can't wait to get that. Now, I'm at a resistance here, and I don't have fucking enough contracts. I should have bought like 100 of them at 35 cents. I'm at 65. And 65 times... 65 would be 30. 65 would be 25 cents. 25 times. I'm going to say how many contracts I have. Ooh. I still need to hit 90. Okay. Come on, you loser. You can do it. No. That could be it. I mean, that could be it. Stock gods. I bought my sister for her birthday present a very expensive pair of tennis shoes. They're called sneakers. And I need you to reimburse my loss here. And I read Colossians this morning, chapter 1. And then I watched a video about it. And if I win this trade, I'll donate 20% of my winnings to the church come Sunday. All you got to do is just break the 200 EMA, just like I want it to, and go to my next resistance line up here, and I'll be a winner. Chicken dinner. Break it. Come on, break it. Ugh. Yes, it's true. My nose itches. That means good things are coming. We have a megaphone pattern here, Randy. That means we're going to break the 200 EMA. Bacon. Oh, here we see here. You could draw a price line there, Jimmy. You're so close, but yet so far. How rude. That was very unprofessional. See, if I was sitting here by myself, I'd be playing me some music, kind of cool me down a little bit, but I'm not. Hey, the prison guys here. Is he still on the telephone? Every time I hear bipartisan, you know how far I believe that, Rob? Oh, God. I'm almost getting my hopes up. Well, we could hold this support and we'll still be bullish, but I doubt it. Well, hey, June, where are you now? What do you got to say, Mr. Hickey?
Overbought to begin with.
Yeah, I agree. I mean, if you're an investor, you got to zoom out, pick a 3 or 5 year chart, and then kind of count your blessings because things were better a couple months ago, but still, this has been a heck of a run for this company, and eventually,
So do 5 year.
Companies do get overbought, they sell off. But if you're gonna think about a company to invest, how about a company that has 3.3 billion daily active users? I mean, that's insane. That's almost half the population of the earth. And so the fact that they have that many users, every time they try a new product, they can swing and miss 10 times, but if they hit one, they've got 3 billion people that are ready to use it and monetize it. So that's why I really like them investing into all these new things and trying different things. They've had some success and some sort of failures, but the scale and the asymmetrical bet that they're taking every time they invent something new or try new technology is just unbelievable because of the user base. I mean, another company, a smaller company, could come out with a better product, and Meta can be a year late with a slightly worse product, but Meta will win that battle because they've got 3 billion people ready to try it, and they can just push it right to them. Whereas the other one, it's all about the product, and they can't get the users. So they have such an advantage, and that's why I love having money in companies that have this kind of advantage, this kind of distribution. They're like the Walmart of digital, right? I mean, they have ultimate distribution. So the fact that they're investing in AI, the fact that they're pushing to try to invent new products like the wearable AI glasses, maybe it's a hit, maybe it's a miss, but they're eventually going to have another hit. And you could just see what they did with, Instagram. I mean, that was many years ago with that acquisition, but they're doing very well with products that they get in on. And again, I think there's a wide open territory coming with search and query where people want answers to questions. And I think it's going to move away from Google if they're not careful. And who knows where all of that volume could go into. I think Meta's going to try to take a piece out of it. But yeah, overall, sure, they're down 20-something% in a month. But zoom out, this is more of a buying opportunity than anything. This is not the collapse of Meta by any means. So, and hopefully people that own aren't too leveraged. They can handle a little bit of a drawdown and maybe put some more money to work on this one, because long term they're a winner.
Yeah, Landon, 98% of the revenue is advertising. That one chart that you guys showed kind of scared me a little bit because, we're after the election, the economy's starting to tighten up a little bit. They've done a pretty good job managing their expenses. Reality Labs is still garbage and still wasting money on that at this point. But if we were going into earnings, would you guys be buyers on this dip according to your data, or would you wait?
No, we're getting there. So if you guys remember, 20 is where we crossed the threshold. Like if we're at plus 20, we're at plus 18 right now, but it's up about 5 points in a week. So we're moving in the right direction. Any more sell-off and we're there. So we're that takes into account the stock price. So 20% move in a month on to the wrong side is more of a buying opportunity. Give it a week, we might be over 20. So I'd say that this is a buying opportunity for sure. And again, long term is going to be great. And you never know, that garbage investment, I agree, so far no good. But that kind of mentality eventually produces something that you can distribute to 3 billion people, and it's an overnight success. So keep trying, keep spending money, and eventually they'll hit one.
Yep, almost oversold. RSI down to 33, and
Whale
average at 571. So getting close to that. Also, maybe that's support. All right, great stuff as always, Landon. Appreciate it.
Thanks, guys. Appreciate it.
Yep. Portfolio breaking it down for us. Kev, when you look at this, maybe he was overdue for a pullback. Landon mentioned 3-year chart on this. Stock got down to $88 2.5 years ago, and it's been a great winner. So maybe this pullback warranted. But how do you want to approach this from an example trade?
Yeah, Tom, if you think that anything in Meta's world is going to fundamentally shift, what's really shifting is linear TV. That's what's shifting.
Linear
TV
TV.
is going to keep going. It's going towards Meta, and yeah, it's just a matter.
Linear?
I thought Landon had a great point. If you have 3 billion people that can look at whatever you do, I mean, if you get something right, there's the new definition of scale, Tom. It's not McDonald's or Starbucks anymore. It's Meta and advertising. So, Tom, what I looked at here on the downside is just a simple 2-week call diagonal. Buying, I went to the 580 call and sold the 600 call. I bought April 4th. Sold this week, March 21st, 580, 600. Yep. We put it in at 1790. It's trading about 1783, so it's right there where it was, Tom. And this is just a very short term, just a 2-week. Why do you want to keep it short term? Because implied volatilities are high, Tom. So you want to be careful with your Vega exposure. If it does start to rally, Vega can eat up a bunch of your profits. So keep those dates a little tighter than you normally would.
Yep, let's break this one down. April 4th weekly options that expire in 17 days. By the 580 strike call there, that's basically at the money. And then in the near term, March 21st, monthly options that expire in just 3 days. Sell the 600 strike call, so a bullish $20 wide call diagonal, 2 weeks wide on it. 1790 debit, there's your risk, $1,790. As far as break-evens, you see here, because you're paying less than the width of the call diagonal, you've only got one break-even. It's probably going to be most likely anything above the 585, 587 level for profitability on this one. But you do have that opportunity to roll that short 600 strike call a couple times into expiration over the next 2.5 weeks. So you got to keep that in mind also. Apex of profitability, you can see here from the risk profile, at or near that 600 strike. So if we start grinding up there, that will start to hit implied volatility most likely, and that might contract it a little bit, but then you're going to gather more credits for your rolls as you get closer to expiration over the next 3 days, where you can potentially roll or adjust that short strike, creating credits, reducing risk, and increasing potential profitability on that. And you do have some assignment risk on that short 600 strike call over the next 2.5 weeks also. So keep that in mind on that bullish call diagonal as an example here in Meta if you think it's going to rebound modestly. All right, let's take another quick break. When we come back, we're going to take a look at Block. The fintech stock's down about 30% so far in 2025, but was upgraded today. Stick around, Fast Markets coming right back.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Stocks off of their session lows, but still deep in the red as we get into a discussion about Block, the former Square stock, the former ticker symbol SQ, now XYZ is a ticker symbol.
That's stupid, ain't it?
With this,
He even had to laugh at it.
company. But let's bring in George Tellis, senior markets correspondent here. George, after earnings last month, the stock dropped 17%. On that day after the earnings result. It didn't look like a bad earnings report by any stretch of the imagination, George. Gave a little bit lighter guidance, but they still have some decent double-digit growth rates for this company. What's going on?
Yeah, that's a good point to bring up. I was actually going to bring that up in our segment here, Tom. But looking at Block, it was a post-earnings decline, and in the context of
not good.
The growth, the gross payment
I'm going to measure my blood pressure on a red day.
System was higher by close to 8%.
See if it's lower than
the Cash App monthly active users.
Green Day.
57 million. They're moving about 5,000 on average through their system. This is per user. But one of the challenges that the company demonstrated when they reported earnings and why the stock gap.
The closest one that guesses to my blood pressure today will win a free trip to Jamaica with me.
It's a manifestation of a couple of things. First off, they declared that they're going to spend a little bit more in the first half of 2025 to integrate artificial intelligence. They're also integrating Afterpay within their Cash App ecosystem, and that's also creating some additional capital expenditures, but also sales, marketing, and general expenses. And particularly sales and marketing expenses were denoted as a higher expenses for the first half of 25, forgive me. But they do see a resumption of these, or manifestation of these CapEx spends in the back half of 2025. But irrespective of that, the stock is down year to date 30%. But at the same time, this is a situation, it's a special situation where the context of the market, which started to decline around the time that the earnings came out for Block, that's also added additional pressure on the shares. But I think this is a situation where, because of the market sell-off, that has sort of been forgotten about. And with that said, you're starting to see some of the analysts who are doing their due diligence, scouring the markets for value opportunities. And KeyBank and Keith Bruyette also here, they did reduce their price targets or on Block. If you look at KeyBank, they've got about an $85 target. Keith Bruyette has an $80 target from 87, but they do maintain an outperform rating, because if you just look at the earnings estimates going forward for fiscal year 2025, 36% earnings growth, sales growth rounded up to about 10%. And even for this fiscal year, 2025, 13 times forward earnings. So trading at a significant discount on a PEG ratio, valuation significant discount to 5-year averages. So I think they may be onto something here because of the context that the stock fell. It was really a marginal decrease in that first half guidance and EPS and sales, but also along with the market that exacerbated the sell-off, and now we're starting to see some valuation elements behind these calls from these analysts.
George, this company that's made up of Square and Cash App. Square is one of those point of sale things. They do all the small business and all the ways that you can pay for things in a very convenient way. Love that part of the company. Cash App, that seems to be growing. If you lay a chart of Bitcoin over this chart, it's still highly correlated to the sell-off in Bitcoin. Is that 100% of it? No, it was probably some of their guidance, but the sell-off in Bitcoin certainly didn't help. And
No, it
look
didn't.
at the 1 month number down 29, almost 30%. That said, you mentioned their growth, earnings per share 41% over the next 2 years. This is a company doing some things well. George, my question to you is, can it get away from the heavy correlation to Bitcoin?
Yeah, so that's an excellent point, because if you look at the balance sheet for Block, they have approximately, this is rounded up, roughly 8,400 Bitcoin. Some estimates have it around $900 or so million. This has all changed, as of the last few weeks or so, but nonetheless, you're right. I think the elements behind Bitcoin, whatever is causing the sell-off in that particular, commodity ecosystem, is creating a negative correlation for Block. And then you add on, like I said, the market sell-off, which also might be correlated to some degree, at least the tech names in what's going on with Bitcoin, and the revised guidance to the downside for the first half of 2025. I'm not saying this is the case, but this seems to be, if you put all the pieces together, the situation where maybe the price action to the downside is played out in the near term. But that's not to say that it can't continue lower because of the context of the overall market. But yeah, at some point in time, I think you have to look at the treasury stock of Bitcoin on the balance sheet of Block. It's certainly not a micro strategy. It's not levered to Bitcoin. But again, the Cash App ecosystem, the after BitPay integration is a growth model that they seem to be taking on. And with that said, I think at some point in time it'll start diverging away from blockchain or Bitcoin.
Yeah, and they're starting up. The FDIC just approved their Cash App Borrow, where they can do small loans. So that might help some engagement there. All right, great stuff. Thanks to George Tillis, senior markets correspondent here, breaking down XYZ, ticker symbol for Block. Kev, I looked at this. It bounced off of 16-month lows from last week that we saw in this stock. It was oversold. RSI still down at 35. Obviously, the upgrade today helping the stock back above 59. So I looked at something pretty straightforward in here, Kevin, where if you think this thing's going to continue to move higher, here's a strategy that takes advantage of it. Now, I mentioned that 17% drop last earnings. I want to avoid that earnings event. They report in early May, so we're going to avoid that. But I went out to the April 25th weekly options that expire in 38 days here. As an example here, if you think it's going to continue to grind higher, buying a call vertical, buy the 59 strike call that's basically at the money, and then against it to offset some of the costs on this bullish trade, sell the 66 strike call, so a bullish $7 wide call vertical, paying roughly about a 270 debt.
I'm looking at now the 5640s. I really don't want to trade, and I'm not in the mood, kind of, after that. But if I see something here, I'm going to jump in it.
Bullish trade where you need the stock to go higher, though.
These are the 5640s.
Yeah. We do a lot of complicated things on this show, but this call vertical is relatively
very
easy
complicated.
To do the math on, right? You're long the 59.66, so $7 wide. If you spend $270, add 270 to that long strike, and there's your break even. There's where you turn profitable, Tom. And the most it can go to is at or right around $7. Probably will never get, if it goes through there, sure, it can get to $7. But the risk is whatever debit you pay on this trade. You are spending a little bit of theta on this trade. That'll change if it gets up closer to the short strike. But this is a risk-defined strategy where the risk is whatever debit is that you paid, Tom.
Yep, and remember, this stock was $99 in December, so it's sold off pretty significantly here, but bullish call vertical there. All right, that's going to wrap it up for us today on Fast Market. Stick around, though, right? Next Gen Investing is coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, our analysis is your blueprint for the day. Bonds, stocks, across all asset classes on Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. Eastern.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren
There she goes.
planning for their college educations. Someday it'll be their turn.
The 5640s from $4 to $5.40 right now. $5.50. I'm still holding on to these 5700s. We got to break the VWAP. Nice. 620, 610. Let's have a nice little breakout for the end of the day so I can become even, please. probably take a break. We got another megaphone on SPY and the SPX. I'll be right back. I'm going to take a few minute break. Today's the worst day I've ever traded. Now I should do better. I should have known better. Still watching. I'll be right back. Turn on the TV. Let's see what these suckers got to say.
But Coinbase is actually lower than where it was.
Yes, it is.
You know, going into
break the VWAP SPY.
Closer to, let's say 190. So
if it break the VWAP, I'll tell you this.
Some of these big tech players or crypto related.
If we break the VWAP, we will go higher.
In 3 months, and 33% of that is in the last 21 trading days or 1 month. I mean, these are vicious moves. Obviously, it was a vicious rally post the election, but giving that all back and then some. Sticker shock, really. I mean, I got used to seeing this stock in the 300s, and it's back in not only the one handle, but like comfortably below 200.
I know, I feel like there's several of these names that I've become so accustomed to knowing their price for so long, and given the volatility, it's not necessarily like we're at the same prices, so it's always good to keep refreshing even just your own sort of mental take on some of these stocks. But next name today is another one that I have to consistently refresh. That is Block, with now the ticker XYZ. I know that happened a few months ago, but I was complaining for so long about it being SQ still. Now I'm still mad that it's XYZ, because that to me is not Block as far as like correlation goes, but I will get past my own grievances there. Keith Barrett, though, upgrading shares to outperform from market perform, price target of 80, that was cut from 87, saying that they do see an attractive risk and reward skew following the stock's recent sell-off. And although the market appears skeptical, they do see a path for Block to deliver on its guidance of a steep acceleration and gross profit growth in the second half of this year. They also do see the potential for a rebound in the stock's valuation if the company can meet consensus expectations. And all things considered, 36 buys in this name. There are 7 holds, 2 underperforms, but a lot of still conviction on Block, especially when you look at the overall average price target right now, $94.50 a share. Implies about 60% upside from where we closed on, of course, of Monday, excuse me. So still seeing some definite upside from the street community.
Yeah, this is a name that it seemingly wants to do everything it can to like separate itself from its core business, which was Square, and like seemingly the exciting part of its business from a long-standing, forward-looking standpoint. But then you look at it, Cash App's really overtaken it. So I do understand the move away from it, but it does seem like this is a name that really leaned into, Bitcoin at the first peak that we saw. Around 70,000 before it turned around. Now there's been this resurgence in blockchain and Bitcoin and everything, but is it making another leg lower now?
And what does that mean for a name like Block that didn't really perform as nicely this time around in the jump higher? I mean, we're just talking about Coinbase being lower from where it was pre-election. This is a stock that's substantially lower now. I mean, it was trading near $70 a share pre-election. Now it's trading $59. So about 10% off its lows, but going the wrong direction.
Unfortunately, yes. Although today at least up about 1.2%, so it's not faring as negatively as the rest of our tech coverage. And our next name speaks to that. That is Apple, which is down modestly, not by any means selling in the same way we're seeing some of the rest of big tech, whereas like Nvidia actually down about 1%. Some of the most notable losers though of the session today are like a Meta down 4% or Alphabet down almost 3%. Apple faring okay, but Evercore ISI with an outperform rating while raising its price target to 275 from 260, saying that Apple does remain positioned to sustain mid-single-digit sales and low mid-teens free cash flow and earnings growth over the next several years with less volatility and higher consistency. And again, another name that does still very much, I'd say, attract those bulls. As we were talking about last week, I feel like there's such a thought process of if you are pessimistic on Apple, then you probably are pessimistic on the state of the market right now, at least in the short term, because Apple's such a broader read on the market. Right now, though, the street's still 31 buys, 11 holds, and 3 underperform. Well, one analyst does have a sell. So the conviction has definitely become more skewed to, I'd say, the neutral side of things, but all things considered, one name that is still fairly loved by the sell side.
Yeah, it currently trades at 28 times forward earnings, even with this pullback. And for context, it's spent the majority of the last 5 years below that point. Really, up until this last kind of gasp to the upside that we've seen in Apple, its peak back in 2020 and 2021 were 29 times forward earnings. So it's essentially at what was the post-COVID recovery peak in terms of valuation, even after it's declined 20%, which goes to show maybe how extended Apple may have gotten to the upside. What's the last one here on our list, Jenny, as we look at it? Is it Lucid? Is that right? Do I remember that right?
Lucid.
I forgot about Lucid.
You know, it makes sense why you forgot about Lucid. It's at $2.41 a share. But, hey, it always moves. And, I mean, today is no exception. It's up 11.5%. It also always is on my radar because it always has fantastic volume. Like, the upsized volume we see in this name, even historically, is kind of amazing. On not really a massive update, is actually, I'd say, pretty negative news we've seen for the U.S. exposed EVs. So maybe carving out finally a degree of optimism because of its just beaten down share price. Morgan Stanley today, though, with an upgrade to equal weight from underweight, saying they now see a more balanced risk and reward for the company, and they see an emerging scope for their ability to play a role in the embodied AI theme as a reshored or friend-shored manufacturer with access to now capital and strategic relationships that could actually position them pretty uniquely to straddle geopolitical hurdles as well as potentially partnering with both China and the West. So they just see them right now as being able to navigate some of the turbulence within the relationships of the EV world quite well. I think more simply put, there's no strong buys in this name. Unlike the rest of our coverage today, there's one buy, 9 holds, and 5 underperforms, no sells. Doesn't get a ton of analyst coverage. I think no shock here considering just, again, the relatively smaller price tag it carries and smaller company it is, but it still does make moves, and today is definitely no exception to that.
Yeah, it absolutely moves around with sizable chunks just because a penny means more for a $2 stock. But yeah, maybe not totally surprising that you see a large share count that trades. For context, I do think that you got to dollar adjust this at $2.40 a share, and you look at 125 million or so shares traded. You're really talking about maybe $300 million worth of notional value changing hands around in Lucid. For context, Nvidia, 150-ish million shares a day, but $118 price tag is about 60 times more that so far today at about $18 billion in notional value. So
that's good context.
It's like 2%. It's like 2% the volume, but it doesn't mean that it's, I mean, you're talking about the most active stock, and it's about 2% of that volume on a notional basis, but just in general, think about it, right? If I wanted to spend $2,000, just throw a random number out on a trade,
well, that's only like 20 shares of NVIDIA, but that's, you know, almost 1,000 shares of Lucid. So you're just going to be buying more if you want equal amounts of money associated with those names.
And that could actually be, I think, maybe perhaps a selling point as far as like, hey, you can have much more substantial ownership for less money. But I'd also then, yeah, I think to your point, there's always good context and relatively still much smaller than some of the largest names in our coverage that we look at that are also just as volatile. But we'll be looking more at the technicals now, and in both Coinbase as well as Block, somewhat both exposed to the crypto world, one a bit more than the other, but both definitely in the fintech type space. So we'll be looking at the technicals, some example trades in both of those names. Stick around, we'll be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chartmaster segment. Joining us is our lead markets technician, Rick Ducat, to help us, as always, look at the technicals in right now it feels like a trendless environment, although I guess the trend would be to the downside, and that's no exception for Coinbase here, which has now broken down below, I mean, some of its key moving averages, but we've also seen somewhat of a breakdown in price in Bitcoin. So walk us through the latest in coin here, Rick.
It's funny because even no trend is a trend in and of itself, you know what I mean? But in this case, I would say the short-term trend is more down. I would agree with you that we were having a sideways drift for a little bit, but things seem to have taken almost a nosedive, I would say. And if you look here, you can see that we have kind of a triangular type shape with our two trend lines converging toward each other, one starting with the 52-week lows, one starting with the 52-week highs. So this is often a sign of decreasing volatility and increasingly narrowing range in which price is bouncing, which sets the stage for a potential breakout. In this case, it seems to have materialized to the downside because we had not only our trend line, but also our purple 252-day exponential moving average, and all of that roughly lined up as well with our old highs here and our post-gap up low point, our red line, near about 220. So this area between about 220 to 224 was key to hold. You can see we had some chop and consolidation as the bulls and bears battled nailed it out there. But we did make a move to the downside. It seems like for now, we're stabilizing around our previous relative lows here from back in October, near about 179, our green line there. But we're below our moving averages. The trend seems to be continuing to the downside for the most part here, despite this brief pause, Jenny.
Okay, yeah, despite that brief pause, it's, I mean, unfortunately, a bit of a nosebleed of a chart here. So when we watch now some future trends and going obviously more into the mid to long term, we are off of lows by almost 25%, but that doesn't necessarily illustrate some of the pain we felt this year.
Yeah, and one thing I wanted to mention too, though, is perhaps we are maybe seeing the seeds of a turnaround here because we broke through our downward sloping trend line, and RSI is breaking through its own accompanying downward sloping trend line after managing to stay out of the oversold area and experiencing a small amount of bullish divergence where price made a new closing low, but RSI did not. So now if we were to consider our volume profile study, we can see that this area here near where we faltered before and broke downward, 220, 216, 217, that also contains the volume profile point of control. And just below that then, we have our -1 standard deviation channel. So this area right here, there's quite a bit to work through to the upside around, let's call it around 220 or so. To the downside, volume node, -2 standard deviation channel come together right around 165 or so. That could be a supportive area.
Okay, so yeah, a chart that definitely doesn't inspire a ton of confidence today as we're down 3.5%, but still obviously the conviction in the overall crypto world, so leaning into perhaps that mindset of more
Looks like
optimism
scalping
here.
day.
Alex, for an example trade, walk us through your thinking.
Yeah, at some point a stock has made a pretty substantial downwards move, and it's just natural that investors are going to start looking at those names, and if their opinions haven't changed, they're going to find it interesting. And so volatility is higher. It's trying to make a base, but we don't know what's going to happen. And so risk-defined strategy, neutral to bullish, below the current share price, giving it a little bit of room if it does struggle to gain additional upside. But going on to the end of the month, selling the 170, 167.5 put vertical for
Things getting better.
75 cents. So if you're able to do that,
Nope.
$75 is your max profit. Max loss would be 175, and your break even at 169.25. You'll note though, Rick talked about a supportive zone around 165. If it does break here and move all the way down to that level, maybe you'd look for it to bounce from that level and get back above the short strikes. But in the event it doesn't, and that did happen, it is risk defined. So you only have $175 in risk relative to that $75 in max profit. But this is a neutral bullish strategy. One, Jenny, where you're not necessarily buying the dip, but you're taking the risk on of the stock going lower. You don't need it to go higher. You just need it to stabilize.
Okay, so in stabilizing, I think, or the active.
Okay, we're back down to
more
support
stable,
again.
and I think would be also welcomed to those who are right now involved much more than ourselves in the crypto world. But next name today here, we'll look
got
at
that
Block, which the ticker only confuses me more now than it did before, which makes me mad. But nonetheless, we are at least higher today, so that makes me happy as we're up
Yay.
0.3% here, Rick.
Pick a name, come on.
$3
guys.
to 410.
What is this?
Anyway.
This tells you nothing.
I know.
Shut
But
up.
We can see though that looking at the price,
God, girl.
we topped out here around 99, downward sloping channel with a test to the downside. That must have been a rather scary day for the bulls as we dipped below our moving averages and our trend line. But we did manage to right the ship, but we topped out here once again. And now we can see that we had our big gap downward and it has deteriorated further. We did manage to find some support around our old low point on the year, that green line near about 55. But now we are struggling at a similar low point. We had another notable low from all the way back here, our red line near the late August time period. And that is about where we are stuck right now, 59.20 or so. Just above that as well, we have another low right here. This is why we keep track of these notable low points during rallies or high points during downtrends, etc. Just because they can come back into play further down the road. In this case, it happens to line up as well with our 21-day exponential moving average. So there's some additional emphasis on this level just below 64 because we have two different things lining up at the same point.
Okay, so again, with looking at some longer term trends here, I know the overall fintech space has not been super strong on the year, but at least trying to hang on to a week-to-date gain now and still off of lows, but dangerously close to 52-week lows actually as we speak, but still definitely 11% off lows. So what are we watching as far as some now key support and resistance?
So kind of like our last chart, we're seeing a breakout beyond this trend line here. RSI is also much more notable in terms of its bullish divergence. It was a little more complicated because we were in the oversold area, but RSI was trending upward and making higher lows as price was declining. Now we've crossed out of the oversold area and we're attempting to push above resistance. So if we do get an upside breakout, there could be some energy behind it here, but a point to really keep an eye on would be here. I mentioned it earlier, it's our low point and our pink line near about 64.
This is really paying off here.
21-day EMA. It's also our volume profile point of control near.
This big old hammer right here, double bottom at $3. Now they're at $5.10. $5.40. What caused that to do that? She's getting on my skin there.
Looking at a 57, 55 put vertical, so different price stock, different structure in terms of the width of the strikes. In this case, rather than it being $2.50 wide, it's only $2 wide and only collecting 50 cents. So you can make 50 bucks on a max loss of 150. So there's a 3-to-1 relationship there between that risk and the reward potential. 56.50 is the break even, which is below the current share price. But again, elevated implied volatility, a stock that has been under pressure. If you believe that it is overdone, this is a strategy that can benefit just simply from the selling stopping. Jenny, you don't need it to turn around.
Yeah, and I think that that's also a good point. Just again, more stabilization in some of these names, not necessarily ripping back with force, but that would obviously be welcomed by the bulls. But we'll leave it there for Chartmaster. Now, coming up next, it's time to talk Alphabet today with its largest acquisition ever. $32 billion price tag on Wiz. So we'll discuss more about them doubling down in the cybersecurity world and what that means for their portfolio. Right back. We'll be right back.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing.
Rob, so far this has been a good little scalp right here. It looked like we had a couple other good setups. $370 to $470 right now on this one. I didn't take it, but I mean I saw it. $370 to $510. Oh God, I should have jumped in that one too, if I could have.
Hey there, Jenny. Yes, and Google, obviously, or Google parent Alphabet, obviously trying to beef up its cybersecurity presence with this deal. As you said, Alphabet is planning to sign a definitive agreement to acquire Wiz for $32 billion in this all-cash deal. Now, Wiz is a cloud security startup company based here in New York. This is Alphabet's largest acquisition ever, as you said.
370 to
and it's the biggest
540.
by far. I mean, back in 2012, it purchased Motorola Mobility for $12.5 billion. So this $32 billion deal certainly surpasses that.
Let's not count
If it is actually approved, it would also be the biggest deal overall struck so far in 2025. Now, once closed, Wiz will join Google Cloud, combining Wiz's security platform with the Google Cloud infrastructure. In a blog post on Google's website, it said, this acquisition represents an investment by Google Cloud to accelerate two large and growing trends in the AI era: improved cloud security and the ability to use multiple clouds. Wiz's products, though, will still work on competitor platforms, according to Google, including Amazon Web Services, Microsoft Azure, and Oracle Cloud. If the deal sounds familiar, it's because an earlier deal between the two companies actually fell apart last year. Back in July, Wiz walked away from a $23 billion acquisition by Google. There were concerns about regulatory hurdles and also approvals taking too long. There was some disagreement over whether Wiz would become part of Alphabet's cloud computing business or remain a separate entity. And at the time, CNBC had reported actually that Wiz
Okay,
decided
get ready
it was going
again.
to go the IPO route. And
Okay, get ready. $380. Come on now. Blanket.
reported, but that was a slowdown from the 35% growth. So, something that kind of put pressure on Alphabet shares. From the analysts, I think it's important to note, analysts were bullish on Alphabet for many reasons heading into this deal. So I haven't seen any converts, anyone that was in the hold camp all of a sudden having a buy. I haven't seen any price target changes, but it does seem like the commentary has been very much around the fact that they do think that this will enhance the cloud offering. Truist kept a buy rating and a $220 price target. In a note, says that it significantly bolsters Google Cloud's competitive positioning in the market, saying Google is paying full price for the cybersecurity startup that is considered one of the fastest growing startups of all time. Expects the deal to run into heightened scrutiny from the U.S. antitrust regulator.
You think we might come down?
For the deal to close in 2026 is proof of that. Wedbush's Dan Ives has weighed in. He was out with a note earlier this morning saying, while the M&A environment has been extremely quiet to start the year, we believe that this acquisition will open the door to a massive wave of M&A across the tech landscape. Con gone at FTC is a huge positive for the tech world, especially within cybersecurity, as more cloud operators look to secure their cloud portfolios, while more cyber names look to capitalize on their all-in-one platform approaches by scooping up undervalued companies and improving the offering. So, expecting more deals, especially in cybersecurity. About the actual deal, he said for Google, this would be a shot across the bow at other big tech stalwarts, including Microsoft, as you said, Alex, and Amazon. And also said with its latest ARR metric of $500 million for Wiz, we could see Google building this into a $1 billion plus cybersecurity arm over the coming years. So analysts were already bullish, but so far it seems like the commentary is definitely upbeat about this deal in terms of what it can do for Google's cloud growth, and also just the one kind of headwind or the one obstacle here is just getting that regulatory approval, which will be a good barometer for potentially other tech deals in the pipeline. So TBD on that, but not giving a boost to Alphabet shares today, that's for sure.
No, it's
no,
not.
Unfortunately, Alphabet, I was watching the overall
That's because it's a cash deal, baby.
Making some of the steepest losses, not the worst performer of the session, but definitely not the best either. Down about now 2.8%. But great breakdown on this deal. I was also looking at the cybersecurity stocks to see if there was any ancillary movement. Not so much, but I think
Caroline, you did a good job
on what's going to be expensive. Can we get back to that 35% base of cloud growth? I'm not sure. I think it's such a high bar, but that's at least what the street definitely wants, so appreciate it. Caroline Woods, senior markets correspondent for the network. And now when we look at trading Alphabet here today, not having the best of days, and I just keep waiting for NVIDIA to do something also, although unfortunately it's looking like NVIDIA is moving to the downside a bit in real time. Alphabet is not steepening its losses by any means, but not really improving them either, as we're now down about 23% from highs.
Yeah, and it's really not that big of a deal when you compare it to the market cap of Alphabet, but the kind of snap reaction probably was a little shareholder dilution, and then you just throw tech weakness. I think that today looks worse.
It's trying to look handsome.
The reaction to the deal would probably have been on a calmer day in the market, just because you have some market weakness and volatility, particularly in big tech. But you're going to notice a theme with this example trade. Jenny, we're going to sell a put vertical below the market in the March 28th expiration. So 3 for 3, all similar example trades. This one, though, going a little bit further out of the money, collecting a little bit less. So 155, 150. It's $5 wide, collecting $1. So it's a 4-to-1 risk reward. You're risking 4 to make 1, which means that the probability of success is probably a little bit higher, just simply because, right?
I'm in a trade right now, and I don't need you. Let's have an end of the day run. What do you think, guys? It's now 12:35, 1:35 Eastern Time. We still have 2 hours and 25 minutes. Break it. 56-17-89. Come on, do it. White House, future with improved bilateral. Well, you know what the liberals are going to say about that? Collusion. Okay, here's 510. Ooh! Selling one contract here at 5:30. I'm proud of myself. Oh, yes. I did it. Out 5:30 and 5:10. Come on, Jimbo. Break it. 540. Break it. $5.90. Keep it going. Go, baby, go. We broke the VWAP, but not good enough yet. Here's news about the call. What is it? Give me 1,000. I should sell these right here. That helps me tremendously. But still, this price can drop real fast. Come on, Jensen Wong.
This event goes on, but you know, if you're watching and you're just a dollars and cents guy, that's really, it's a noisy last half hour. We've also got a ton of headlines out of the Kremlin as well as the White House regarding kind of the peace negotiations surrounding Ukraine. So just a noisy last 30 minutes for markets, kind of making it tough to decipher, what's pushing what each direction. But appreciate the update, what we got so far from Diane King Hall, the host of Morning Movers. We now want to shift gears dramatically here as we welcome in our next guest. That's Greg Martin, the co-founder and managing director of Rainmaker Securities. Kind of hidden between all of this was some pretty big news, just this week regarding Klarna and Walmart teaming up. Now, we kind of made the point yesterday, Greg, and thanks for joining us, that this might be more news for Klarna, more news for the Affirms of the world than just Walmart, but we want to get your thoughts.
Well, firstly, thank you for having me. I track the pre-IPO and IPO market very closely, and Klarna is a company that we've been covering for a long time, and they've grown significantly after being a very high market cap company in 2021 and dipping down to $7 billion. They're now back on filing with an IPO last week. And as you point out, they made a major announcement about essentially stealing the Walmart buy now, pay later business from Affirm. Which is always a nice big announcement right before you're about to go public. So that was a good way to instigate a roadshow.
Jim, you're clipping your nails. That's very unprofessional.
Their ability to
what are you doing?
Share in the U.S. Remember, Klarna is a Swedish fintech company that started in Europe, and so they're now growing their revenue base in the United States. I think their S1 reported about 39% of their revenue now is from the U.S., and obviously Walmart will be a big boon to that. And so it's more interesting for me as a bellwether of whether we're going to restart the IPO market again. We had a little bit of a slow start to 2025, and I'm hoping that Klarna, with some of these announcements, they also made a big announcement about how much AI is integrated in their customer support back office. And so I'm hoping that Klarna will actually start to see a positive path going forward for the IPO market.
So I totally agree,
That's
Greg.
gonna be
And
horrible
I think
with
that anytime I hear the words IPO or SPAC, I get excited because it's so few and far between. We get such major. It feels like companies that come to public markets in this current environment, and Klarna was one that we've been waiting for years now. So long awaited. I think that there'll be much then scrutiny tied to its public debut. But I'm curious the appetite and your thoughts on the appetite of so many companies going public in this current market environment. I mean, it's volatile. It's been choppy. Is this a market that defers the company away?
It's a great time to be doing it.
I mean, it's interesting because we all expected 2025 to sort of reopen the spigot for IPOs, and then we had, a very choppy market, as you point out. I mean, we're almost in correction territory on the S&P or on the Nasdaq, and the S&P is down 5%. Obviously, we have concerns about tariffs. There's, increasing recession worries, consumer sentiment's down. So I mean, there's lots of negative signals. The VIX is high. I like to see the VIX, closer to 15. It's up to 22. So there's a lot of volatility, which would tend not to be a good time for companies to go public, but yet we have this huge backlog. A company like Klarna would historically have been public a long time ago. It's of significant scale, and there's a lot of companies that are of the same type of scale that Klarna is. So I do believe that Klarna is such a good business that IPO investors are looking for growth, they're looking for healthy, they're looking for market leadership. So I do think Klarna will actually perform well, but the bar is very high. And I think it'll take up more Klarna-like companies to sort of stimulate demand in the IPO market, and I think that we won't have the same kind of reopening until we see more stability in the financial markets.
Greg, do you think that this will serve a bit as a weather vane for risk tolerance of some of these new public companies and what that demand is, given, I don't want to say it has this sort of can't miss vibe to it, but it's definitely seen as a far more mature, established, big company making its debut. If it kind of comes off as a bit of a flop, will that, make the market a little bit more tepid?
Yeah, certainly. If it comes across as a flop, which I don't expect, I think the IPO will be priced probably fairly conservatively. Bankers really want to set the tone that, if you take a risk on a new issuance, that there's going to be a strong aftermarket performance.
I can get out of these at 5:30.
Is kind of the discount. We started to see, lowering discounts
5:20
towards the end of last year in terms of
5:30
where you price the IPO to where it starts to trade. The next day or 30 days later, you want to give people who take a risk on an IPO, a little bit of a bump. So I expect Klarna will be somewhat conservatively priced, but as we pointed out, Klarna is a big scale. It's now profitable. It's growing nicely business. So I wouldn't consider it in the high risk category. I think it's just a question of valuation. It's a company that should be public, but people are going to watch it very closely. As I said, there's a huge backlog of companies, and they want to see strong aftermarket performance to stimulate demand for future IPO issuances.
Okay, and then to speak on some of Klarna's strength in operating in that buy now, pay later world, I am wondering your thoughts here on that signals the consumer's willingness to spend, yes, but also the consumer's willingness to spend on perhaps large ticket items for money that they don't have. Because I will admit, I'm all too well versed in the buy now, pay later world. I've used them all, Afterpay, Affirm, Klarna, etc. It doesn't necessarily mean that you have the funds to make these purchases, and does that give you any pause then on what that means for the U.S. consumer?
Yeah, I mean, and listen, we're at a time where people are concerned.
But you
about
have the funds, Jenny. You get paid a lot of
retail
money.
sales down a little bit. Some of the early reports, for the year, so that'll be a concern when
I
people
bet you're
are
a
buying
millionaire.
more. But then you could argue that, well, if they don't have the money to buy, but they still want to buy, they're going to actually start using buy now, pay later services even more. Of course, that has long-term implications in terms of rising credit and potential debt challenges the consumer might have, especially if we go into recession. So Klarna is an interesting company to watch from that perspective as well. And so while consumption may come down, consumption using buy now, pay later services may rise, which could benefit Klarna. But I think we have to be very careful about being overextended with leverage in this somewhat delicate economy that we're in.
Greg, you mentioned this backlog of companies that are kind of slated and penciled in maybe for this year. What other big names are you on the lookout for that may make public debuts in 2025?
Yeah, so I cover the tech sector, so very focused there. Obviously there was a firm called Hinge Health, which just filed their S1. Hinge Health is a digital physical therapy, based on a virtual physical therapy business that's actually had nice growth. Another company that we're watching closely is CoreWeave is really powering the AI generation, with NVIDIA chips and servers that power AI applications. They filed confidentially. We're expecting, that's a deca-billion company. Chime, another fintech company, is talking about going public shortly. Revolut, another European fintech company, is last year was a 45 billion valuation business. So I think those are like the 3 or 4 that we think could be coming in the next few quarters, maybe next few months. We always pay close attention to Stripe and Databricks, sort of huge businesses that seem to have unlimited capital in the private markets. You can throw SpaceX into that category as well.
Interesting.
I think those are much
Not for
farther
me,
off, and
but
they're going to wait for a much more buoyant market before they go public. But I think the companies I mentioned, I think, are the ones that will follow behind, which will hopefully be as successful as Klarna.
okay, if you're in this trade, I'd exit or think we're going to break out. One or the other right here, squeezing.
I think there was so much enthusiasm tied to like IPOs, less regulatory friendly.
We'll see if we break out here or not. But we're squeezing right now. We got a symmetrical flag. Breakout. Rob. It's a beautiful day today. I'm down at the bay, and I need to make it back. Okay, I'm back to 370. We're back at support, Rob. 200 SMA. 320, the 5640s. $56.43 black whores. I mean crows. You need to break up. Jim, you're a risk taker today, buddy. Such a pretty world today. Okay, we got 3 black crows. You're not doing what you're supposed to do here. I think it's not right. We went below support.
And low to mid-teens free cash flow and EPS growth over the next several years with less volatility and high consistency. So this is basically what they're saying as the services segment of Apple continues to grow and the market continues to grow. They keep putting out free cash flow from selling iPhones and returning that that free cash flow to investors with share buybacks and dividends. Nicole?
All right. Thank you, Kevin Hinks. Great to see you. Appreciate it. And we see Apple right now at 211.81. Let's take a look at the bigger picture. Mindy McIntosh is with us, founder, CEO.
I'm going to get out of this in here if it don't do nothing.
For being here. So, of course, everybody's in somewhat of a wait-and-see mode. You have, and Kevin made a good point about NVIDIA, because that can be a market mover. I mean, it can move the entire market.
She looks like a girl I used to go out with.
Major averages, and so goes NVIDIA, so goes the market. I don't know. But tomorrow's meeting with the Fed, also very important. In the meantime, we're trying to stay out of correction territory is what's happening here.
Absolutely. And so it's so imperative that sometimes folks freeze. So in our focus process with meeting with clients, this is a timeline that sometimes they want to freeze and they're wondering if they should do anything, but it's such an imperative and important time to take action. folks can actually look at some tax strategies and looking at gaining more market shares when we take a look at current timeline of what we're seeing, and also just make sure that we don't have too much in any one instrument at this current time. So allocation mixtures, buffers in the accounts are so important. And really, are we needing to adjust, even folks for us, their timeline to and through retirement? And how do we actually take advantage of these times that we see in the market, which isn't new by any means, but it is definitely creating uncertainty for folks. And it makes the consumer kind of want to freeze. And that uncertainty comes with them needing to make sure they have a well-written plan and to design that and continue to review it over and over again to keep adjusting.
So tax strategies is something you mentioned. Is anybody looking to buy on dips or anything like that? Maybe if you love tech, do you love it better when it's down 10, 20, 30%?
Absolutely. So they've been looking at that. How can they actually buy when that's been down, especially in your tax-free instrument? That way, when the market actually corrects and we get back into positive territories, we're going to see them getting all that market gain tax-free and being able to utilize that growth in the future to ride that back up and being able to utilize that when it's down. So this is a great time. Not necessarily do we often do either Roth conversions a lot with our retirees, more near the end of the year.
Will
But
Robinson.
when we take a look at timelines that we're currently in right now, we can actually do
What's
so
that?
and still utilize it here during the first quarter.
Danger, Will Robinson.
Using it for
So far, but
conversion, being able to buy more shares.
I got a contract at $3.20 and $2.
Today's current tax rate, especially if the current tax law and those rates do sunset and go back up. So they can utilize that in multiple avenues. And also with doing that, some folks are still looking to downgrade or change homes. We met with our clients earlier today, and they're actually going to utilize some of the funds in their IRA for later in the year to actually purchase a new home. And they're just utilizing a segment for that purchase they're paying taxes on a portion of their assets that aren't subject to that current market volatility, so they don't have to worry about liquidating at the wrong time.
Understood. So, you said you can identify some buying opportunities, can look for some tax strategies, but you should really rebalance the portfolio. Don't freeze it up, don't sell everything. And the rebalancing of the portfolio can mean what? I mean, is there something you would maybe...
I'm even at 260. I want 260. Blanket. Prove them wrong. I sound like Elvis there for a second. Thank you very much.
Those allocation mixtures and making sure, hey, you know what, we should mitigate some more market exposure, especially for our clients that are more in or nearing retirement.
Count to
So now
three
we
and
might only
trade
have
with me, but
30%
count to
that's going to
four
have
to make
more of
much
that
more.
market share
That's
component,
right.
and really buffering and giving some more safety in the other avenues.
And break the
especially
9,
because creating some income
and you'll be
generated
mine.
avenues is really important to our clients, and
Fascinating.
we can really capitalize on the interest rate environment to be able to make sure that they're hedging inflation and really
Girl, quit working me worry. Though. I'm praying. If it goes to 160, I'll stop out. Hmm. Oh, 319 is Dow. Yeah, nothing looks good. Okay.
Directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Got a little wedge. Squeeze right here on the wedge.
trending names every day. I'm Tom White.
1, 2, 3.
Market, ready for you, ready to go at 12 p.m.
1, 2, 3. Sweet spot.
Network.
Blick it.
Welcome back to the watch list.
Yeah, there's garbage ahead of us now.
Where we analyze unusual options trades that we're seeing throughout the day. We welcome in Tom White, host of Fast Market, here on Schwab Network. You have a few names that you found some trades on. Any big picture market thought today?
Yeah, weakness, kind of reverting back to the sell side that we've had over the past few weeks here. Not surprising.
Well, got away with a couple good trades over here.
Right there, tariff headlines. That's
Not this one here, though, so far.
Beginning of April, when these reciprocal tariffs come on board, we'll get some more clarity on that. But
Still got to make up about $1,200.
Like that waning consumer confidence and consumer sentiment at this point, Nicole, it doesn't make, for positive vibes out there on Wall Street. But if you take a look at a 2-year chart of the S&P 500, we've had a pretty good run. So maybe a little
that's
bit
kind
of
of old,
consolidation,
man.
this pullback that we're seeing, about 9% in the S&P 500.
I mean, yeah, we're still way up there, but why are you saying that now, or have you said it before when I was saying it? Now we're at kind of a support level, buddy.
Tech specifically, which has been beaten down. Intel, though, I see a headline saying it's on a 5-day hot streak. Still below the highs, last month's highs, but hey, a hot streak's not bad, and it is up 1.5% today. Tell me about the trade you found.
Who would have ever thought that you could say Intel is one of the biggest winners out there in the markets in 2025? The stock's up 30%, up about 10% this month.
It's hogwash.
This is all based on optimism, right? With the new CEO, Lip Bhutan, that came in from Cadence Design Systems. And they gave some clarity on what he's going to start doing. This came out yesterday, where they're going to have to refocus on AI. They'll probably make some staff cuts also to shore up their balance sheet here a little bit. But they laid out, kind of rough edge plans of what he has to do, returning the company, the alien tech giant trajectory, restructuring, staff cuts, slow-moving, bloated middle management levels. So, yeah, he went over some of the things that they're going to focus on after he took over Pat Gelsinger, who, they brought him in for the same purpose, but kind of made some missteps there with the foundry business and everything else. And then you have to throw on the impact of tariffs. So what's that going to have on the chip space? Trump
right now is not the best time to be in this trade.
25% tariffs in the chip space. So we're still waiting on some clarity there. But this has had a nice bounce back here on that optimism. We saw some unusual option activity in here today, out in the January of 2025 option series, Nicole. So 304 days to expiration. So somebody's setting up for maybe longer term gains, right? Because it's probably going to be a little bit choppy here as the new CEO gets to work. Traded about 5,000 of the 35 strike calls out in January of 2026. Paid an average debit of about $2.38. So the
it's a chop
fest.
Where
this trader starts to profit is above 37.
Little trench, TRNCH.
Basically 10 months or so. That's about 42% above the current share price. So you're going to need some more gains like we've seen so far.
Right now we're at the pivot point area at the 200. We got to break that to get it back up here to resistance. We still got we're about halfway there. We broke the 9 to 21 in that trend line, which was at triple bottom where I got in at. So we're squeezing again, but I don't know which way it wants to go. Got a little wall right there. If we break it, I'll be winning again. There we go! And 50 SMA is the only thing left. And that could be a hard resistance. Get that grading pen out, Magnificent. I do believe I'm even. Yes. Yabba dabba doo, Mike. You didn't think I was going to get away with it, did you? I'm up a whole $30. Now we're talking 70. Okay, here's your other. This is called a two-headed snake. Well, we could call it a. Let's do this. Resistance right there. Or straight across. Right there. Actually, it's a little bit higher. Rob. Bingo. $56.16.88. Jim, I can't read your charts. They're too dirty. Okay, it's an exit idea here. We got 3 white soldiers into a head and shoulders. $3.20. Bam. Give it to me. Right now, you need to go ahead and consider getting out of it. Ain't much of a profit. I did it. I did. I'm out. Oh, yeah. Are you flirting with my Michelle, Johnny? Okay, head and shoulders. Oh, gosh. Well, I'm gradually getting there. It's got another 1,100 to go. 1,200, 1,000, I mean. No, 1,100. Before I'm green. I really sucked this morning.
webcasts, articles, courses, and more. All crafted just for traders.
Okay, I'm going to take a little break and walk away for a second.
Content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades and full hours of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. Lots of selling on Wall Street. All the sectors are in the red today. And it's been really a month straight of selling. David Nelson, Chief Strategist at Bell Point Asset Management, is with us. What do you make of it? Are you worried? Are you seeing opportunities? What's your market commentary this week?
Well, you have to take what the market gives you, and it's giving you a very, very different playbook. Look, when the administration tells you they aren't measuring success or failure by returns in the stock market, it makes investors nervous. And it's very clear that this administration wants to change how the economy functions. Markets hate that uncertainty, and so we've seen a pretty significant sell-off, for the last several weeks.
Yeah, and the language that I'm hearing is that it's not necessarily a recession that we're worried about, but just the growth scare, that we're not necessarily going to see the major growth that we've seen. But I think some people have been somewhat expecting a pullback or correction after 2 years of 20% plus gains, right?
I don't think the fact that we have a correction is all that surprising, but what is a little bit surprising is the velocity. It's almost like COVID level velocity. Pretty frightening for some investors. You're forced to change your playbook. You're forced to shorten up your stops. And you have to look at what the administration's telling you. They want reciprocity on tariffs. They mean to get that, and that's going to be disruptive. So you're going to have to adjust to that.
Look at the 10-year Treasury at 427. You see 4 weeks of selling for the S&P. What levels are you watching now? I've been noting that a lot of the big houses have targets that are 6,200, 6,400 for the year end. So it seems like long term, folks seem more positive. But what key levels are important now, here in the near term, for you on the S&P?
I think the level we hit Thursday was a pretty important one. From a valuation perspective, that's exactly where we bottomed, 20 times blended earnings, where you're looking 6 months forward, 6 months backwards. We hit those levels a couple of times last year. So that's clearly a key level that at least some value players are starting to look at stocks. I noticed on that day, on Thursday, NVIDIA was actually only down 16 cents. So obviously some investors were looking to buy some value right there.
And it's interesting. So you'll watch, because on Thursday we took out Tuesday's lows, right? I mean, that was the big story there. And in the meantime, there are folks who are looking at some of the momentum names that have been beaten down, whether it's Microsoft or Tesla or Apple. Do you look to those? Do you check those out?
I think there was so much, and people sell their winners first. And when you have these very, very significant down days, they look at something that's maybe up 20, 30, in some cases 100% or more, that's where they're going to hit the exit. Until that selling stops, and you can really say that we're beyond that, that's when those names become safe again. So maybe you'll catch the bottom on those, but it is like catching a falling knife right now.
All right. Now, you have some particular stock picks that you think could work, including the parent of this building, this iconic building I'm in, ICE, right? Intercontinental Exchange. Tell me why you think that could be a good play for a portfolio.
I think ICE works in this environment because the possibility of a recession, we have to admit that it's at least risen. Some are putting the probability at maybe 30 or 40%. That would be a negative for financials, but a company like ICE, they're an exchange. They have exchanges all over the world. And they don't care whether the economy is doing well. They don't even care whether the markets are going up or down. All they care about is volume. And the one thing that you'll get in a declining market is a lot of volume. And they're likely to make a lot of money in that regard. You look at a 10, 15-year chart of ICE against the S&P 500, it blows it away. This is a growth stock.
And you noted how they're using AI. Let's talk about Netflix. That's another name that you like, right?
You know, everybody's looked at the streaming stocks, and you can either own a company that is trying to become the next Netflix, or you can buy Netflix. The war's over. Netflix won. They added 19 million subscribers in their last quarter. That puts them over 300 million worldwide and counting. And the added caveat that they've now added advertising, those margins on the bottom line, they're going to start to expand. So it's almost like a flywheel right now. They're growing faster than their peers. So they can spend more on content. That, of course, increases engagement, and the cycle repeats itself. This is a no-brainer. This is one you have to own.
Yeah. And then you're turning towards Europe. A lot of folks love what they've been seeing in Europe. Europe has come alive for investors. I think you're looking at Germany in particular when you look at ETFs. Tell me a little bit about the European story and why it belongs in a portfolio and how to best do that.
You know, sometimes it's a zero-sum game, and if capital is leaving the United States, some of it is going to find its way overseas, certainly Europe. And a lot of this goes to the administration and President Trump. He is forcing them to start to pay up for their defense. That's reinvigorated the animal spirits there. Some of the defense stocks are up over 100% since election day. Look at an ETF like EWG, which is Germany. That's broken out to an 18-year high. That's notable. That's something investors should look at, and I think that's a security that is now turned for the long term. So if capital is leaving the United States, follow the capital. Go to where it's going, and this is one of the destinations.
Understood. I mean, tomorrow is Fed Day. Are you looking or listening for anything in particular tomorrow?
I think the commentary is going to be kind of interesting. I think what investors will be looking for is if he mentions tariffs at all, and if that is going to change their playbook, because inflation certainly is not at the levels that they'd be more comfortable cutting right now. The probability of a cut is starting to increase, but until it gets down to 2% on inflation, I think it's a tough road for them.
Yeah. I mean, there's even talk of hikes at some point. You know, most folks surveyed and using the tools are saying 2 cuts this year. But there are still people in a hike camp because they are worried about inflation. Are you worried about inflation?
To some degree, but if the economy is slowing and we're starting to see some evidence of that, the probabilities are picking up. I think that's going to weigh on inflation. Also, as markets go down, that wealth effect goes away. That also helps inflation as well.
Are you watching NVIDIA today at all? I mean, we have a big conference going on, a lot of the tech names, and we're hearing from Jensen Huang and the deal they have with General Motors and how the need for, you know, all of this advanced tools that they're providing is way more than we ever expected. In the meantime, NVIDIA is down about 2.5% today. I mean, at what point does NVIDIA, which is down, let's say, just 20%, right, off its high, so I'll say 16% in 1 month because that's exact. You know, when does NVIDIA become attractive to pick that up?
It's already a value stock. It's starting to trade close to a market multiple. I think the concern is around discounting. How much are they discounting?
Rob, we got another flag.
Discounting. There's some evidence that Amazon's been talking about it. It's going to be very interesting to see what the commentary is coming out of this conference and this keynote speech today.
Yeah, understood. Anything else you're watching for near term other than NVIDIA, the Fed, anything else on your radar in the next
See if it breaks out
4
here.
or 6 weeks?
You know, I'm watching those levels. I'd like us to see us hold that low. But I also have to watch what the earnings estimates are doing. Right now they're around $275, the forward estimate. Right now, if that starts to get cut, then I've got to bring the market target down.
That's true. David Nelson, good to see you, Chief Strategist, Bell Point Asset Management. Thank you, David. Nice to see you. Thank you. Coming up, Andrew Brenner is standing by because he will give us a preview of tomorrow's FOMC rate decision. Obviously, we have our Fed Chair, Jay Powell, who will speak at the press conference. What he in particular will be listening for. We'll be right back.
It's do or die right here, Robbie. There's your flag, your resistance. We could come down another time. See that flag? Can you see the flag? Doo-doo. Platform's moving a little slow right now. We got a doji. Boom, baby. Double top. That's a doji right there, a green doji. What's that mean? It means they're making a decisive moment. There's no buyers or sellers or equal. Now you got a double top. You know what that means. Let's go, Mikey. Mikey will trade anything.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights.
Look at the tape. Tape looks green.
Available anytime, anywhere, on any device for free.
We are not at right at the VWAP.
On the Schwab Network, I'm Oliver Rennick.
We are at the VWAP. We are at the VWAP. Take it back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 4
This could be it.
technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute
Are we not
news
at the
and
VWAP? Oh,
Trade brilliantly with Schwab.
that was a trick sentence. I don't appreciate that.
Welcome back to the Watch List. I'm Nicole Petalides. We welcome in Andrew Brenner. Thank goodness he's here, head of international fixed income securities at Nav Alliance Securities, because tomorrow is the very important, they all seem to be very important, but the very important Fed meeting, because we're going to be waiting to hear the language and such. How are you feeling today about this meeting?
I think the meeting's going to be tough on the markets. I think the Fed's going to be a lot more hawkish than the market's anticipating.
Exactly.
I think the Fed is looking at backward hard data like employment and CPI, and you know, I think they're a little scared about the Michigan inflation upticks.
Oh, you're full of crap. Inflation numbers were down, you dumbass.
Be looking forward at bad sentiment and how things are slowing down and the negative Atlanta GDP. And the market wants the Fed to be somewhat dovish or at least neutral. And I think the market's going to be very surprised, and I think it's going to be a problem.
Who is this guy? Bring him back on here tomorrow.
That was a negative GDP.
Let him eat his words.
You still have uncertainty of tariffs. You have consumer, I'm playing devil's advocate, sentiment and confidence coming down. You know, it's still, I mean, I was just reading through the Bank of America monthly survey. I mean, that confidence was dipping, and while people planned some home improvement and family planning, the confidence was coming down. So people aren't necessarily feeling so great, and rates are still relatively high.
I'm feeling great, baby.
When you look at what's going on between the tariffs,
Especially after last
we have
night.
more and more uncertainty, maybe a little bit less so today, but still there. You have the immigration issue going to detract a lot of people from working, and you have the government cuts and everything else. You have a lot of uncertainty out there. The Fed is backward looking. They always have been. That's a mistake. I really do believe that Powell is forward looking, but when you have the likes of Beth Hammack of the Cleveland Fed, who's extremely hawkish,
Oh, that's in the video.
as well as a couple of the others, Mosalam of St. Louis and Kansas City Fed Schmidt. I think there are probably 2 or 3 others. I think Powell tries to get some kind of even keel, and that means that I think he's going to be somewhat hawkish in tomorrow's press conference, and that's what I'm looking for. And the market will react to that. The question is, how will the markets react? In stock market terminology, it's probably going to be negative. I mean, I'm a little bit surprised the stock market turned around on a dime today. It's been so ugly since early this morning. The NASDAQ, S&P, what have you. I mean, the only things I see going on is Israel bombed the Hamas, and that sent the price of oil up, and not that much. You had the Russian U.S. talks today, which I think are you know, really non-committal right now.
So that's March
I don't really
18th.
see why the market turned around, but I think equities are going to be under trouble. And the question is, what happens to bonds?
56.40s.
Viewed as backward-looking and missing it. I think the long end of the curve outperforms tomorrow.
And if this breaks the VWAP, I'm jumping in on.
415. And you know that really doesn't.
This is
make
the
sense,
SPY.
But nonetheless, that could very well happen.
So I got a chart here
Inversion of the
that
yield
has the
curve
VWAP,
conversations, or
and
what?
we broke out of the
Still about
flag.
25 to 30 basis points away.
So
I don't
now
think
we're
gonna have
bullish.
Those conversations, but we're certainly going to have a flattening. You get down to 10 or 15. So you have 2 years at 4%. You could have 10 years at 410 to 415. So yeah,
Right about
you can
now.
see that, but I don't think you're going to see an inversion. At the end of,
Yeah, go ahead. At the end of the day.
At the end of the day, I think the Fed will wake up. I think you're going to have a couple of bad employment numbers before the May meeting, and I think the Fed's going to be looking at the possibility of easing rates at the May meeting, and will end up doing at least the 3 that I've been predicting, and maybe even a 4th one as far as cuts go.
Ooh, I mean, there are even people who might hope for a hike at some point, but so
They're wrong.
3 or 4 cuts, and that would be in 25 and 26.
25.
Oh wow! All right.
Right
so,
now, I'm predicting. The market's
and he'll
predicting.
still be hawkish tomorrow, and then still do the cuts.
Right, but I think their tone will change between now and the May meeting. I just looked at the.
I saw an ant.
I just looked at the Duke Commission, which is a whole bunch of old Fed governors.
Yeah.
And they think the employment number is gonna soar to 4.5% unemployment. That's a number that will get the Fed scared. And I think the Fed will do it. I think right now they'll do June, September, and December, but those numbers will change.
So, and the mantra, the way the Fed speaks will change as we get into summer, spring, summer.
Right now it's a
May,
dead
you
end.
said, right? So Memorial
Absolutely.
Day and that
We'll
time.
have the tariff stuff behind us.
Okay.
And you know, hopefully we'll have the tariff stuff behind us. And it seems a little calmer yesterday with the head of tariffs, this guy Greer, as well as Besant this morning talking, you know, kind of walking back the severity of tariffs.
I think he's dead.
And I think it's going to be a little bit better, and I think stocks will catch a bid, but not in the next 24 hours. Remember, the Fed meetings are the focal point of volatility. And it usually takes about 18 hours from the time Powell finishes at 3:30 till the London morning, till you really get a good idea of where the markets are going to go, and I think it's going to be very volatile.
The makeup of the Federal Open Market Committee.
This guy can really cheer a man up.
You mentioned different players, and some that are more hawkish and some that are more dovish. Does it seem somewhat fair or balanced at this point, the way it's made up?
That's really a political question. I would say that it seems okay. I mean, you have 13 districts. You have 5 or 6 full-time governors. There isn't an empty seat right now. I think it's well represented.
All right, so that's good.
That's a political question.
Is there anything within the language tomorrow that you'll listen for? Sometimes it could be the omission or the addition of even a
I want 170, please.
I think you're gonna have to wait and see what the Fed says about their outlook, and I think the
There we
job
go.
loss are actually going to be something to watch.
Okay.
Because the Fed has been
Like
predicting
Rob said, go in small.
think they're
I went 5 contracts.
on the number of cuts, and the question is, will it still round out to 2, or will it be down to 1? And that's one thing I'll be looking at, and that again will be the hawkishness. But look, Powell by nature is a dove, but he also is a negotiator, and he needs to get all 19 people to agree, or get some kind of a agreement.
Thank you, Daltner.
Powell's going to end up being very hawkish tomorrow, and
Dalton.
again, the market's not prepared for that.
So you did say that the market, right, is not prepared for that. Could be a negative reaction if that's exactly what we get. You noted the choppiness and the
We're at
sell-off that
205.
we've seen here today, which has accelerated right throughout the day. I know we're off the lows, but still, it's not a great day on Wall Street when you're down 265 points and every single sector's in the red. What happens to the market
So what's
in the next
this?
few months? I mean, It's not the
Well, that's the
worries about
200 and the
recession, it's just the
63
worries
bunched
about
up.
no growth, or what is it that's really the overhang that's stopping this market, and that we're making lower lows instead of making new highs?
Now, this is an exit
I've said this
idea.
before with you. I've said it now for a multiple number of years. No recession, just won't happen. Not even close.
Yeah.
But what's happening is you had all the averages do very well over the last couple of years. So you're going to have a little bit give and take. And I do believe that you'll find
I'm up $50 a contract, and I got
I
5.
thought you might have found it 2 days ago.
So
And,
200
you rallied
bucks.
on Friday and again yesterday.
Right.
Maybe not, maybe so. I mean, Mike Wilson of Morgan Stanley at 5,500 in the
250.
S&P. He kind of got to 5,504. You had Harnett of Bank of America, someone you just quoted, talk about 5,300. But I do think it's going to be good.
VWAP
I'll tell you
will
something
cause
else
some
that's a problem, if I have
resistance.
any time left. And that is the muni market's in a problem right now. The muni market has been getting crushed for the last couple of weeks. People just can't get stuff done. People can't get
It's
stuff
very
issued.
unprofessional.
And even in the U.S. corporate market, even though we've had 6 issuers yesterday for a little over 11 billion, there were still 4 that sat out because there was just too much volatility and too much wider spreads. And you have some issues today, but when I looked at the numbers yesterday, they had to give 6 basis of concession, and things are slowing down. Once you run into a problem where you can't issue paper, both in the munis and the treasuries, and munis and the corporates, I think you're starting to have a problem. And that problem is not severe yet, but it is something we're watching.
Let's talk about that next time too.
Sounds good.
I want to hear more about that, because if they're not able to issue the paper for munis, corporates, and have this volatility, I want to hear more about that next time too. Let's see if it's still an issue, if it's still a problem, right? Thank you for obviously a nice preview of tomorrow. Now we're set up for what to look for. Andrew Brenner, thanks so much, of Nataline Securities. Thank you. Still ahead, we bring in our panel to talk all about Tesla. Obviously, we've seen some recent weakness, but what's next for this car company? Is it tech company or battery company? I mean, what is it? Let's talk about
It's a
it.
space company, baby. They saved 2 astronauts. They saved astronauts. Our government can't even do that. Gonna break it now. Higher lows.
What's up, Carl Nation? It's your #1 broker with the best.
We're having technical difficulties.
From Schwab. Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Ooh!
You're an experienced investor or just getting started. Charles Schwab offers
Say what? Yabba dabba do, Mike. I hope you were listening. You might learn something. That was rude, Jim. That was very rude of you. What'd you think about that, polished muffin? $3.20, baby. Experiencing technical difficulties. $3.40. I'd take some profit. But this could be a leading indicator. Now, this is called an ascending triangle. You have higher lows and an equilibrium on this one here. Oh man, 350. Can we get more? What do you got there, Rob? We agreed to an immediate ceasefire on all emergency and infrastructure. Well, that's because his infrastructure got hit. Liberals ain't gonna like that. They like death. Here we go. 440. I mean, you're up quite a bit. I would make a business decision like I just did. Now, I've had 5 contracts at 170, and I sold 4 of them at 420. I'm going to let the other one ride. That's how you make business decisions. Were you a little nervous there, Mike? I didn't hear yabba dabba doo. Thank you very much.
Thank you very much. That's really nice. Thank you.
That's, oh man. I'm making back my money. I got 600 more to go. That's one of the biggest losses I've had in probably 3 or 4 years today on one trade. So this here is called Red Doji. I mean, I got out before the Doji, but if you notice this candle right here, that's got the wick on the top. And I was up. I mean, God, I'm up like $300 a contract. I might be even on the day, now that I think about it. Pretty close to it. Now we're retesting the VWAP. So if this thing wants to, we have to hold the VWAP. What was resistance now becomes support. So you could add on back in here, but I'm not going to. I don't want to get over. We're right here right now. Yeah, I'm about even. Oh. It says I am even. I call that a win. I know my biggest problem today, I jumped in way too soon before the pow-pow. Yeah, I just made 1,000 on that last one. I got a little bit more to go. I had all my trades up. One more trade ought to do it. I'm still holding one more contract for 170. Blanket. Come on. Better get stopped out if this goes to 170.
Friday's bounce and yesterday's bounce, the breath yesterday, the recovery Friday, and then also the steady grind dating back to Tuesday lows, the NASDAQ. So this has been helping vol dissipate, but today we're seeing the volatility kick back in. So that's kind of the simplest way to put today, is that we just had a period of kind of a reset, a slowdown of selling, and now this is the resumption of that general trend since the highs. But we haven't cut through new lows, so let's not get too carried away with it. Volatility picking up by a point in the VIX is not terribly crazy. Seems pretty reasonable. 21. We're now only about 5 points above average, 4.5. So it's not the worst thing. We obviously had this stair step up for VIX, and the thing we wanted to avoid was the stair step turning into a rocket ship. That's what you didn't want, because there's basically only kind of two ways this resolves itself. You either get VIX stair-stepping and then it blasts off, or you get it stair-stepping back down, reflecting some normalization of markets, and that's what we're getting. So the chop back and forth is normal, is a good way to think about it. It's been a two-way trade as opposed to a one-way trade since basically last Tuesday for the NASDAQ. However, there are a few other things that are a little bit problematic that need to be resolved sooner than later.
Looking for one more good trade.
The Mag 7 ETF, MAGS. You are really needing to hold on to this $46. There's a lot of volume right here at this level. We've been here before a few times in this group. This is an area that you don't want to see break. We have this period of, in the right side of the chart, consolidation basically happening over the last 6 days. This is very much on the low end of that range from the last 5 days, but we haven't fallen through it with conviction. And so the volume profile you see on the right side of the chart is acting like somewhat of glue right now to keep things from getting even worse. But that is about all that can be said from a positive standpoint. I'm also watching Bitcoin with cryptos continually heavy, soft, weak. BTC below 82. Pretty good tell that risk appetite still is just not in this market. Animal spirits are not in this market. What's been happening is a little bit of recovery and a little bit of stabilization. That's about it. Gold continues to move. Looks like it's going to continue breaking out. The thing broke out. The chart looks great. Not sure what else there is to say. Gold can be the sign of a tiny little bit of risk appetite building, which is what I pointed to last week before stocks found some support. But if it carries through and it breaks out and it really starts running, maybe it's an expression of investors running out of ideas on what else to do.
Yep, there it goes.
I'm not sure it's the latter right now. Bonds are firm. Investors seem fine buying bonds ahead of the Fed. So that's tomorrow, though. Let's talk some more about tech and NVIDIA with the stock at 117 right now. Jenny Horn, not the worst day here, but for all the talk about GTC, this is not exactly uplifting for markets right now.
No, this feels actually very reminiscent of some of their most recent earnings moves, in the sense of that we haven't really done anything. I mean, I was watching this name tick by tick when we first got the keynote from Jensen Huang at noon here Central Time, and things did start to somewhat steepen as far as the pressure on the session, but we've been shopping around. I mean, this exact level at which we're currently trading for most of today. And so, I mean, a 2% move to the downside, yeah, it's not what you wanted if you were one of those believers in the AI hype, but I wouldn't say that any of the announcements have been disappointing by any means.
Okay, what's he saying?
Personal AI computers coming. I've heard now 6G being floated. I completely discredit that because we don't even have the infrastructure yet for 5G, but it's at least...
That's a little bit harsh.
Hey, we don't have the entirety of the infrastructure for 5G, but that also is like, I think has more to do with like the infrastructure of our country. But nonetheless, also unveiled the Blackwell Ultra AI chip and did say that the Quantum X chip will be coming now in the second half of 2026. And did say that the time for autonomous vehicles has arrived and announced this partnership tapping GM. So there's things to like, sure. I will say that the telecom news regarding 6G is maybe one of the most buzzworthy, as we actually have seen some movement in the telecom stocks as a result. But I think this tells you a lot of reconfirmation of what we'd already thought. I also think that with the AI reasoning and the quantum offerings, these are still long ways away. I mean, we're talking mid of 2026. Well, the Vera Rubin chip is to be released now in the second half of 2026. Again, these are all positive developments. Street doesn't like unknowns, but nothing fairly shocking as far as the keynote, which it usually isn't. It usually doesn't necessarily say, hey, there's this massive surprise to markets that all of these many tech and NVIDIA enthusiasts have well understood at this point.
Okay, so this is, nothing surprising, nothing
Whole
right
big
now.
nothing burger.
Because one of the rumors that they were going to talk about, like the humanoid stuff that Tesla's doing, to your point about maybe the personal AI device. I mean, this just kind of feels like they're still doing very cool stuff, which is fine.
It is fine, and you know, maybe we get more development and more color on some of these headlines over the next coming days. Again, this isn't like the entirety of the event just in Jensen Huang's keynote, but it was, I think, that being read as such. It was being maybe too enthusiastic of a catalyst just the beginning of this event. But hey, a lot of times GTC, I feel like from watching this event is we'll get a disappointing reaction. It's like a buy the rumor, sell the news type event as the keynote, but then as the event progresses, we see some surprising winners. Like we see some new product unveils from, say, your Intels. I'm really into Intel right now, apparently, but also those names could still present and move the needle. It doesn't have to just be all tied to what happened today at around noon here Central Time.
Okay. All right. Well, I don't think this is going to do it in terms of a market in need of a catalyst. I'm not sure that's it. Sounds like nothing exciting to me.
No, it really didn't. And as far as like the rest of tech then is concerned, which was also beaten up into the event, there's not really anything to hide out in either. I know that a lot of these names have just seen continued chop to the downside with a little momentum lifting them. And I mean, you can't say that we're down in all of tech because of GTC, because we were already down into this print. But I do think that a lot of that to be said is like this didn't offer any upside. This wasn't the catalyst that we were hoping for when looking at the rest of the tech in which it trades with NVIDIA.
Yeah, I don't get it, because he even said, I saw there was like a little clip, and he said, everybody thinks they know what I'm going to talk about, and they don't know. I don't know. I mean, I get that...
maybe they did know.
The first personal computer, made with this type of power is kind of interesting, but like that's playing into a market that's been pretty dead for a while. Hasn't really shown much life, fits and starts, but not a lot of people buying personal devices right now. So, I don't see how this is going to really change the conversation beyond what we already knew, which is that they're producing really powerful machinery. That to me is like, this was kind of a nothing issue, to be honest.
No, and I even thought maybe like...
Unless I'm missing something.
No.
Maybe they still got something in the tank or something?
I thought, maybe, because as you see, even like the keynote like has moved on. I mean, there's still lots of headlines to be read. It's very much in the weeds. It's not like these big tech themes where they're saying, hey, we can do this at X of the cost, or we can do this at X of the speed. They haven't been able to...
They're giving like numbers, like updates on how fast things are going.
Yeah, like these are very...
For the average person, we already know, like, really, really fast.
Yeah.
Really
everything
fast.
is improving. The next iteration of its GPUs are faster or more efficient than the next. I thought that we'd be maybe more enthusiastic about Vera Rubin getting confirmation on that in the second half of 2026, but maybe we need things here, we need them now, because 2026, we are light years away from that, it feels like, in this market. So, I mean, very little to enthuse. This was, I think, the biggest risk. This was such a big catalyst for NVIDIA. I mean, was it?
Yeah, not right now. Not so far.
Especially because, to your point, I mean, you talk about personal computing and their offering with GM, both areas of the semiconductor that have been just weak for the last year or so.
True. Okay. Well, let's see.
I'm getting too far out of the money now.
So, markets, I don't know why Mark would take any cues from it. Thanks, Jenny. Okay. I mean, we kind of knew this was going to be the case, right? Didn't we know this is...
for days.
Yeah, it's like, I don't know, we were hoping, holding out hope for there was going to be some grand unveil of something we didn't already know. It seems like things are going well there, but it's just more of the same. Axel Merck's with us this afternoon, President and Chief Investment Officer of Merck Investments. If NVIDIA is not our hero, Axel, where do we look for U.S. stocks right now? Can we rotate away from big tech and survive to tell the story?
Well, I thought I'm in the wrong movie listening to you. I think I'm probably your biggest contrarian indicator. Just as a reference, at the end of last year, we managed 1.6 billion. As of Friday, we managed over 2 billion. And you can guess in which market we're active in.
I know you like gold.
We don't just like it. We put our words where our mouth is. We invest in gold and gold miners. And obviously, they have been benefiting from this. So when you have all this misery on your face, I said, what are you talking about? So we, and I think the words you used is they're running out of things to do while they buy gold. No, I think what people are missing is that Mr. Trump is re-engineering the plumbing of the global financial system, imposing balanced trade on the world. And in doing so, he may be disrupting some substantial financial flows, making it more difficult to finance deficits. And I think the buyers of gold are taking note of that, and it's one of the reasons. And obviously, the poor performance of the market is another, but the markets are performing poorly is because there's some structural adjustments taking place, and that adjustment process is going to be painful. I would happen to argue that given the leverage we have in the financial system, that some folks are playing with fire in Washington. But then again, hey, I'm investing in gold and gold miners, so I worry less than you do about the markets right now.
Well, I guess it's my job to try and figure out what's going on. Hey, Axel, the gold versus stock charts pretty much go in the same direction back to 22. They went down together in 22. Gold not as much. The stocks got hit with inflation. 23, 24, both good years for gold and stocks together. It seems like the last 2 weeks is more the exception. How can you be certain that things you're describing that have happened in a 2-week period are massive structural shifts compared to that 2.5-year period where stocks and gold are just kind of doing the same thing?
Well, there's nothing certain, of course. And the thing that gold in the long run has a zero correlation to equities. As you point out, sometimes it's positive, sometimes it's not correlated, sometimes it's negative. The one thing that gold historically is more correlated towards is real interest rates. If in the long run your cash is holding up value, why hold gold? That correlation, in my analysis, broke down when the dollar started being weaponized. And we've seen that, and that was before Trump already, with sanctions on Ukraine. I do think that correlation to equities has not been all that as strong as you're arguing here right now. I think the dollar is very noteworthy, and here you have this huge diversion where in the U.S. we have a tightening fiscal policy. Remember, balancing trade suggests we should balance the deficit, something that Trump managed in his address to Congress, not that it's likely to happen. But in contrast, in Europe, and that's when we talk about the dollar here, Germany is planning to spend over €1 trillion, that country alone. The EU over 800 billion, much of that on rearmament, presumably much of it spent inefficiently because they just don't have the procurement channels to spend this much. So I would argue, yes, there are some profound changes happening underneath. And obviously, the proof will be in the pudding, but it's also in the context of stocks being expensive. And so gold, by the way, also benefits from a slowing economy. And with all the uncertainty out there, at least temporarily, there's less of an investment. Maybe that's all going to clear up. I look at investments more in terms of risk. And by all means, there's a risk that gold will come down again. I happen to be more concerned about the risk that as we rejig the financial system, that we'll have some dislocations.
Okay. What does it mean for gold as an investment? How do you know? Here's the catch with gold: is how do you know when to take profit? Like when do you know? How do you do that?
Well, gold is one of these things. You're always glad, not always. Usually glad when you've had it with hindsight, and never quite know why should you hold it for the future. Some people trade technicals on gold. That's possible because there are very few fundamentals. I happen to be a long-term investor. I'm on record of being an insider buying and gold mining. I hold substantial amounts. I will sell my gold when politicians in Washington start getting their act together and addressing fiscal deficits in earnest, when we'll have sustainable deficits. And with that, I don't mean some Doge things where we're cutting some spending, but when we fix entitlements, when politicians in Washington make sense, then I will sell my gold. But I don't think there's a risk of that happening anytime soon.
Right,
Snake
so
breakout,
then
pull
what's the
back.
plan? What do we do if
We can
don't
pull
sell
back
gold?
to
Just accumulate,
55.50 eventually.
Hold. Coiners make a
Tomorrow.
very similar argument about their bits and their coins. Should we not listen to them?
Well, gold veers towards the places where there's wealth. The folks who need, and gold is kind of the reserve asset. So people
I'm
say,
about
well,
ready
you
to
have
sell
gold,
this
it's not a
last one.
productive asset. And the same thing is, well, you have some cash in your wallet as well, even if it's not productive.
Just too far.
And as a result,
5
gold
notches out of the
tends to
money.
go to places that can afford it. If you need your money, then you're going to sell your gold. And so gold is shows you where there is wealth. And so if you can afford the risk of holding gold, just like the risk of holding anything else, then you're a holder, right? And you sell it, aside from what I said, you sell it when you need it. It's kind of, you have it in your back pocket. Now, obviously, if you need the money tomorrow, you shouldn't put it at risk, even as something that some people consider a safe haven, because it fluctuates with the value of gold, of the dollar. But if you don't need the money, you can stuff it in the S&P 500, of course. But if you believe that the S&P maybe have had too much of a good run, you'll have to think about diversification.
Back to even.
And gold historically is a diversifier that works better than
At that
many others.
170.
With that, I'm not giving any investment advice and can't tell you when it's going to peak or not.
Mm.
I happen to think that we've just recently started to have some inflows into the gold mining space. We are $1,000 higher in gold, and gold miners continue to be around the same level, despite the significant run they had recently where they were
Magnificent. You can give me a D.
To me, that doesn't smell like a peak, but
I deserve a D minus to a D today. I don't want to listen to your crap about gold. If you think I deserve better, I'll take it. I'll still be red if I don't take one more trade. Yeah. I'll take it. At least an A&F. I don't think I ever made an F in high school. Nor was I an A student either. I think I took a B plus in bachelor's living. And a C minus in English. And about a B in math. What's the yellow line? That there's the 200 EMA. The 200 EMA. There we go. Well, yeah, this ain't accumulating shit, so I'm gonna get out of it. My last that one. Well, 195. 190. I'll take it. I'm getting tired. 29 minutes left in the market. No, you don't need to deliver them. I don't want them. Hello, Ricky. Woo! Knife. Jimmy glad he got out. Okay, get ready, Rob. 200 here. The 56.25s. No. Yeah. Right about now. Right at 240. Brian Mulberry.
Transaction, but 32 billion is double the last valuation we got when Wiz was doing their last capital for round last summer.
Wiz.
So is it really worth that 100% premium in such a short period of time? The good news is Wiz will still stand alone and continue to operate. It was already projected to earn, roughly $1 billion in revenue. That's up from 700 million last year. So the revenue growth
56.25s at 240.
Justify the valuation, but it is a pretty big hit all at once when you're looking at what they paid for.
There it goes.
Okay.
So thinking
magnificent.
about
My
the
grade just went up a point.
That this is a very secular, reliable trend. Do you think it complicates any of the bull cases for any of the other
It's all
security
fake
cloud
news.
companies?
It's phony stuff.
Or is this just
It didn't
kind of a
happen.
point of a validation that this is a pretty rock solid business line right now?
240 to 340.
In the economy?
Probably more
Nothing
than
for
that,
you.
Oliver, to be honest, because the market is growing. Like
Now
I
I'm
said, it's a
green.
$300 billion
5 contracts,
market.
500
Last year,
bucks.
It's probably going to be 500 to 600 billion in a couple
That
of
does
years
not
from
compute.
now. The only way that the cloud service really
What was that?
continues that rate of growth is to have
That does
security
not
on the
compute.
data front. And so this, I think, becomes a very durable business model for multiple companies.
Now
to
they're
be
at $4
involved. There's not
bucks.
necessarily going to be one that emerges as a
420.
monopoly in this space. There's going to be competition. There's different lines of businesses. Azure is in 60 different countries with a complete menu option
That's right.
of different services that you could choose from, all of which are going to require different levels of backup and data security depending on the type of clients that you're working with. And so it seems like a very competitive marketplace that also includes a pretty
Such a
solid amount
pretty
of growth
world
when you're looking
today.
at other areas of the market on a relative basis.
What do you think is going to be required, Brian, to get this market back in shape? You study a lot of stocks, macro market too. Tell me what you're looking for. How rough is it? Because, I mean, this type of stuff could position them for a good trajectory. But we got to get out of whatever we're in right now.
Yeah, absolutely. Alphabet, is just kind of one of these examples.
Right there off
where
that
really
hammer.
On a one-year basis, it's only up 9%. And when you look back at what happened in the calendar year 24
1,
and
2,
23,
3, 4,
the
5.
NASDAQ was up over 80%. And you're like, how can this be? Well, our biggest concern coming into 2025 was just simply the amount of concentration that the Magnificent Seven had in the market at large, right? They accounted for roughly 3/4 of the earnings growth in the S&P 500. Their market cap was over 1/3 of the S&P 500. It was just a lot of momentum to hang on so few stocks. And so that got us to a valuation of 22.5 times forward earnings on the S&P 500. When the long-term average is only 17 to 18, there has to be a reversion to the mean at some point. And that feels like really where we are is just simply a bit of a rotation, some of that momentum coming down. Capital is getting rebalanced because of the relative risk from this point going forward. And I think we're seeing a rebalancing trade, people coming back into more sensible valuations. But it doesn't mean that these Mag 7 companies are bad or that they're going to go away. It just is a little bit more of a competitive environment in terms of what am I getting per unit of risk when I make that investment in this market today. So I think we're seeing a lot of investors and traders rationalize that moment of risk right now.
Okay. Well said. Thanks, Brian. Good argument.
Thank you.
Always nice to get the bull case for a big stock. Brian Mulberry on the $32 billion Wiz acquisition by Alphabet. Let's look at the technicals and what's ahead of us for the next 30 minutes. Kevin Green's going to jump on. And the Dow is only 0.5% off. We've had worse days, but this is certainly not a good one.
So this last trade of the day, I ain't doing it no more. See the 200 SMA? Then we had these little touches right here off that trend line. Where's that body of that candle? So I lined it up to that body. But at 1, 2, 3, 4, 5 hits, and then that's called a hammer. Oh, I see. You had to outdo me, didn't you, Mike?
Affirmative.
How come you didn't bring that line down to the bottom of that body of that candle there instead? Why'd you go to the wick? Because that was the next touch?
Affirmative.
Yeah. See, this is Mike's chart right here on the SPX. He went from that wick to that wick. And I would have went from that body to that body. So I support it. No can do. I'm done. Man, what turned out to be, I told you I'd make it back. But I would have never made back that trade because it's at zero right now.
S&P's been sitting basically near the same spot for much of the session. Let's see what's possible here into the close with Kevin Green. Quite a tight range since basically 9 a.m. KG. Only about 20 points in either direction, if that.
Yeah, a lot of compression in the market here, and obviously we saw that
Auto-generated from the first lowest pivot.
And this morning, we actually kind of looked at a couple of levels, especially the 5,600 level to the downside, and for the most part, that's been actually holding up here. You have seen some buyers kind of stepping in, even if we kind of break it by 3 or 4
You didn't draw it in.
Buyers are trying to at least defend that line, but we also have this 200 period moving average on the 15-minute chart to be mindful of as well. It's been a key area of resistance that we've seen early on this week that we broke above, and now we broke below here today. So what we want to do is actually defend that. It's sitting around 56.9 here, and so if we can get some buyers to step in, break higher, and really kind of get above 56.30, I think that would be, for the most part, a win for the bulls, because it did look like it was getting pretty ugly there to start the trading session. But you are right. We have a consolidation pattern taking place. Now, what is going to happen next? Do we see a breakout to the upside and try to retest some of these near-term highs, 5,700 level, or do we actually get a formal breakdown? And if we get a breakdown, we have some some gaps to the downside to be able to fill. That's when you start talking about the 55.20 level here. But going into the close, Oliver, what I'm kind of focusing on is not only that compression that you kind of talked about, but if you kind of look at since pretty much 10:30, 11:30 or so, we have had higher lows. You got to kind of squint to see that. And for the most part, we did just make a higher high just over the last hour and a half or so. So you're looking at a compression. What you want to be able to do is break above 56.20. If we're able to do so, you may get another 15 to 18 points to the upside. It would be around 56.40. To the downside, 5600. I'm not seeing anything on just the intraday flows over the last hour that suggests a major breakdown below 5600. Anything's possible, but I just haven't seen that. I've seen 5600 being targeted and 5615s on the put side that have hit the tape over the last hour or so. So compression for now. Can we have a breakout? I think that actually could be the case. And when I say a breakout, another 15 points, 20 points to the upside. And I think it's kind of signified
today
by not only just the charts that we've gone over, and I'll kick it back over to you before we hit another one here, but we're trying to hold up for now.
I don't think so.
You made that if we can at least hang on here, then it's like some degree of a mild success.
Yes,
like
I agree that.
a day, but just preventing further downside at this point. That seems like just the
Anthony sounds smarter than
since
Mr. Green.
Is to try and hold levels, try not to break down, try not to give back room that we've gained. So at least
we need to hold this support level, in my opinion.
Your next chart.
Yeah, and
you could scalp it here.
We want to get above around 5630 because you don't want to get trapped into that resistance zone that we were pretty much dealing with for 3 sessions last week. That's a really key area. The reason why I would get a little bit more optimistic just about the close, not about the overall market, if you're looking at a longer time frame. The E-mini S&P 500 futures, I always look at this chart. This is a 1-day, 15-minute chart, and 2 really key indicators that I have on there is the 20-period moving average as well as the 200-period moving average. Usually, if we're going into the close and we're able to try to break above that 20-period moving average, and you can kind of see this, we were basically utilizing it as resistance for the most part all day. We started seeing a break above. We had a look above and failed. But we've been staying above that 20-period moving average on the 15 for the E-mini S&P 500. That's actually a really decent sign going into the close here. The opposite actually happened yesterday, and you and I were actually talking about this on the network as well as offline. The opposite happened, where the 20-period moving average was actually acting as an area of resistance going into the close, and then we failed to the downside. So what do you want to see here? A defending of the 20-period moving average, us being above that level, and then what could be your area of resistance just going into the close here is around 56.88 for the E-mini S&P futures. Is trading at around 56.69 right now. So you're talking about another, close to 15, 20 points to the upside here. That's where it kind of translates to the S&P 500 getting to that 56.40 level as your top end of resistance. So this is kind of the chart setup that says, hey, going into the close, this actually might be, for the most part, favorable, since I'm not seeing a lot of underlying pressure below that 5,600 level for now.
Okay. Nice to get a little two-way trade going, get a little chop. At least bears are having to work for it right now. That's some.
I don't see how you got that line straight.
We were talking in video, obviously a lot coming into this. Stocks down 3%. That doesn't inspire me too much. If that was the event for the day, boy, not much for the market.
Yeah, well, it's tough, right? I mean, like, you could have a buy the rumor, sell the news when it comes to NVIDIA. I think it's had a really decent run since that 105 level. Yeah, you're seeing it come off today, but it's not one of the major pressure points to the downside when you're looking at the S&P 500 as a whole. And actually, if you kind of look at it, the breadth has actually expanded for the S&P 500, or even for the NYSE advanced declining indicators. It's gotten better. Now, you don't want to see that kind of chart for it coming. Yeah, we don't want to lose that into the close, because that will probably translate to the S&P 500 moving to the downside a little bit more. But for the most part, right, NVIDIA, it's just that was a hard trade coming into today. It's kind of like going into an Apple event. We already knew 95% of the stuff that they were going to talk about today. What are you going to do to really wow us? And there wasn't really anything that was too surprising there. I think we're holding up for now. Had a nice little run, 3% to the upside since the lows. You have a 1% pullback here. You're pretty much at half candle back of that Friday candle. That's okay. Technically, it's perfectly fine. You don't want to kind of break below 5,600 though. That's where you get a little bit more concerned that we had to have a little bit more of a further breakdown and start to test that 5,500 level.
Okay, understood. So a little bit of slight improvement here as far as the breadth goes. That's hopeful then for the next 20 minutes. Volume's also still pretty light. Are we waiting for tomorrow? Wednesday, Thursday going to be our heavy volume days maybe?
Yeah, you would hope so. Tomorrow should be a heavy volume day. Just from the announcement alone, it'll drive a lot of activity, not only on the equity front, but also on the options front. Equities, it continues to be weak. And actually, we've had declining volume since the 10th. So you're looking at the declining volume since Monday of last week, every single day. If you're looking at the aggregate composite volume for the S&P 500, it's gone lower and lower. Yesterday, which was a really good day, saw lower volume than the day before. And then today, even though we have a 1% down day, it's not really showing that the bears are really coming into force and really hitting a lot of these stocks aggressively from a volume standpoint. And that can happen. If you have low liquidity, low volume, it doesn't take much to move price to the upside or downside. And so this is one of those situations where even if we have a pullback of a 1% move, doesn't mean that the bears really knocked the bulls down by any stretch of the imagination.
Yeah, bulls are making bears fight for it. Bears are winning right now, obviously on the day, but there's a fight, there's life still underneath the surface. Thanks, KG. Appreciate the context. It's helpful for us to put today into perspective. We'll continue the gold chat when we come back. One thing's looking pretty good, and it is gold. That's consistent. Bulls definitely in control with another 1% plus bounce. Question is if silver's going to break out the same. It's moving like it's going to, up 1%, real close.
Gold getting way up there. It's hard to believe, but it is.
Trading at Schwab is powered.
They've been all over gold since Trump.
Futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Accelerate your market knowledge
and shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Held that trend line again.
Stocks under some pressure, but gold's looking good. Let's continue the chat with Alan Himmer joining us, precious metals alternative money specialist at goldsilver.com. Alan, it feels like the title and the website say it all.
Yeah, thanks for having me, Oliver.
We heard a bull case from Axel Merck earlier, super bullish gold. One of the questions we were talking about is whether or not it's recession dependent. Is gold doing so well here because people are worried about the economy, or is it just doing well because they want to put something safe in their portfolio?
Yeah, I think this move in gold is a long time coming. Anyone who's been watching the markets knows that gold has really been on a bull run for 10 years, and we haven't really been discussing a recession for 10 years. What's been happening is central banks have been net buyers of gold. So that's sort of the tailwind that's moving the gold market up steadily over time. And the reason it's sort of becoming more explosive lately is a combination of a lot of things, including the talk of a recession, possibly even a deliberately induced recession, which is very interesting. But also tariff talks, inflation, geopolitical uncertainty, and of course, all these tariffs are basically sort of like an economic war, a trade war, basically, instead of a hot war. So we have a lot of things. It's like the perfect storm right now. Everything's good for gold.
Okay. I mean, it's looking pretty good.
Oh, man, I'm sore.
How about silver? Real close to one-year highs. Are we going to get the same? And what's your expectation if that breaks out?
Yeah, silver does tend to lag a little bit, and of course it's down significantly off its all-time highs of roughly $50, still down about 33% there. So we would need a 50% move in silver to catch up to its all-time highs, and I do think it's going to happen eventually, probably pretty soon, because once silver takes out $34, $35 an ounce, it's smooth sailing back up to 50, and then it'll hit some resistance there. So I do think a move in silver is happening pretty soon. We're entering the 5th year of a structural deficit in silver, so demand for silver has exceeded supply. And if you know basic economics, anytime demand exceeds
I need to
supply
get a silver
for a long period of
necklace.
time, that price has to come up to establish equilibrium. So I do expect the price of silver to break out here very soon.
You've got a chart showing gold stockpiles. Where is this coming from? And the word on the street, I guess, is that it's central bank buying. Is that the case?
Yeah, exactly. So if you look at the stockpiles in the COMEX, we saw a massive increase lately, which parallels the massive increase that we had during the COVID crisis. Ordinarily, there's only about 10 million ounces of gold on the COMEX, which isn't that much, but it's enough to handle all the physical settlement. So during the COVID era, it shot up to almost 40 million. It almost quadrupled in just the span of a few months, and that was crisis levels of activity. It has since come down because of a lot of physical taking from investors, and now it's going back up. So it would seem like somebody at the COMEX knows that a lot of people are going to be standing for physical delivery in the very near future. That could be the Federal Reserve, that could be the U.S. Treasury, that could be any major players, a combination of big investors. But this doesn't happen for no reason. It's because somebody knows that a lot of physical gold is going to be demanded very, very soon. So it could be a number of things.
All right. Think that's priced into the price right now for gold?
Not yet, but it factors into the price a little bit day by day, right? And that's why we're seeing it move up so much, and that's why we're going to continue to see it move up so much, because not every investor is watching the markets every minute of every day. Some people don't find out about this for a month or a few months down the road, and that's when people scramble to buy gold once they remember, oh yeah, it's limited in quantity, right? Sometimes it trades like there's no supply cap because there's no limit to how much paper gold you can create on these exchanges. And then once people realize that, oh yeah, it's actually limited, and if I stand for physical delivery, I might not get it, that's when they scramble to buy gold any way they
So
can.
there's really going to be a shortage like that? You think there's a gold shortage right now?
Well,
everybody knows that there's limited gold, right? Isn't that the whole point of it?
Yeah,
Not like I wake
exactly.
up and like, oh, I forgot there's limited gold, right? We always know that. That should always be priced in. But if there's like some kind of buying scenario where it's locked up somewhere, there's too much, you know, Fort Knox or whatever, I don't know. Is that like what's happening?
Well, it's not clear exactly what's in Fort Knox or not. We might get an audit, and it could be the case that the rumors surrounding an audit are driving all kinds of investors to take physical. Who knows? That's speculation.
Well,
but
yeah, well, it's got to be something.
yeah, it's got to be something. So yeah, there's only so much gold out there, and when people remember that it's a scarce, precious resource, they gobble it up for sure.
Okay. Precious, I guess, in the eye of the beholder. Our gold bug from the top of the show is not a Bitcoin guy, but I think I saw a book back there suggest maybe you are. Does all this apply to the coins too?
Well, I'm definitely a Bitcoiner. I believe that Bitcoin is digital gold, but only Bitcoin. Don't confuse Bitcoin with the rest of the crypto space. That's all just a new iteration of fiat, as far as I'm concerned. So
There it
I'm a
is.
fan of
Wow,
Bitcoin, gold,
thought I lost
silver,
it.
and not much else.
Hey, how come not the other coins? If whenever Bitcoin goes up, they go up more. It's just like a higher beta trade. If I like Bitcoin, why don't I go for? I mean, look at Doge. Doge has been doing amazing over the last decade or whatever. That's like a literal joke.
If you're a day trader, go for it.
That.
I've tried in all
The
these
silver.
other coins. You know, a few years
I
ago.
got that
I've been
in
Bitcoin
Mexico.
10 years. I used to trade some of the altcoins, and I lost my shirt in a lot of those. I lost 99.9% on a few different altcoins. I figured out that over the long term, Bitcoin is going to outperform all of them. It's something special. It's digital gold. It's decentralized. All the other ones are centrally managed. They
I
could
broke
do
my
better, just like
necklace.
companies could
It
do
used to
better.
be on my
Stocks could
necklace.
outperform gold,
Okay.
but
So
there's
I
a
got
lot
to buy
of
a
risk
silver
associated with it.
necklace.
Now, so one last point, so we got to jump in a minute, but if it's the same, it's just a digital version, how come Bitcoin's down 30 grand from the highs in the period while gold's been going berserk to the upside? That looks like they're the exact opposite thing.
Yeah, they don't move in tandem on any given day. A lot of people haven't figured out what Bitcoin is. A lot of people think that it's worthless, it's a bubble, it has no value whatsoever. So it's still a very young asset. So investors are definitely figuring it out, and there's a whole lot of volatility, and a lot of day traders love that.
Now, this could be a
volatility. You
scalp,
don't get that in gold because gold is
but
a
I ain't
mature
gonna do
asset.
it.
So everyone knows what gold is. It's just sometimes they forget about it every now and then. And then they
Isn't the
remember.
maturity of gold what makes it gold and different from Bitcoin? To your point, if you think Bitcoin's early life stage, then they're one and the same, but you see what gold gives its credit is its age, and Bitcoin doesn't have that. That means they're not the same thing.
It's definitely one component, but it's not the only component. So my bet on Bitcoin, for example, is that other people will start to figure out that Bitcoin is harder money than
56.20s
gold.
at
So
a
it's harder
buck.
to inflate the supply by 1%, let's say, in the case of Bitcoin, than it is for gold. So my bet on Bitcoin is that people will eventually figure this out, and I'm trying to front run that trade. Whereas for gold, I know people
Count
will
me
figure
out.
it out.
I'm
They've
done.
just over allocated to the stock market, let's say, and then they're going to rotate their capital back into gold when they get scared.
So where does the marginal dollar go then? You like Bitcoin more off the lows, or you like gold on the momentum trade? Incremental dollar, which one do you pick?
There's
Well,
been
today,
135
Bitcoin.
right there.
Well, it's cheap. It's on sale.
But if you
Gold
could
is
have got
at its all-time
out,
high, and Bitcoin's on
these
sale,
things are
so
too
I picked Bitcoin.
volatile.
All right, appreciate it, Alan. Thanks for the chat.
Thanks, Oliver.
I ain't messing with it.
Miller, Precious Metals Alternative Money Specialist at goldsilver.com.
I'll
They might
just
need
be
that
happy with what
gold
happened, what I did.
coins, or Bitcoin rather.
I was miserable
Zach
this morning.
Saunders and Kathy Jones joining me for the panel here as we
Down like 2,500 bucks.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between
They're at
accounts is
150,
easy.
170
Cash money
now.
to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more.
Could have got out now.
With Schwab Bank
That's for
Investor
sure.
Checking, the checking account built for investors.
Easily 170. Where do I put that? I'm
The
gonna
biggest
lose
headlines to
that.
start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. We've got 8 minutes until the bell. Joining us for the panel, Liz Ann Saunders, Chief Investment Strategist, and Kathy Jones, Chief Fixed Income Strategist, taking us into a big picture conversation at the end of the day. Great to see you, ladies. We've got obviously a big day ahead of us tomorrow. Let's talk some stocks first, Liz Ann. This just constant beatdown of tech, the MAGS group kind of holding on by a thread again.
Again, you obviously had a bit of a two-day rally there where I think there's a lot of algo-driven and quant-based buying that kicks in some cases because of oversold conditions or technicals. Obviously, Thursday was when the S&P went into its 10% correction mode. That might have triggered some buying too, but as we're seeing today, that is short-lived, and I think I would still lean into the more defensive part of the trade and factors like low vol and higher dividend yield.
Higher dividends been doing pretty well this year. Low vol, I guess, depends on kind of which one you look at, but also pretty solid, equal weight even, just kind of an expression of this. It just seems like as long as you're not in that concentrated 2024 portfolio, I mean, you're doing okay, right, Lizanne?
Yeah, and there are plenty of opportunities. Over the past trailing one-year basis, only about 25% of the S&P's constituents have outperformed the index itself. But over the past month, that's 55%. So opportunities do still exist. It's a different version of better breadth. I just think you have to be a little pickier from a factor characteristic perspective.
Before we talk bonds real quick, because I am eager to talk some bonds, I'm kind of getting this like philosophical itch in my brain though, Lizanne. One more equity point, which is when everyone other than the indexers are basically outperforming because the index was so concentrated, it's most concentrated ever, and now you're seeing the unconcentrated portfolios work, does that threaten any of the passive mindset at all that's been so powerful the past decade?
It might threaten the passive mindset. I'm not sure it threatens passive, but keep in mind that within the ETF space, it's active ETFs that have seen the biggest inflows. So I think that there is an itch out there to utilize sort of a better stock pickers market and to take advantage of some of this broadening out and opportunities found elsewhere other than in the concentrated Mag 7 or similar type group.
Okay. All right, let's talk some bonds, Kathy. We're chopping around, basically. It feels like bonds want to make a move here as we've been spending 10 days kind of going sideways in the 10-year, or do we just get stuck here?
Well, you're right. We've been stuck here for a while, Oliver, and I think it's this push-pull on policy, right? So you've got the tariff policy, which on the one hand, could build inflation pressures, certainly builds price pressures, at least one-time price pressures, and if we continue to see them rolled out over time, that becomes more of a case of real inflation. So that's negative for bonds, but then tariff policy, immigration policy, et cetera, is bad for growth. And so the bond market, I think, wants to send yields lower in the long end because I think the growth is more important than the potential price increases, which will cure themselves if we have slower demand. But we need to get there. We need to get more clarity. And of course, we have the Fed meeting tomorrow. So the market's waiting for that to get a signal from Powell.
What do you think, Kathy, in terms of the tone he wants to strike here versus the last time? Is there an opportunity to get incrementally softer or more dovish?
I think there is an opportunity, and Powell has tended to be rather dovish in his press conferences, despite what might happen in the meeting and the statement and all that. He tends to kind of soften the blow. So our expectation is no change in policy. Dot plot will probably still show 2 rate cuts by the end of the year. I'll be curious about the dispersion of those dots because we have some very high and some very low. So it'll be interesting to see if we get some incremental sort of tightening of that expectation or not. And then they might announce that they're suspending quantitative tightening. That's more of a technical adjustment due to the debt ceiling, but that might happen as well. So we're really going to wait for the tone and see how Powell kind of says the Fed wants to navigate this policy conundrum.
Kathy, do you think we should be sticking with last year's playbook where when they began their cut regime, yields started going higher? Should we assume that relationship holds if they start cutting again?
You know, I doubt it. Now, inflation expectations are up, and that makes it a problem for the Fed to cut because they might cut and fuel higher expectations. But I think more likely is they'll wait until the second half of the year or until we get some really perhaps poor unemployment data. And at that point, they'd have a reason to cut. And I think at that point, the market would go with them.
Okay. Lizanne, how does all that sound for equities? Can Powell be a pillar of support when we need one right now?
Possibly, but I think really what's key with say the 10-year yield still being to some degree in the driver's seat for equities, but shorter term we've moved back to a positive correlation between yields and stocks because the move down recently in yields was driven by the move down in growth, as Kathy talked about, that all else equal is negative for equities. I think if yields either up or down were starting to key more off of inflation, then I think you could revert back to a relationship where we could have higher bond yields. If it's about higher growth, that's good for equities. If it's about higher inflation, bad for equities. So I think it's the what behind the moves, not just the moves themselves.
Okay, well, at least so far, moves themselves connecting in a more reliable way, more traditional way. Thank you very much, guys. Lizanne Saunders, Kathy Jones, excellent conversation, stocks and bonds. There you go, big picture, perfectly done. Coming up, we got the bell. We'll talk some more about what we heard from Jensen Huang. We'll discuss Tesla's unrelenting sell-off, down another 5% to 225, $15 above the low from about 8 days ago, but it is a rough chart.
Yay. Well, I told you I wasn't going to give up today, and I didn't. But I had to have money, to make it back. I took too many risks this morning on that first trade. Admit it. I was guilty. And it just kept going down. I just kept buying more. It popped a little bit, but it just seemed like it lasted forever. And then when I did get a little bounce, when I bought it down there at 35 cents, 30 cents, I sold it at 50 and 60 and still had a big old deficit. So it didn't work out like most of them do, I guess is what I'm trying to say. And then I was too far out of the money by the time it was said and done. When you're in that same day option, you get too far out of the money, it's hard to recover. I've only seen it happen a couple of times. So we got to see if that guy was right, if he's dovish tomorrow or not. So I'm going to get out of here. I've had enough of this. I mean, I wore myself out today. I finally seen a spot in the market where it was good scalping, and I scalped 3 or 4 trades there. And that really helped out a lot. And I didn't have to put a lot of equity in it, so... Definitely jumped in it too soon this morning. Everybody have a good day, and we'll see you tomorrow. No. I voted no. Oh. Who's the one that said yes? You're fired. I pulled something off that Trump pulled off. I did the greatest comeback in history. Did you hear me, Magnificent? I pulled off one of the greatest comebacks in American history. What's all this here? Yes, yep, definitely. Come on. It's 3-1 odds. There's not even a middle ground there. Oh, God. Okay, who did the definitely, Mike? No, I don't know who voted. Magnificent does. How dare you? It's all right. Better make sure you look on both sides of the street when you cross it today. We'll catch you later, YouTubers. Let's have a better day tomorrow. Sorry about that bad trade first thing. Dalton, I know you really like how I trade, but as you can tell, I'm not made of gold. That was the first bad one I've had in a long time. Like that. We'll catch you tomorrow.